And maybe this is too inside baseball, Simeon, but like we all, or I think on this call at least, we have an idea of how much prep from management teams goes into the earnings call and how they've all signed off on the messaging. And do you as an analyst, when you know that some event has happened, that now they have to go quote unquote off script, do you get any sense of like how this team might operate is their day-to-day business based on how you feel like they adjusted to, as you said, the question that you feel like you have to ask given some kind of current event that may have come up around the call?
All right. Good morning, everyone. Obviously, futures are down. I need to go grab my coffee. I'll be right back. All right. So obviously job numbers were bad. They were expecting 55K. We came in with a loss of 92,000. So politicians and the media are going to be all over that, scaring the crap out of people. I'll be looking to buy some things this morning, actually, like Nvidia. Okay. Futures are starting to turn, starting to bottom. Futures are starting to bottom. Okay, we got about 9 minutes to go. Okay. Palantir is at the bottom of yesterday's range. Palantir. Looking for a base up here near the 200 day. Yeah, the 50 day to 200 day is just overhead. So some consolidation today wouldn't be surprising. It is Friday, March the 6th. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. We got about 7 minutes to go for the opening bell. Okay, looking at extreme fear on the fear greed index. Below 6,800, we are risk off.
investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coach.
All right. So big layoffs. That'll be something to deal with. See how the markets react after about 10 o'clock or so.
We're tracking market movers, earnings reactions, and what traders are watching next. Stream Schwab Network live at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly with Schwab.
Welcome back to Opening Bell. Let's count down to the start of trading. Joining me now is Sam Vadas, of course, host for the Schwab Network. And so, Sam, we know international markets have been particularly active this week. And so, I mean, as we've said, the news has not stopped. We were saying it was like a funnel of news last Friday, I believe. It's only continued. So what news has really stuck out to you over the past week or so?
Just a lot of volatility. I mean, particularly out in Asia, Jenny. Take a look at the South Korean Kospi that has been on a roller coaster, to say the least. I mean, obviously, with the worst day in history, then stage of rebound. Some of that has, of course, been around some of the leverage selling that we saw earlier in the week. But part of it's also been just on those higher energy prices. A lot of concerns around some of those APAC economies, particularly that very dependent on those oil and LNG imports as well, places like Korea and also Japan. Obviously, China's a little bit more insulated from that. We've also had a very big meeting of Parliament starting this week in China. That is a very big risk event for a lot of investors in that part of the world. So we're keeping tabs on that as well. But what I would point out in the Friday session, now that those Asian traders have packed up for the weekend, probably feeling pretty relieved at this point, given obviously the wild ride that we've been out there this week, is the resilience in some of these Asian markets in the overnight session. I mean, particularly when you look at the
Okay. Market's starting to turn.
Of course, the high greenback as well. We are looking at 99.40 right now on the DXY. That has been pressuring some of those other countries as well, as far as some of the flows into those Asian economies and markets too. So we did see some surprising, as I said, resilience in places like Hong Kong overnight. Thank you to JD and Alibaba.
Got 2 minutes to go. 2 minutes to go.
The back of some of their earnings, looking ahead to Baba's earnings as well. We did, of course, see some resilience, as I mentioned, in places like Japan and Korea as well. We did see the Indian markets actually tumbling. That's been a really big story for us, obviously, because you've had the Trump administration now issuing, or at least granting, the Indian economy to a limited 30-day waiver to snap up that sanctioned Russian oil, which has been stranded out at sea, because India's obviously been trying to find alternatives and is very reliant on that Iranian oil as well. But obviously that coming off the back of Trump saying that they had promised to wean themselves off the Russian oil in exchange for lower tariffs. So that's been an interesting story that we've been tracking as well. European session still in action right now.
3 minutes. 3 minutes.
There, but we are seeing some pretty heavy selling pressure out there right now, as very much moving in sync with these futures right now.
Futures are starting to come off the low.
Pretty much the DAX, the FTSE, the CAC, the Stock 600 all down around 1.5% right now, as we are digesting these headlines with, of course, the Trump Truth Social poster today saying no deal with Iran except for unconditional surrender. Obviously, we've got this FT report that came out during the European session as well about Qatar warning that this perhaps could force the Gulf to stop these exports now within days. And obviously, then we got that data out this morning, which is when we saw those futures pulling back even further. And of course, yields coming down across the board as well. Not looking good on the payrolls or the unemployment as well. So I think, a lot of that is factoring into the European session as we get set up with these futures pointing lower this morning here for the US session, Jenny.
Okay, and we also got reports that SoftBank is seeking now a $40 billion bridge loan to fund an open AI investment. What does this signal for the overall private markets and valuation concerns right now?
Good question. Yeah, I mean, what it signals as far as SoftBank is concerned, I mean, particularly with respect to Masayoshi-san, is that he continues to very much
We are open.
as far as the global AI boom.
All right, I'll give it a few minutes for the markets to settle down. We're going to be taking profits off the table first few minutes of the trading day.
$40 billion is to mostly help finance that investment in OpenAI. And this actually could be the largest ever borrowing denominated solely in dollars.
Extreme low ticker alert minus 800.
By Bloomberg, there are 4 lenders here that are underwriting the facility, including JP Morgan. So they are saying that the talks are ongoing with the banks. This could be subject to change, but I think, broadly speaking, as I mentioned, it really just highlights SoftBank's ambitions here to play a huge role. I mean, Masayoshi-san has made big bets on a number of companies over the years, particularly in technology, and so we just have to really see how this one plays out, Jenny. So we are going to be watching these ADRs this morning, currently tumbling about 1.5% as we get up and running here, and we did see it lower in the Japanese session as well.
All right, thank you so much, Sam. Great summation there. Now it's time for the opening bell.
Okay. Watching for a bounce.
All right, so we are seeing markets still definitely lower out of the open here. We are right across the gates, actually looking pretty strong into these futures products, but to break down at least.
Okay, we're starting to get a bounce.
We are now seeing the S&P is down about 1.2%, NASDAQ down about 1.4%, pretty in step with actually the Dow, which is also down about 1.4%, and the Russell. Well, we have pared back some of our losses expected pre-market. We are still down about 2% firmly this morning. Now, as we do check in on some of these other movers, we are seeing gold futures still firmly higher, and crude oil continuing to climb now, actually touching 80.
Okay, bought a little bit of NVIDIX. Okay, Netflix on the move. Netflix continuation. Let's see what Trace looks like. Okay, so we'll have to come back to that. S&P, a little bounce, and now turning lower again. Okay, S&P 500. Okay, got a little bounce. Let's see how far we go with this. Non-farm payrolls were pretty bad. Okay, nice bounce in NVIDIA. Microsoft, shorts covering. I would just say shorts covering for now. Google bouncing, Amazon bouncing. Okay, we only have about 15 stocks green on the NASDAQ 100 at the moment.
The CEO saying that brand is regaining cultural relevance. We've seen that when I walk past. There's a Gap near here. When I walk past, you see more people in the store because for a season of time, it felt like Gap was, I wouldn't call it left for dead, but it was certainly having some challenges. And Richard Dixon, you got to give him some credit for some reinvigoration there.
Amazon, looking for that to continue for now. Apple is off. Okay, S&P is still pretty weak.
Extreme low ticker alert.
Okay, let's see what software is doing. Software sector turning up. IGV, they're buying the dip.
Retailers or athletic retailers, at least this week, we've seen a pretty negative reaction when you look at like AEO or Abercrombie and Fitch. I know Gap is different, but I do tend to lump them into that sort of mid-tier retail category. But now shifting gears here, looking at Netflix, which actually is down about 0.2% here off the open today. Getting some analyst news that was a bit mixed because we saw, some favorability as far as the rating with an adjusted price target to the downside.
Yeah, listen, this is a Netflix it is getting somewhat of a.
Okay, we got some support down to about 6,500. S&P moving lower. S&P moving lower. Futures dropping off. Okay, Netflix, a bounce and a little fade. We need to see the future start to turn, and for hedge flows to turn up. For now, you know that dealers are selling into weakness. Support down here at 66.50. Hedge flow still drifting lower. I have those 66, 65, 6,400 put flies. Those are up. Those are up quite a bit.
Extreme low tick alert. Low tick alert minus 800.
Looking for a bounce. Cooler heads to prevail.
Now, coming up next, we'll dive deeper into earnings, especially the moves we're seeing in Costco as well as Marvell. Opening bell, we'll be right back.
All right, looking for stocks to get bought. All right, Bitcoin down again today. Back down to the lower part of Wednesday's huge move. Okay, looking for Bitcoin to bounce. Okay, back below 72,000 Bitcoin yesterday. No follow through today. Okay, Microsoft on the move here. Microsoft. NVIDIA is bouncing.
so Vlad, tell us how this works, because we want people to buy these and have a chance to be in them. We also may not want to be in the last round. Is there a chance that you go over and say, well, if there is some risk, some of these companies may be doing a deal below where you put money in? Is that something to worry about?
I think as with any investment product.
Okay, we're starting to bounce
There's no free lunch.
off 100 handles. I'm going to look at some 0-day. I'll fill in some active trader levels. Let's see what a 30 delta looks like right now. Volatility is high. 17 bucks for
Low tick alert minus 800.
35 delta. 30 delta is 14 bucks. Expecting a big bounce, looks like. 6,800. Can we get back to 6,800?
Extreme low tick alert.
Okay, bearish side. That's going to be very expensive too. I'm just filling in. I'm not doing anything. I already have. I have those put flies. 6,600, 65, 6,400. Those are up about 75%. $67.50s. Let me just put this here. Okay.
Exclusively ultra late stage, but what we look for is unique businesses that are at the frontier of their respective industries. Talk about the platinum card and who it's aimed at.
Okay, hedge flows are starting to turn. Hedge flows starting to turn. Man, we could come all the way down to this 66.50 level. I wouldn't be in a big hurry to do anything. Hedge flows starting to turn. Okay, Palantir. All right, Palantir is moving off of yesterday's low. Mm-hmm.
People who are currently on the gold, we're giving those customers access to it first, but I think it's going to be more of a niche product for a high-end consumer, and it's now that we have two credit cards, I think we can claim to have entered the space as a credit card company, which I think is something.
Hedge flow starting to turn. There's nothing up here until we get to about 60, 69.10, 69.20. Down 100 points, looking for a bounce. I'm just sitting here waiting for a change in direction. I mean, we're already down over 100 handles. For the markets to continue to drop, that wouldn't be good, of course. But for now, I'm just waiting for a bounce. Extreme fear showing up on the fear greed indicator. Okay, NVIDIA moving. NVIDIA's on the move. NVIDIA off the low. Many will be talking about the job losses due to AI. Got to say it. Who's going to benefit from it? The build out in AI. Obviously, we start with NVIDIA, but then you look at the ancillary industries, fiber optics. Let's see what GLW looks like. Corning. Corning is actually up. It did gap down. Corning. CoreWeave. The data centers. Looking for these to base down here. Palantir. Palantir moving higher off the low. Today is day 8. Microsoft consolidating. There goes NVIDIA. NVIDIA's on the move. NVIDIA moving. Okay, we're moving a bit lower at the moment. Let's see if the selling subsides before we do anything on the long side. Risk off below 6,800. A lot of stocks moving counter trend right now, like NVIDIA. Amazon and Google trying to bounce. Microsoft trying to follow through. Software did initially get a little bounce. Got to give it a little bit of time. NVIDIA pushing higher. NVIDIA pushing higher. Future's not plunging lower at the moment. Looking for a bounce. NVIDIA still moving higher. NVIDIA.
As we go to break, watch bonds today. 10-year now to 417. Remember, we began the week at 393. As for equities, S&P here, 67.17 or so, sitting pretty much right at the lows of the week.
General Petraeus.
also said there must be unconditional surrender. Well, this is a regime that, be surrounded by destruction and death and debris, and there will be a fist come out shaking and saying, "We won, we survived." Well, they're going to survive, but the conditions are going to be horrible. So all these different factors will come together, and I suspect the war ends when President Trump decides to end it.
General, let me, I want to get back to that. The markets are very focused on the Strait of Hormuz. The last information that I was able to see, there are no ships going through here. That is sending oil prices much higher.
Yes.
What has to happen to get this back open?
Well, a lot of this is just voluntary, but they have seen 3 ships hit in some fashion around the Gulf and another one hit off the coast of Kuwait. This is where drone threats could be particularly challenging. What has to happen is there has to be sufficient.
Okay, we're trying to bounce more. Apple's lagging, so is Tesla and Meta for now. So we got 7 out of 10 that are looking like shorts are starting to cover over the last 15, 20 minutes. Okay, NVIDIA is still rising. I'm going to zoom out a little bit here on NVIDIA.
This is a very significant issue. You watched as even prior to the operation, there was a risk premium.
Okay, Netflix bouncing. Palantir still following through. Palantir looks pretty good. Check out Palantir. Palantir, day 8, still pushing higher. Palantir for now. Palantir continuation. NVIDIA still going. Futures starting to turn the corner. Futures. I'm going to keep those put flies that I have on the S&P 500. I'm not in a big hurry to take them off. Their insurance, it's not a lot of money. It turns into a lot of money if we drop. Okay, we're below again. Same low that we had on Tuesday. 6,700. Okay, so everything is pointing down for now. We got 9 distribution days. Yeah, 9 distribution days. Okay, let me just change that. Sure looks like the top for now. I don't want to guess, but it looks like a top. Smells like a top. Anticipate that we could move lower, so I'll keep these put flies on. No reason to take them off, really. I can take this off, really. Just put that 6,500 center of that put fly. That's fine. Okay, the 200-day now is moving on up. 200-day, not that far away now. Put 200-day. 200-day is not that far away. It's only about 6% off the high. Remember, we expect there are possibilities of more significant pullback with the midterm elections at the end of the year in November. 2018, we had a 20% drawdown, 10% before, 10% after, basically. Not suggesting that's going to happen again, but we need to be aware of what's happened in the past so we can plan for the future. I'll keep these put flies on for now. NVIDIA keeps moving higher. Palantir still moving. Palantir still going. NVIDIA still looks good here.
concern because as the price goes up, obviously the price of a gallon of gas goes up very quickly. It's surprisingly it shouldn't because these are all futures contracts, and they bought that at a much lower rate, but that's reality. And then it's a factor of production in everything that we make and do and so forth. So it is understandable that there will be concerns.
NVIDIA, we could pull back again to the 200-day if the selling resumes.
Elections that are coming up. And so this is why President Trump's trying to mitigate this. He said, we'll escort the 10 days.
So far, Google bouncing, NVIDIA, Microsoft, Snowflake, Broadcom. We're seeing some short covering in Tesla, Meta, and Apple at the moment. Netflix taking a break. Netflix flat. Netflix is flat.
During the commercial, jumped $2. So if you want to know what you want to follow, it's this semiconductor group, which is hot as a pistol, despite the fact that the market is down. Broadcom, by the way, is a 1.
Well, it's up because people are thinking, okay, well, who's going to benefit? Futures pulling back.
I also want to point out that as much as I do like Benioff and I like McDermott, whatever, those stocks have had the run. The money might be going back. I mean, they can take profits, right? The money might be going back into a Broadcom, going back into a Marvell because the semiconductors have been very hot. Don't forget, right now we are seeing Samsung raising prices dramatically, and that cuts for Western Digital. It cuts for
Micron, where's Micron?
So let's watch those.
Down 3%.
Touch on defense names. We're
Micron right at the 50-day.
talking about production schedules and making sure these stockpiles stay elevated.
That's RTX, which is up 2.5 in market and is flat. I like that one very much, and everyone buys Lockheed. They always buy Lockheed.
Jim, we'll see you tonight.
Yeah, this stuff. But yeah, I would say that one thing about Vlad is that some of those companies are interesting, and they're not just all companies that are aggregators of Amazon products, like toothpaste, which, by the way, a lot of them are,
Yes.
and that was really stupid.
Jim, we'll see you tonight. Matt Money, 6 p.m. Eastern Time, with S&P 6715 and an almost 2% loss now on the Dow.
That's crazy. Non-farm payrolls, in case you're just joining us, non-farm payrolls were really bad. 92,000 lost versus they were looking for 55,000 increase. I don't know where they got that number from, but non-farm payrolls were bad.
Investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy. From the opening bell to the closing bell, we've got you covered.
Futures still hovering at the low of the day.
Get inside the minds of
Off 112 handles.
A higher rate of change in sales.
Apple's starting to turn. Watch Apple.
follow the biggest headlines.
Apple looks like it's seeing some short covering. Previous low right here a couple of weeks ago.
Break it all down.
Okay, watching Apple for a reversal.
I think one of the most important things is you're making a play in a risk-defined
Apple.
way going into earnings. So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and
Okay, New York Fangs are mixed. We hit that trend line yesterday. Here's the S&P, but look at the New York Fang. We hit the trend line. That green trend line, we hit it yesterday. Rejected today. Can we follow through?
I don't even know if they could envision it to leave everything behind, literally come across the entire world.
Amazon 220 call wall is holding. We were not able to get above 220 yesterday. We're at 217 today. Give it a little bit more time. There's still a lot of people out there. It's only half an hour into the trading day. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. There'll be a lot of people trying to game this move to the upside, jumping into calls. All right, starting to bounce. Okay, here we go. Starting to move now. All right, bought some calls. 6,800. Okay, a little short covering there is all I'm assuming. Watch your MACD. Watch MACD here. All right, we're starting to rally up. Not going to do a whole lot at the moment. Watching if we get any kind of bounce here. That number was pretty bad on non-farm payrolls. Okay, looking for more upside. Calls are bid. Okay, looking for a little bounce.
Good morning, Sam. Yeah, for the month-over-month adjustment when it comes to business inventories, that actually came in at 0.1%, matching the street's expectations of a buildup of 0.1%. The last month's print was actually revised lower from 0.1% down to flat. And if we're looking at retail inventories ex autos, this is actually very interesting. This is actually a little bit more bearish, coming in at 0.4% on a month-over-month basis. That's an increase. This is looking for 0.2%. Now, that's just one of those items that you got to keep on the radar. If we start seeing inventory starting to build up, is that really reflecting that maybe the consumer starting to slow down on certain purchases? is just one print, but something to keep your eye out on. And obviously, we had some other data points earlier on this morning as well that created a little bit of volatility in the market, given the headlines that we've seen, especially when it comes to the Iran U.S. conflict as well.
Right, yeah, obviously we've had the FT article coming out around Qatar warning that it could force actually the Gulf to shut some of its exports out within days. Obviously we've had this Trump Truth Social post no deal with Iran except for unconditional surrender. So obviously this has been weighing on top of the surprise drop in these payrolls, which I suppose is surprising given the fact that we've had some pretty okay looking economic data out this week. Minus 92K on the headline, the unemployment rate ticking up as well, a revision to the January numbers. Obviously we have the caveat.
Okay, 6670. We see some levels down there.
But it just feels like this has come in.
Okay, let's go back to the open.
Just talk us through what you're seeing there as far as the payrolls, the jobless rate, and also some of the retail.
Right here, right around 6670. Somebody just came in right there, 6670. Looks like a spread. Looking for prices to move back up. Let's see, 0 day. This is hedge flows for now. Okay, this level right here. See this right here, 6670. Look at this level. Go back to the open. It's not there. Then boom, it comes in. Very large, very large.
Given the fact that we might see increased inflation because of the energy spikes, and that just puts the Fed in a rock and a hard place. You're already hearing commentary coming out of the Fed that has a little bit more of a mixed posture when it comes to rate cuts later on this year. So something to be mindful of, but I would take this, I wouldn't say as a grain of salt here, but just understand that it's very volatile and kind of not surprising seeing kind of the reaction to the downside, given that we had such a strong report in January.
Yeah, just putting a big asterisk, as you say, in that notebook there as far as, what this could mean moving forward. It's just one print. But for now, as you say, I mean, rock and a hard place for obviously some of these central bankers with the inflationary pressures that we've even seen, not just with the potential for higher crude prices, what that can mean down the road, but we saw it in some of those ISM PMIs as well, even though it sort of came off a little bit in the services, but then also job deterioration, not just with the data. But you heard from Oracle yesterday, Morgan Stanley earlier this week as well. So, I mean, obviously something to keep an eye on. But obviously, crude being the big story for us today, continuing to climb higher. Just talk us through the latest headlines here. What is driving the price action currently?
Yeah, so we are actually seeing crude pull back here about $1.20 from reaching those highs of $89.62. That's the WTI benchmark here. Now, $90 is obviously going to be a key technical level. We kind of broke through some key areas of resistance over the last couple of weeks. $67 was that first one, 72 is the next, and now we have $90.
Okay, looking for higher.
This morning,
Apple.
obviously we have around 20 million barrels.
Still jockeying around here. Nvidia. Grinding higher, Nvidia.
We have Qatar Energy, obviously talking about their shut-ins that's taking place already, and then Kuwait talking about the fact that they might also have to shut in.
Okay, Palantir, watching Palantir. It seems like we're just sitting tight here. Many of these software as a service companies. Nvidia moving higher. Netflix backing off. Netflix. Futures starting to turn over again. Futures.
Physical movement to oil is obviously going to be the impact that we see at the moment.
And the other interesting move from the Trump administration has obviously been allowing India to have this sort of temporary 30-day waiver to snap up some of that Russian sanctioned oil as well, which has basically been fast-tracked stranded out at sea. So some have been talking about how this is potentially a small taco here. Yeah, just talk us through what some other implications it's having on sort of broader sort of global supply chains as well. I mean, across other commodities, because I was looking at Maersk, for instance, which is going to be suspending some of its shipping as well. What sort of impact are you seeing on the charts there?
Yeah, so if you're looking at some of the bulk containers out there, they're also getting hit and have a little bit of a risk here. And this move in oil has actually pushed up commodity prices, especially on the grain front. So you're seeing soybean oil, which is going to be a little bit more of an impact on E15 output, which we might have to rely on that a little bit more. That one has been moving to the upside over the last couple of months. But if you're looking at wheat has been very depressed. Fundamentals don't really look that great when it comes to the market, but buyers are looking at a cheap commodity that they would like to get into because those transport costs are going to go higher. Soybeans as well. The input for fertilizers also maybe being a little bit more overlooked here. Nitrogen as well as phosphate is being held up. The Strait of Hormuz is a huge thoroughway, if you will, when it comes to those byproducts. So you are seeing like CF Industries for that matter, a fertilizer maker, aggressively moving to the upside. So input costs going in to farming and agricultural in general are moving higher, and so are the grains in order to compensate for that.
Yeah, and obviously the Wall Street Journal out yesterday talking about how the US has one big ask for China, buy less oil from Russia, more from America. But I know that also soybeans is very much on the agenda as well.
Okay, market's still hanging out near the lows. No follow through yet. We're just waiting for a follow through. Once we start to see a follow through, then we get more active. Palantir is looking better. Palantir looking better. Climbing Palantir for the last 8 trading days. There's Palantir now. Palantir looking good. Okay, looking for MACD to turn up. NVIDIA making higher highs, higher lows. Looking for the markets to bounce. We're still down 96 handles. Futures looking for the bounce.
This place is incredible. It's where I get all your office supplies. Your golf balls, your fancy coffee, your TVs, everything in one place. It's like Schwab. Everything investors need, all in one place. Come again? Yeah, at Schwab they can do everything. Invest, trade, get full service wealth management, and anything in between. I think I'm gonna be sick.
Okay, here goes Palantir.
Invest your way with Schwab. No politics, no spin, just the market from open to close and beyond. Streaming 24/7, any screen, anywhere at schwabnetwork.com.
We're back on Morning Trade Live. So the sell side has been busy trying to make heads or tails of reports of the potential partnership between the Trade Desk and OpenAI. Wedbush downgrading the ad tech company to underperform from neutral, believing the impact of this potential partnership has been overestimated. And Hoover Research and Evercore ISI, on the other hand, are more bullish on the Trade Desk, with Hoover upgrading shares to overweight and Evercore maintaining its outperform rating there. So we have mixed views on this whole ordeal right now. The Trade Desk is down around 5.5% right now, $28 and change. So let's take a look at some of the winners and the losers on the session. Here are your leaders board. You got
Okay, 50 days overhead. I don't expect we're going to get above the 50-day, but we have a nice rally up.
Earlier in the week, climbing 2.9%. ServiceNow is also emerged as a really big winner this week as we
Broadcom still pushing. Apple trying to turn the corner. Netflix a little bit lower. Not unusual to see Netflix off a little bit. People taking profits off, reducing their exposure.
Right now, we've got KKR and Co down at 5.7 as well. Builders First Stores are down 5%. And Old Dominion is taking the lead as far as the losses are concerned, down 7%. Let's move on now. Joining us is Peter Anderson, Chief Investment Officer founder at Anderson Capital Management. Always nice to see you, Peter. Happy Friday. Not so much for the markets. Just how would you characterize with the performance we've seen this week off the back of epic fury?
Many investors are confused. They're trying to make sense of the day-to-day, actually hour-to-hour news cycle.
Yeah.
And as a result, I think you get this incredible volatility.
Sure. I agree with him 100%. You're looking at this thing from minute to minute, hour to hour, instead of thinking in the future, who's going to benefit from all of this? Yeah, we lost some jobs. I hate to be a coder. The people with more experience have a better opportunity. Newer people going into coding, not so much. I think that should be obvious. All right, futures starting to move a bit higher.
Well, there is a playbook out there, and they say history doesn't repeat itself, but this is very close. I mean, the only difference I think is now that we have
Palantir at the highs. I don't think we're getting through the 50 days. So yesterday's high, probably it for today. Looks good. Palantir. All right, just as I say that, we start to see a little profit taking.
I don't mean to trivialize the disasters that we've been observing, but you do have to take this somewhat in stride and recall what happens at the end of when it resolves at that end, or also once we get used to this. Now, remember, the Ukrainian conflict has been going on for years, and at first there was this kind of reaction, and now, sadly, that news item isn't really in the top 5 lists daily now.
Yeah, not to mention, obviously, when we look back to
Micron turning back up. Dip buyers, that's a good sign. CoreWeave, we got dip buyers headed back towards 80. CoreWeave. Data centers, they're going to benefit. A lot of people that don't understand or know how to use AI in their jobs are going to have issues. A year or so ago, I was saying the same thing. Don't be fearful of AI. Be fearful of the people who understand AI that's going to take your job from you or can excel using AI in their job function or in your job function for that matter. We've already seen how it can help trading. I mean, just ask a question. You got to double check, obviously, but you ask a question. What's exactly going on in the markets? What can I expect? Give it a time frame.
And I think that is a very healthy thing. So the enthusiasm before that was really off the charts, and I actually thought it was irrational. When you really study the science behind artificial intelligence, I think you come up with a more tempered outlook than most bulls have had over the past 2 years.
Yeah, it's interesting because the counter argument to that is that, the 700 billion
puts are falling off. Calls are still maintaining a bid for now. Energy should outperform along with healthcare, consumer staples, defensive sectors. We'll look at that. CoreWeave is zipping higher. CoreWeave is ripping here. CoreWeave is ripping here.
Absolutely. So what is surprising me, though, is the incredible volatility of the Euro defense, the ADRs that were holding the portfolio. I mean, these things have shifted in a day, 5, 6, 7% trades up or down but I think the global conflict has started to reach into every aspect, and I think investors are trying to figure out how much edge off the capex spending for them. But I'm on the other side of that trade. I think with every amount of demonstration of global geopolitical conflicts, that just pushes up the objective for these companies to just build their own defense systems and be armed for any kind of potential conflict.
Budgets as well as sort of worldwide. Peter, really appreciate the perspective for us today. Have a happy Friday and enjoy your weekend. We'll catch you next time. Peter Anderson, their Chief Investment Officer and founder at Anderson Capital Management. Coming up, we will get a closer look at the big picture with the team from Charles Schwab. Morning Trade Live will be right back here. I'm Diane King Hall on the floor of the New York Stock Exchange. When markets react, we are live with analysis that matters. Watch now, only on SchwabNetwork.com.
How's it going? Sometimes, Next. Try it again. You could.
Okay, puts continue to fall off here.
Same goes for where you invest.
Out of the money, puts continue to fall off. 66.70s are dropping off. Let's see if we continue to bid off at this low. Apple, NVIDIA making higher highs, higher lows. CoreWeave.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab.
CoreWeave, nice rip there off the low. CoreWeave.
Ready to tackle your trading questions, no matter how complex.
We sold the 80-75 put spread. I rolled that out to April. That's profitable. I think that's all I have on right now. Let's see. Hood was okay. I got to just account for Hood. CoreWeave is left. All right. Palantir moving higher. Palantir. Okay, futures continue to rise here. Futures continue coming off the low.
Live coverage of the close every single day. This is Market on Close, live weekdays, 3 p.m. Eastern, only.
Futures grinding upward. Can we get 50%?
We're back on Morning Trade Live. Marvell is rallying this morning after lifting its
50% retrace. 6,800.
record revenue in the trailing quarter with 22% growth. The company is projecting revenue growth of nearly 30% for fiscal 2027. So it seems to be that visibility and the narrative rather than just the numbers here for Marvell. It's up 17%.
S&P, can we get a 50% retracement? Okay, we got the gap down. Okay, so 50% would put us back at 6,800 at least. S&P turning back up. Hammer. Nice hammer so far.
So a pretty surprise drop there for payrolls this morning. Just how are you thinking about it and the reaction we've seen in
And running the street at night. Now he's obviously putting his crew's life in danger. I mean, it's not just, we talk a lot about insurance. Oh, will they cover the losses? 17 to 29 people on any of these ships, depending on the size, who are risking their lives.
All right, here go futures. Okay, watch your hedge flows. Hedge flows.
But you're not sure you can get out. So there's a lot of talk about naval escorts. Well, naval escorts are great, and I love the U.S. Navy. My dad tax. And also, if you get the ship
Hedge flows turning up.
or the ship
Hedge flows turning up.
go back in, not knowing if they're able to get back out again. So there's a huge backlog, and you can bring up that live map again of ships that are sort of stuck there, trapped, kind of waiting to get out unless they're crazy enough or foolish enough to try to run through at night, like we just talked about, Sarah. But I don't know if the ship owners are willing to go back in. And so you're seeing ships leave, and they're going around the world. And ship stocks have soared. You look at a Frontline or a Scorpio or a TK or some others, there's global stocks too. They're starting to fall today because you do wonder, they make a lot of money carrying stuff, but what if they run out of stuff to carry and they're just kind of floating around? It's a fluid situation that's changing literally by the hour, particularly by the day.
Yeah, and you're not even mentioning things like mines, which are another additional danger to those crews. Brian, we'll watch it closely. Appreciate it. We'll talk in a bit. Brian Sullivan watching the energy complex for us.
They just keep repeating the same stuff that people don't know anything about the military or the changes in military technology. I mean, minesweepers, not like World War II. Straits of Hormuz. You turn on a missile system and get ready to shoot it. You better run for you. You better run. I hate to make light of it, the situation, but man, I would not want to be in that situation at all. Okay. It's crazy. War is crazy. It's always about politicians. Anyway, I'm your host, Cousin Vinny, coming to you from theclosingprint.com. We got a slight upward grind in the futures, well off of the lows. We're about 30 handles off the lows right now. Continue to grind higher. Shorts covering. We're below 6,800, so we are risk off. You can take some opportunities to day trade a few things. CoreWeave just ripped higher. That was a good little trade there if you were quick and nimble. Palantir continues to rise. Stocks, companies that are going to benefit from those awful numbers this morning, like NVIDIA. Snowflake rising. Okay, Apple off the low. So we're starting to recover here. Starting to recover. Okay, this is looking better. Look, there's buyers here at the low. This is the New York FANG components. Buyers at the low of the day. So far, so good. Okay. Okay, 50-day is next, but this looks pretty good so far. Yeah, that's good. I don't usually like him. Okay, so that looks pretty good. New York FANG. New York FANG. Yeah, Greyhound's a good movie there, Mondo. Especially at the end. Especially the end of the movie where he leaves the bridge.
Driven by the data center business. Meantime, Gap shares are moving lower after earnings narrowly missed estimates. The company says comm sales were hit in part by severe winter weather, which led to temporary closure of 800 stores. And then airlines are also under pressure today as those oil prices climb. United CEO Scott Kirby saying at an event that the spike in prices will have a, quote, meaningful impact on financial results. this quarter. Big consumers, obviously, and they pay those higher bills, even if it is temporary.
Also trying to charter some planes, get Americans out of the region, which is another issue.
Big story too, yeah.
Let's get a CNBC News update with Dom Chu. Morning, Dom.
Morning, Carl. Good morning, Sarah. Russia has reportedly given Iran targeting information and intelligence to attack U.S. forces in the Middle East. The Washington Post reports that since the war began last Saturday, Russia has passed on the information and location of U.S. military assets to Tehran, including warships and aircraft. Neither the White House or Kremlin has commented on that report. Facing an ethics probe and a call from his own GOP leadership to leave the race, Texas Congressman Tony Gonzalez dropped out of his runoff election. Earlier this week, he admitted having an affair with a former staffer who later election. He says he will serve out the remainder of his current term. And Ukraine today accused Hungary of taking Ukrainians hostage and seizing millions in cash. Hungarian authorities detained 7 Ukrainian citizens, including a former intelligence officer, on suspicion of money laundering. They were carrying large amounts of cash across Hungary and 2 armored vehicles. Ukraine's foreign minister saying the armored cars were part of regular services transferring money between Austrian and Ukrainian state banks. Hungarian President Viktor Orban has maintained close ties with Moscow.
Okay, Microsoft looking good.
Sarah, I'll send things back over to you.
Okay, Dom, thanks. After the break, Goldman Sachs chief economist Jan
Microsoft looking better.
miss in this morning's jobs report, and another twist in the Anthropic story by the company.
Look at Microsoft coming off the low. Okay, we're coming out of this base, folks. This is looking pretty good. Now we need to get out, tackle 422. Microsoft gets above 422. 75. Confirmation on the reversal and base breakout. That'll be good for Microsoft. Okay, looking good, Microsoft. $50 right there. That's your target, first target. I don't like doing targets, but that's where it looks like it's headed. Yeah, same here. MSFU. Yeah, non-farm payroll was bad. All right, Apple continues to roll off the low. Okay, here goes Netflix is turning. Netflix turning. Netflix for the day trade, turning off the low. Netflix looks good here. Watch Netflix. S&P still moving. Netflix coming off the low. Put a stop underneath this area. Okay, we're pushing higher. Netflix. Palantir. Palantir at the high of the day. NVIDIA. All of these look good. Microsoft. Microsoft coming off the low. Okay, Microsoft looks like it wants to go here. ABCD pattern on Microsoft.
trading day. Stocks are under some pressure, but they are off their worst levels. The Dow was down 945 points at the lows. Some of the big stories we're watching this morning. That February jobs number widely missed expectations. A loss of 92K versus estimates of a gain of about 50. Unemployment rate did go up a tick to 4. Oil prices up after the FT cites Qatar's energy minister saying that oil could potentially
Microsoft looking good.
$50 a barrel if conditions don't change in the Middle East. And some more private credit concerns today. BlackRock puts limits on some withdrawals from one of its flagship funds. Financials today, one of the worst sectors, down almost 10% for the year so far.
Yeah, another mix of bad headlines for that.
Microsoft.
Here's what NEC Director Kevin Hassett from the White House said last hour about it here on CNBC.
There have been so many strong indicators this month that it's something of a surprise, but there's some weather, there are strikes on the West Coast, and I think that we also have this birth-death model, the change in the procedure at the BLS. And so I think what we need to start doing with these jobs numbers, at least on the payroll side, is take the average over a few months. And if you take the average over a few months, we had a surprisingly positive one last month and a surprisingly negative one this one. But on average, it's about what we expect to be seeing.
Microsoft going.
Bringing Jan Hatzius, chief economist at Goldman Sachs. Is he right to dismiss this weaker jobs report, strikes, weather, one-offs?
Well, it's certainly true that strikes subtracted, 30-something K, and the weather, I do think,
The weather.
I also agree that we should take an average. These numbers are always, noisy on a month-to-month perspective. If I do take an average, though, it's still a pretty weak labor market with very little job growth and zero job growth, or negative job growth if you take out healthcare, which is pretty narrow base. So while there is a lot of strength,
Microsoft on the move. Okay, there go the futures. All right, looking much better. Futures looking much better.
Two issues. One is that the labor market translation of
All right, 50% retrace, 6,800.
has been pretty weak, and now, of course, we're getting an energy price shock, which is unfolding. So we're going to have to see how big it is. At the moment, the numbers that we're getting out of translating current oil prices into headline
Futures. Okay, tick cumulative still hasn't turned up on the 60-minute time frame. We want to see that turn at some point. We're below 6,800, below 6,800, risk off. So the only thing we're doing really is day trades, adding to positions that may be working, like Microsoft, Palantir, NVIDIA, anything related to AI, like CoreWeave, data centers, that should do well. Palantir still rising. Palantir. Nice call.
Well, I think the slowdown in labor force growth because of immigration policy has been one reason why.
Lionsgate being mentioned by Joel yesterday. Lionsgate breaking out.
We would have seen a significantly bigger increase in the unemployment rate if, break-even payrolls were still 100,000 plus, but break-even payrolls are, 50,000 or less. So that's obviously an important factor.
And what explains claims? Why are they still so tame? Is there a good theory behind that?
Because I think we're still in a low hire, low fire environment. So, job openings are still trending down. And the latest jobs number, of course, was quite soft. But we have seen not really much of an increase in layoffs. So that is good news in the sense that, it doesn't look like anything's breaking from the layoff side, but obviously that's something that we're going to be watching very closely.
We're also seeing decent wage growth. I mean, today's number, 0.4% increase on average hourly earnings, does not speak to a very weak labor market where businesses are pulling back. How do you explain that?
Well, I think monthly wage numbers are noisy. The trend in wage growth has been lower for the last several years. I don't think that has changed. We've come down to the kind of 3.5.
Lionsgate breaking out.
Range. If I look at all of the different indicators, the latest employment cost index for Q4 was actually a little bit softer than that. I don't think that trend has changed.
So ultimately, what should the Fed do about this?
Well, I think what they are likely to do is, watch and wait. There are obviously significant divisions in the committee where some are very concerned about the labor market, some are very concerned about inflation higher. And so for now, I think they're not likely to do much. And for the time being, that seems like a reasonable.
What should they be more concerned about? What do you think is the bigger problem for the economy?
I think I think probably the labor market numbers are the bigger risk, which is one reason why we still have some cuts in June and September. We haven't made changes to that. As we think that core inflation is likely to come down, especially in the second half. But I do worry about the fragility in the labor market.
Finally, on areas in which consumption is vulnerable, would it be a cracking of the capex, the build-out cycle, or maybe something regarding the wealth effect and upper income, or something else?
Wealth effect is certainly something to watch, just because we have seen so much support from the wealth effect to consumption. But the number one thing for me now is what is going on in the labor market. If we were to see more of a deterioration there, that I think is still going to have a broader impact. But yeah, I mean, wealth effects can obviously turn from positive to negative. Well, we did put that.
Lionsgate following through. Microsoft just at the high.
10% pullback. We said 10% pullback in equity prices is worth about 50 basis points on
Futures looking for higher highs, higher lows. Futures.
Immediate basis. It has to be sustained, but it's definitely something to watch.
Is there a level, like if we get into the hundreds in terms of oil prices, or a duration of how long this lasts, where you have to go back and rethink the economic forecast?
It's a combination of level and duration. I mean
Up down volume.
each 10% increase in oil.
Not as bad as Tuesday, but 2-to-1 down volume on the Qs, 4-to-1 down volume on the SPY, 2-to-1 on the NYSE down. Look for markets to turn back up. Grinding higher. Hedge flows. Watching hedge flows. Okay, now we have a spread overhead. 6,800 now. That's new.
Okay, really helpful to have you here today, Jan. Thank you very much.
Thank you very much.
As always, Jan Hatzius, Chief Economist at Goldman Sachs. Sticking with the macro for a moment, today is a major milestone for former Fed Chairman Alan Greenspan. It is his 100th birthday.
Really?
Happy birthday, Alan Greenspan.
Wow, he's 100. He's lived that long, huh?
2006, we were just talking about a 5-term, unbelievable, nominated, of course, by President Ronald Reagan. And I think that one reason he's celebrated as the maestro, Carl, is under his tenure, the U.S. economy had one of its longest, most unprecedented, uninterrupted expansions in history. Where
Reagan years.
For several years between 87 and 2006, and he finished the job of Volcker, moderating inflation, got us through the crash of 1987.
Okay, that's new, right?
And so he's considered a legend.
Yeah, that's new. 6,800. Looks like they're going to try to contain it at 6,800.
End of the Cold War and a bunch of other nice tailwinds that it would have been good to have as Fed chair.
Absolutely, and we were just talking to Jan Hatzius about how he always said he wanted to live till 100, and so he got to do it.
Yes.
So we wish him a happy birthday and many more years of good health.
Still ahead, speaking of Fed officials, Governor Meyer will be with us at Post 9. We'll get some reaction to the jobs number, his read on inflation, and a lot more. Dario Amodei taking on the Pentagon after Anthropic was formally declared that supply chain risk. We'll break down the fallout from that when we come right back.
Okay, a little profit taken there on Microsoft. Not surprising. It's not going to be a straight shot to the moon. Okay, we're going to have a lot of volatility as VIX remains elevated. Okay, let's see what VIX looks like this morning. VIX. Okay, VIX almost, what did it hit, 29? VIX high today was 28.57. Getting there. Did we hit 30? Where there?
All right, a lot to take in here, Mark. Thank you so much. Really appreciate it.
Good day. Go get that money.
All right, let's take in some more now. Let's talk about retirees because there is still time to save on 2025 and their tax bill. It's even a good time to start planning ahead for next year for them. Yahoo Finance senior columnist Carrie Hannon is joining me now. Carrie, it's great to see you. Let's start with some tips.
Okay, so don't want to be too aggressive. The markets did bounce, but we're just kind of sitting here. Very possible we could just roll right over. There's nothing that says that we can't. Fingers crossed. We're going to bounce off of this and start to move towards D.
Welcome back. More drama around Anthropic today. The AI company saying it will challenge the U.S. government's move to declare the firm a supply chain risk. Kate Rooney joins us with the details, Kate. So we have this post by Dario, the CEO, where he kind of apologizes, and then he does
Buyers of 25,000 March 10th, 654 puts.
Yeah, Sarah, it's been playing out in drips, and so far until yesterday, it really mostly played out in social media, but the Pentagon
Hedge.
notified Anthropic yesterday that the AI company and its products are now officially a supply chain risk. This is the first for an American tech company. So the only other examples have been those accused of espionage for foreign adversaries. Think of Huawei, ZTE, Kaspersky, for example. The CEO of Anthropic, though, saying in that statement last night that they have no choice but to now fight in court. The move, he says, is not legally sound. He also did apologize for a leaked memo.
We're starting to fade the high. Looking for a higher low.
Dictator-style praise of President Trump. But back to the supply chain point for a second.
Core weave off the high. Core weave.
That's because of a relevant statute that they use, and what has been applied here, he says, is meant to protect the U.S. government rather than punish a supplier. So this applies to specific government contracts, not the rest of its sprawling enterprise business, which really had been a major fear for investors.
Palantir.
Sort of chilling effect on its sprawling enterprise business. Last I heard, the company was on track for roughly $19 billion in revenue this year in terms of the run rate.
Futures continue to pull back.
Anthropic last night, tech company, major investor Anthropic, about a $5 billion stake it took last year, and then said that its lawyers determined Anthropic products can remain available to customers outside of the DoD. So Satya Nadella's move, though, it's important to calm some of those concerns from other enterprise companies and partners, help kind of contain the fallout here.
Futures pulling back. NVIDIA pulling back.
tools across AWS. Anthropic also uses AWS and Google Cloud as its primary infrastructure partner. I asked Mark Benioff about this because they're also a partner and also a big investor in Anthropic. I said, did he make a mistake? Did Dario make a mistake not acquiescing to the Pentagon? He said, I'm not going to, they have to make their own decisions. He didn't really want to go there. But I was just reading the blog post, Kate. You said he apologized. He apologized for the
Somebody sold a spread up here at 6,800,
he said, I want to apologize directly
6,805.
the company that was leaked to the press yesterday. We did not leak the post or direct anyone else to do so, not in our interest to escalate the situation. He did not apologize for, calling President Trump a dictator or going after OpenAI or anything like that. I just don't think it's going to go down well at the Department of War, and this is only an escalate for them. You've already heard. That's an interesting point. He didn't apologize. He apologized if they heard about it, but no, it's a great point. He also the blowback from the administration.
All right, Future's pulling back now.
At this point, you've heard Michael call Dario Amodei a liar with a God complex. It has gotten to a point that it's going to be hard for them to come back from sort of the headline risk and the animosity between the administration. One saving grace would be if they're able to contain this, though. If it's not going to be across all of their enterprise businesses, just government contracts, there is another side of Silicon Valley that is rallying behind Dario Amodei. It's just become very divisive and political, so it kind of depends on which side you're on and which side you're sort of rooting for in this what is now just a battle in tech right now.
Yeah, it's actually going to make a great business ethics case study one day, because on the one hand, you're allowed to have corporate principles and even disagree with the government. On the other hand, what is your fiduciary duty about those revenues in that line of business if it's going to put your company in some incremental?
We know what you think, Carl.
Then I think we even get a much more pronounced upward movement of most of these oil and gas stocks.
But even before what we got this week with Epic Fury, I mean, we were
Palantir off the highs of the day, Nvidia off the highs of the day, Microsoft off the highs of the day. So people are still reluctant, just day trading for now. CoreWeave off the highs of the day.
Low ticker at minus 800.
For the year. So again, we think the best upside is going to be number one on the oil side. I think especially for some of these big Permian players, we mentioned Diamondback and Devon. We think two of the best lowest cost operators. Obviously, Devon, the setup is going to be interesting because of their merger with Coterra, which is going to go final in the next couple quarters or next quarter.
Okay, IGV, the software group. All right, looking for that to continue. We're not going to go up every single day, but this volume speaks of institutions. So basing, looking for a follow through. You can sense day traders are very active today, buying the low, selling the high. Don't know how much of this is institutional. It's a Friday, March the 6th. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. Almost an hour and a half into the trading day. Just got a ways to go. We're 87 handles off of yesterday's close.
So we'll continue to be watching that 12-month very, very closely.
All right, we're going to wrap it up there, Neil, but thanks so much for the insight today. Really appreciate it. Have a great weekend. No doubt you will be very, very busy. Neil Dingman there, who's the research analyst for energy at William Blair. Appreciate it. Let's trade the USO ETF now, which is sitting at a 52-week high today.
CoreWeave turning back up. Feels like day traders are very active. I would imagine they are. Micron near the lows of the day. Micron. Robinhood off another 3.78%. Back into the base A loss of the base would be a different story. Right now, we're just back into the base looking for a bounce. Palantir looking for more. All right, we're starting to bounce now. Future's starting to bounce. Watch the hedge flows, making a higher low, higher high. See if we can't take this level out. That's 97 percentile right now.
Probably here in the near term. So kind of wanted to push that aside. I went out to the April monthly options, 42 days expiration here, and I looked at buying a bearish put diagonal here to the
All right, so you know you got resistance overhead at 68.05. They could attack this level. There's a pretty big trade there. Oh, we're right at the daily maximum right now. The daily maximum, you can see at the last line of the text here. Daily maximum is usually 46 million. We're right at 46 million 10 minutes ago. All right, futures are bouncing.
So you need some downside movement. Anything below about 102 is going to be potential profitability on this one, and you're paying less in the width of the put diagonal because.
Okay, we got a B and C now. Futures turning back up aggressively. All right, NVIDIA bouncing back up. NVIDIA.
Where you're selling that 90 put. Now you'll get about 4 opportunities to roll or adjust that short option. Those can expand to over $5-6 each, and if you get 4 opportunities to do that, that'll increase potential profitability and lower your risk each time you adjust that short
Snowflake rising.
expiration. But this is definitely a bearish look on this trade.
Okay, a good look at the energy markets across the landscape for us this morning with that ETF and historical trade. Really appreciate it, Tom White. And we have, of course, got stocks at lower for us this morning as oil spikes and the jobs number comes in with a surprise downside. We have got the S&P 500 currently down 1% lower. The Dow Jones shedding about 550 points, although we are off the session's lows. We will continue to watch this throughout the course of the day for you as we look at a more risk-off tone in these markets.
Okay, futures trying to take out the high of the day here. Futures. Futures, S&P, cash, we're bounced right at VWAP. MACD turning up. Hedge flows turning up. Well, they sell. Watch for selling into this strength again. Watch for selling here. If you're bullish, what you want to see is continuation on this buying and just push it right through this high. We have this hammer forming on the daily over there on the right. We're still off 67 handles. We were down like 110, 120 at one point. Nice bounce so far. Okay, I'm going to take a 2-minute break. I'll be right back.
Sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute. With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists, streaming live and on demand. Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Mom, when my grandparents moved here, did they know what our family would become?
I don't even know if they could envision it to leave everything behind, literally come across the entire world. I think that we totally met what their wishes were.
Schwab has been with us for almost 25 years through purchasing of houses, opening up our business, having children. They've always been there for us.
I want to invest with a company that can help me give my family a happy financial future.
PDYN.
Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are.
UANY.
NPT. SMSI. NDCS. TMD. HTO.
Good morning. We're 90 minutes into the trading day. Welcome to Trading 360. I'm Marley Caden, coming to you live from our Chicago headquarters. Here's what we have coming up for you today in our show. We're going to react to the jobs report we got, which showed a loss of 92,000 jobs in the month of February. We'll break down the rally in crude as well, which is at the highest level.
Okay, we're watching for selling into this previous high this morning. What would be disastrous if this hammer turned into a shooting star at the low? I doubt it will. I mean, we're down so much. Fear is at an extreme, so I'm thinking we're going to continue this bounce. Hedge flows. Okay, we're coming up to 68.05 now.
Ticking much higher. We're at 416 on the dollar, 99.13. Gold up about 1.5%, 51.50 a troy ounce right now. Crude oil we will be talking about a lot today. We are inching closer to that $90 a barrel mark. Brent is above the $90 a barrel mark, but up almost 10% so far. And Bitcoin is falling. It's fallen below that 70,000 mark. It finally broke through for the first time in a month. 68,710. That's down close to 4% this morning. I do want to welcome Kevin Green into the conversation, though, to take a closer look at some of that data I mentioned off the top of the show. KG, we got the jobs number this morning. Was not what was expected. Unemployment higher than expected. We also need to talk oil, but first let's talk about the jobs data and how much of the reaction we're seeing, how much of this downward move overall is tied to that number.
MOBX.
I think you could say a little bit of this downward move in the equity market is the result of the jobs report. Obviously, it was a very big shocker. We lost 92,000 jobs, or that's what's being reported in February. Street was looking for a gain of around 50,000 jobs. And if you're kind of looking at the private payrolls, I think that's actually the most interesting thing around this report. We saw a job loss of around 86,000. Street was looking for
all right, futures trying to take out this high of the day. Be a nice hammer.
Actually, if you look under the internals, healthcare jobs, they actually saw a loss of 28,000 healthcare jobs. Now, this is because of a strike that was occurring during the time of this data set. It's something to kind of keep your eye out on because healthcare as well as education have been really...
Microsoft turning back up. Microsoft, nice little pop here on Microsoft. Futures trying to go now. Futures.
January and February are usually very volatile prints, as well as the July data set. So I would say don't take it with a grain of salt, if you will, but there are also some other factors that play a part within this report. And then also the adjustment of the birth-death model is also dragging on this as well. We have seen that being reflected within the ADP monthly report since October of last year.
And in KG, you brought up some good points. That January report often volatile, February sometimes an extension of that. This particular report has quite a bit of noise, some weather-related issues, a strike in.
We're trying to take a new high here. Let's see what we have, what we do. S&P, Microsoft back up.
Or is this more temporary factors that are at play?
Yeah, that's a good question, Marley. So if you look at this time last year, you started hearing about stagflation a lot more. And actually, if you look at the year before that, we had the same type of situation taking place. This is just actually what happens on a seasonal basis. So that's why I think the Fed's going to kind of discount this number because we have seen this before. And then we usually do see in the March and April revision back to the upside.
Futures trying to break higher.
Then yes, you have a little bit of a concern because inflation obviously is probably going to push higher. We're seeing it on the services front. Now we're going to see it on the energy front, which will then translate into goods. And if we do still see a little bit of a decline when it comes to the jobs being added or even having job losses, then stagflationary fears will kind of creep back into the market. But this is kind of a narrative that we saw last year.
Puts are being closed. Puts are being closed. No bid in puts. Calls are being bid at the moment. Right at resistance. Do we break higher? Produce a green hammer on the daily, back inside the Bollinger Bands, get back into yesterday's price action.
And KG, before we have to say goodbye, I want to talk quickly about oil. We've got crude just under that $90 mark. We've got Brent topping the $90 mark here. What are some of your thoughts on this action we're seeing on oil? Midweek, it looked like we were getting a reprieve, and since then, it's off the races.
Yeah, as we continue to see refineries getting hit as well as extraction facilities being hit as well.
Netflix putting in higher lows. Netflix, Microsoft trying to break out. Apple turning the corner. Started off with them short covering on Apple. Now we're breaking back up to the upside. Amazon, same thing. Google at the high of the day. All right, we're getting rejected here. S&P getting rejected.
That's where it becomes a bigger issue because a lot of those facilities, it takes 2 weeks, 3 weeks to really get them back up to production levels. And that's where we could see a massive draw in the energy market as a whole. So right now we are continuing to see prices move higher. Technically speaking, seems like this is a bull cycle for oil, but the administration is going to try to knock those prices down, and we'll see what's being announced from that.
Kevin, we appreciate you being with us to talk through some of the action we're seeing in oil today and also that latest jobs data. Kevin Green, our senior equities contributor. I'll talk to you a little bit later, Kevin. Let's keep the conversation.
Microsoft still looking good. Microsoft.
RFC and president over at Bella Advisors. Patrick, great to have you back on the show here. Would love to
Looking for Bitcoin to turn. Bitcoin hasn't done much today. Turning off the low Bitcoin.
Markets are just bouncing back and forth here on a daily basis. And we're going to have some type of catalyst that's going to happen here in the near future that's either going to push us to a new high and bounce out of that, or we're going to start seeing it come down. And it's been quite a while since we've been through
New York FANG does look good. Buyers at the low of the day.
All right, so if we start to see that pullback, do you anticipate this rotation away from tech to continue? And if so, where do you see the most opportunity in the markets?
I see the most opportunity in different sectors, all the reshoring that's going on and bringing jobs back to the country and manufacturing in the country. So I think that is going to be in the next few years a big pull. Energy is another one with all the data centers and infrastructure that needs to get put in place with all the AI that's existing right now. And I like a lot of fixed income plays and using a lot of structured notes right now to take some of that risk off the table and get a better yield.
All right, and so with energy, certainly that has been a theme through 2026 amid this data center build out. But how much does it change the thesis here, knowing that we may be looking at an extended conflict in the Middle East here, and we are seeing oil prices as high as we've seen them since 2023 today? How does that change your outlook at all?
I would be looking more when we're investing. I'm looking more for companies that have the infrastructure, building facilities. When it comes to energy, when we're talking about oil, and we're starting to see that oil prices skyrocketing, I think we're just going to continue to see that until there's some type of resolution. What's going to happen long term with Iran? And so until that happens, we're going to start
S&P higher low.
That's going to start leading to inflation because that's going to start raising the prices of everything. So a little bit longer term, it's just we're gonna see more volatility, and another reason why the markets will start trending downward.
And so if we do get this anticipated potential uptick in inflation tied to this rise in oil prices here, Patrick, combined with the jobs data, the surprising jobs data that we got this morning, how did that change the course of action for the Fed this year?
I think the Fed's going to have to make some moves, and they've already said that they're going to cut rates once this year. But with all of these things that are happening right now, it could add up to more pressure to them having to make more cuts. But we'll see what happens with, mainly the rising oil prices that we see with cost of goods and services going on. But there's going to be a time frame, right, where it takes for that stuff to kick in. So we might not see those things and the pay from that for, say, 3 to 6 months.
And I'm just looking at the board here. I mean, the 10-year has ticked up to about 416 here. As far as looking at treasuries and potential opportunities there, where are you seeing opportunities and what areas are you avoiding right now?
Yeah, well, the opportunities, there are great funds that are out there. You've got like Morgan Stanley's got JEPI, which has an 8% yield on it. You've got First Trust that's got a great ACYM, which has got a great yield on it of 12%. So when we're going through these volatile times and treasuries, kind of being around 4%, and it's tough to keep up with inflation with rates like that. So I would be looking outwards and looking at more funds like that's going to give a better yield. And I would just be sticking away, and I wouldn't have too much tied to tech right now. Because here's a crazy thing, Marley, is that last year, market overall S&P was up 17%, but 40% of the S&P was negative last year, which I think it's just there's such a huge disparity right now, and everything's leading towards tech, and we have to kind of ride that train until it shouldn't anymore. But I would be very
All right, looking more and more like we could see a range above VWAP.
In a portfolio in this environment right now, Patrick, we keep having conversations about the safe haven metal.
Apple just faded from the high a little bit. All right, there's no follow through. You can see what we're dealing with on the daily over there on the right. We're sliding down that lower Bollinger Band. The odds are that we can continue to move lower below 6,800. We keep seeing volume pick up on down days. We've got 9 distribution days so far.
All right, Patrick, I hope you have a great weekend. Thank you for taking the time to be with us again on Trading 360. We love having you on the show. Patrick Mueller from Bella Advisors. And we've got plenty more to come today. Stay with us. We've got the big 3 coming your way. We've got 3 stocks for you, 3 charts. Rick Ducat will take us through the technicals. Tim Bowen will be joining us to take us through his trades. Chevron, Applied Optoelectronics, and Amazon today. That's all next on Trading 360 on Schwab Network.
Sellers keep coming in at the high of the day. We need to get above it, obviously. 6,800.
From the most iconic trading floor in the world, this is Opening Bell with Nicole Petalides, live on the floor of the New York Stock Exchange, the countdown, the setups, the stories that make markets move. Minute-by-minute breakdown of the biggest headlines, earnings, global movers, just the trades that matter. As the bell hits and the markets react in real time, Opening Bell, live at the NYSE, right when it counts.
Oh, she's got your smile, Carl. Yep, your #1 broker.
Microsoft watching.
Actually, that's for Schwab.
Microsoft.
All in one place.
I can set up for college fund.
I've been learning about trading strategies. Schwab helps me generate retirement income. All this Schwab is everything you need is making me cranky.
Does somebody need a match? Invest your way with Schwab.
Welcome back to Trading 360. I'm Marley Caden. It's time for the big three. We've got 3 stocks for you today, 3 charts. Rick Ducat will take us through the charts, here to take us through the trades.
Prepping what you want to say on earnings. The #1 thing impacting a lot of these companies is tariffs. And then all of a sudden last week, it changes. Do you scrap your whole year plan? Probably not. Right? Are you ready to talk about it? Probably not. Are annoying people like me going to ask about it? You bet. And so you have to deal with this. It is very touch and go. And I think that's why, from an operating perspective, I think what you want to do is you want to have your plan. You have multiple of them. You know which one you're going to pull depending on what happens. When dealing with the investors, I think what we have to do is
Futures bouncing.
Worst case, here's the best case. Let's figure out the probability and figure out where we want to be between.
Maybe this is too inside baseball singing, but like we all, I think on this call at least, we have an idea of how much prep from management teams goes into the earnings call and how they've all signed off on the messaging. And do you as an analyst, when you know that some event has happened, that now they have to go quote unquote off script, do you get any sense of like how this team might operate just their day-to-day business based on how you feel like they adjusted to, as you said, the question that you feel like you have to ask given some kind of current event that may have come up around the call?
I think it's such a great insight. I think that we're all people, right? And so whether we're journalists or analysts or operators, we prep for something. Like I didn't plan on telling you.
Welcome back. Results from Marvell, the latest indicator of AI demand. Christina Partsinevelos has more read-through from those earnings. Holding up here, KP.
Oh, definitely holding up, but there's a reason. I'll explain. So Marvell management showing that AI infrastructure spending isn't slowing down by doing something companies almost never do in quarterly earnings calls. They guide 2 years out on fiscal 2028 revenue and earnings. That kind of visibility is quite rare. JP Morgan calling it, quote, a strong multi-year revenue outlook.
Marvell.
Quote, against a high dose of skepticism. And heading into this print, there definitely was
Marvell, big gap up today.
Only at about 3% year to date, underperforming the SMH into the print. It's also the second big data point in just
Robinhood. Still basing Robinhood. Microsoft trying to break out of this base. Palantir reversing day 8, moving back up to the 50-day. Palantir looking pretty strong.
Marvell's CEO Matt Murphy said it plainly on the call. Quote, look at our results that we're guiding. Look at our outlook for this year. Look at our outlook for next year.
AeroVironment, AVAV. What are some of these stocks like Lockheed Martin doing? Consolidating. SCHD. Okay, pulling back a bit. SPHD. Pulling back a bit. JP Morgan in Premium Income. JEPQ. Holding up fairly well. Microsoft.
A big portion of Marvell's business is, of course, the custom chips. Amazon is a big partner. So on the call, they did speak about how their training development is underway. There's been no issues. The other part is connectivity. So Marvell also works on how a lot of data centers talk to each other and then how chips talk to each other within the data center. So that business,
Microsoft watching. S&P bouncing a bit. Yeah, speaking of routers, let's take a look at Cisco. Lionsgate continues. Lionsgate. Cisco. Oracle. Oracle coming off the low. Okay, maybe we start phase 2 soon, hopefully. Oracle, been sitting on ORCX for a while. That's down a bit. Longer term investments.
It has definitely been a wild swing. It's definitely been a sector that's been recovering a little bit, but obviously after some really horrific news and some horrific fears that have been stoked by a lot of people.
What gives you
Microsoft.
some faith that this is not an existential
Apple trying to push a bit higher. Apple thought we were going to do something yesterday. We slipped lower today with everything else. Tesla trying to turn. Tesla trying to come off the low. We got 5 days, 6 days above. Last couple of weeks, we've been holding above the 200-day, basically. Like red line is the 200-day.
I also really like the energy around some of these CEOs who are really into the fight. Some people who have made a lot of
Bitcoin, nothing there. Bitcoin, nothing there.
people like Mark Benioff and Neil Boozary, and we had ServiceNow at our conference, the Citizens Tech Conference here in San Francisco this week, watching the kind of the anger, the denial anger curve. They're ready to fight, and there are going to be some big winners here, but it's going to be a really interesting fight for the next 5 to 10 years.
I think there's two issues when it comes to the software concerns that I hear, Mark. It's the existential ones, which I think you just addressed, and what the company I think is fired up so many.
ServiceNow, nice reversal off the low. ServiceNow looks good.
And moats and questions about what to pay for those businesses in this new reality, which may be more what the market is actually factoring in here.
Sir, I think you're right. I think the question is, we're in this phase, and the market does not like question marks. They like surety. And for years, with the move to the cloud and you see licenses, you were really assured of where the revenue growth was and what next year looked like well in advance of where you were in the current year. Markets love that. This newfound fear is exactly that. That being said, these companies are getting wildly more efficient with AI. The pricing power that they'll have with that, whether it's per seat or a different way, is really. And that was the conversation, frankly, at the tech conference. How do you price it? We're not fear that this is not going to be.
What is VIX doing? VIX.
The fear is, what does it cost, and how are you going to
VIX off the highs.
Like for multiples. That was the conversation this week.
And what's the answer?
Well, I think it depends. I mean, I think
S&P pulling back some more now.
Embedded deeply. Like we mentioned, Salesforce. Like I mentioned, certain companies. I would bet on a Neil Boozary at Workday that they will figure out what that means and how they.
Hedge flows topping out 6,800, 6,805. There's a spread there. They came in around 9:30. I'm sorry, around 10 o'clock or so. At the open, no, it was right after the open, 9:45. 9:45 came in. This level here at 6,805.
Same thing with Workday. We don't really talk about PeopleSoft anymore, but what Neil Boozary did and Dave Duffield did with Workday is astounding. You will see that again here, and I think that is the question mark for the next few years. The winners will be that much bigger.
Futures coming back.
That much faster, but I am not fearful that this software industry is dead.
Wow. PeopleSoft. I don't think we've had a PeopleSoft reference on our air in some time, Mark. Yeah, and you're right. ServiceNow is up 22% in about 4 weeks. I do want to get you on the IPO calendar and whether or not you think it's thinning or whether it's in danger of thinning relative to expectations at the beginning of the year.
Yeah, it's a good question. I mean, our backlog is strong here, Carl, at Citizens. I think the width of that backlog has grown, so it's not just tech and it's not just cyber, it's just AI. So I think that's the question mark. There is a little bit of a pause. The last few IPOs in technology have not performed well in the aftermarket, although the companies have executed. I think there is a rapid ascent for that IPO market if they see a couple winners. And I think they see a couple people. But there are people waiting for the biggie. There are people waiting to see one of the big five go public this year. I think that will happen. I think the IPO window is alive and well. Pricing is more important than the fact that we don't have enough quality companies. We do.
So your advice is to buy on the dips?
My advice is buy on the dip.
That's what you guys are doing?
Be long term. That's what we're doing. Be patient, be long term, bet the best, bet the I can't say it enough. Anil Bhusri coming back to work day is a statement, a loud statement that he wants to be in the game for the next few years as AI revolutionizes every part of this economy, including him.
Mark, great stuff. Good insight, especially given where you are and what you've seen lately. Mark Lehman over at Citizens. Thanks so much.
Thank you.
Fed Governor Stephen Myron is with us next. His reaction to this morning's jobs report, whether he once again plans to push for lower interest rates than the rest of the committee at this month's meeting. That's coming up in just a few minutes.
Plus, watching the financials, today's worst performing sector, the KBE, getting hit a bit today. Although, as we said earlier, we are off the session lows. Dow's down 580.
Okay, futures, another bounce. Just expecting more chop today. I'm not very active only because the markets, I don't think, are truly giving us a direction other than down. We're below 6,800, so we want to stay risk off for now. Let's go take a look at junk bonds. VIX is pulling back. VIX pulling back off the high, so that's a good sign. Let's see, junk bonds. Junk bonds hammer off the low. Okay, so below the 50-day, we're risk off. Bitcoin also not giving us a good signal. So this is risk off as well for now. Bitcoin back below 72,000. We need to stay above 72,000, break above the 50-day. Overhead at 75,000. Biotechs and small caps, those are lower. XBI. Okay, IBB. These are all risky assets. Hence, when they're not buying, we're not trending. This is risk off. Risk off presently taking precedence. So I'm not active. Buying a few things if Microsoft can continue, for example, or software. Software got beat up already, starting to bounce, showing signs of institutions. I'll buy that. Stocks like Oracle at the lows. Looking for this to turn up. Oracle. You could trade ORCX as well. Okay, I could see this up at $30 at some point, $30, $40. ORCX. Love to see that much higher. Maybe a butterfly, maybe a call fly on Oracle. Oracle. Let's see what they got for January. See if there's anything in January. 160. Okay, there's a lot of calls overhead being bought out in January.
Let's get a CNBC News update with Leslie Picker. Morning, Leslie.
Good morning, Carl. The Department of Justice has released additional Jeffrey Epstein files that include uncorroborated accusations of sexual abuse by a woman against President Trump. Press Secretary Caroline Leavitt called the allegations baseless and backed by zero credible evidence. The president has consistently denied any wrongdoing in connection with Epstein.
The Senate late yesterday passed a bill known as COPA 2.0, or the Children and Teens Online Privacy Protection Act. It aims to create new safeguards for kids online, such as blocking platforms from collecting their personal data without permission. The bill faces an uncertain future in the House. And investigators are looking for leads in the search for Nancy Guthrie, fanning out across her Tucson neighborhood Thursday, asking residents if they had any internet disruptions the night of her appearance. That's according to NBC News. There has been speculation that the suspect seen in the door cam video may have had a Wi-Fi jammer on him. The FBI and Sheriff's Department have yet to comment. I'll send it back to you, Sarah.
Why would you want to take somebody that old? That just makes no sense.
Leslie, thank you very much. Developing news here in Washington about those tariff refunds. Eamon Jabbers with the story. Is that happening, Eamon?
Well, we're not sure if it's happening, Sarah. We got a new filing here from Customs and Border Protection in the Court of International Trade, and what the Bureau is saying here is that if they can't comply with the judge's order to move forward with these refunds, and the reason is technical. They have a system which they call ACE, which handles what they call the liquidation of the tariffs from previous years. Remember, you kind of pay an estimated tariff, and then they liquidate the tariff and tell you what you actually owe at some point down the line. That process, Customs is telling the court, is overwhelmed now with people requesting refunds, and they don't have the capacity to adjudicate all of that with the existing software and manpower that they have. And so what Customs is saying to the court here is they would like to have an additional 45-day period to try to get a new process up and running. So effectively, they're saying, we're trying to comply, but we can't for bureaucratic and technical reasons, and we're going to need some kind of a delay here. So TBD on when those refunds might actually get paid out, but the short answer is certainly not today.
Yeah, Eamon, I mean, no one's arguing that it's easy, but they did tell the courts that refunds would be automatic and assured, and that's how they avoided emergency relief.
Yeah, that's right. Now it turns out that a little bit less assured than this. What they're citing in this filing, Carl, is this ACE system that they use to actually what they call liquidate the tariffs. And they're saying that this system is overwhelmed. They need more
Microsoft off the high.
More, edits to the software.
Okay, so we're just kind of sitting here. Looks like everybody is taking a break. S&P not moving. Banging out of range. Can we break through this level, push higher? Watch MACD, watch the volume.
Thank you, Eamon. Eamon Jabbers. Up next, Fed Governor Stephen Myron's first reaction to the job report, whether it changes the outlook for the Fed rate decision. That's coming up in a couple weeks. Myron consistently dissenting at the recent meetings. He's going to join us on the other side of the break. And watching the intraday market action here, stocks are trying to make a little bit of a comeback once again. The pattern.
Okay, we need a hammer on the S&P.
Still lower. Energy is leading the charge here with that spike in oil prices, and looks like consumer staples are holding up the best as well.
My opening day roundtable, Tom Essay, Center for Research Founder, alongside Galfine Senior Reporters Brooke DePalma and Estray. I mean, Tom, you acted like that when you started on the street, right?
Yeah, not so much. I would have been terrified to do something like that and then show up to work on Monday. But that was a long time ago, and it's definitely a little bit of culture, but I think it's probably a lesson to be learned in this for those young people. And hopefully they learn it.
Well, I will keep moving here because it's a big day for markets. Seeing the markets under pressure after that really horrific jobs report, Tom. What are the lessons to be learned after a report like this?
So everybody's sort of making the assumption that the economy is fine, and I get it. Most of the data is showing pretty solid growth. But the reality is that we are still in a labor market that's a bit in flux. Now, I don't think the negative 92,000 number is necessarily exactly correct. I think that there was a strike that added 1,000, and then the weather did have some sort of impact. But the reality is we are in a no hire, no fire labor market. And that's fine as long as it's stable. But if all of a sudden it can quickly go to a firing and layoff labor market, then we have an economic problem, and that is exactly what we do not need, given all the other headaches we have.
Brooke, you've been picking apart this report. You've probably heard me in the open. I think AI is starting to take jobs, but prove me wrong. What did you see in the report?
I mean, what we did here was certainly the impact on the White House. She doesn't go to what the impact of AI and able to look after emergency information services. Now, possession of 11,000 jobs. trend that we've been seeing over the past year. And the Challenger brand Christmas pointing out in their data, their report yesterday, the impact of AI on about 4,700 jobs in the month of February alone. We've also heard from multiple different companies, including Amazon and Block, about AI-related layoffs. But on top of that, too, keep in mind, we did get that major report from Anthropic as well. And given that report from Anthropic, it shouted out that people who are younger are going to be impacted by AI the most. And so I took a look in the BLS report, and what we've seen over the past year is an uptick, or rather a tick just a slight lower, down to about 7.4% compared to what we saw last year for ages 20 to 24 of 8.3%. And so it'll be interesting to see how exactly this all plays out as AI certainly takes a role in the workforce.
Good stuff there, Brooke. And that is why this report bothers me. Top of mind amongst all the concerns I have with this report, it's jobs slowing down. In fact, we lost jobs. At the same time, gas prices are going up because of the war against Iran. That is not a combination for strong economic growth this spring.
No, and as one of our guests pointed out, this speaks to fears of stagflation. I mean, you are looking at Brent right now that's around $90 a barrel. The longer that this goes, the more the risk that you will see prices that are inflation that goes higher because of these higher energy prices. At some point, there is demand destruction, but I mean, then you're looking at slower growth as well. So this report didn't spoke to these kinds of fears. And the fact that you have AI layered on top of all of this. I mean, this is an industry that up through 2030 is expected to spend trillions of dollars on AI are expected to be spent. And the purpose is to replace human tasks. So you have to think to yourself that, yes, there will be displacement. The question is, what will come on the other side of this, on the other end of this? Corporations' biggest expense right now is labor, human labor. And so all of this money that's being spent on there, this is what is sort of driving some of these fears as well.
Tom, I think Inez nailed it with the stagflation call out. Here's what I'm also concerned about. Why would employers now go out there and aggressively hire this month in April against the backdrop of rising geopolitical uncertainty? Basically, I'm trying to say is that I don't see a way out of another bad employment report.
Yeah, this is what we don't need right now, right? I think that the economy is not going gangbusters like all of the data may imply, or most of the data may imply. We are not far from all of a sudden a stagnant economy led by a labor market that begins to contract. And now we have even less reason to hire. And all the costs are going to go up in the short term because oil is spiking higher. Brent's over $90 as we're talking right now. And so you're right. I think that this just furthers the paralysis in the labor market. And that is a risk. We have not seen it show up yet in declines in consumer spending or the ISM PMIs, but that can happen very quickly. And again, given the private credit worries we have, given the AI anxiety worries we have, and now the war, if we all of a sudden have to start thinking about the slowing economy, then this market is going to drop, and it's going to be painful.
Yeah, no, it's good stuff, Tom. Lee, I want to bring up a clip that we put together. All week we've been talking to top mind in the street, trying to get a sense of where you hide out against a backdrop like this.
I get very concerned if you start seeing investors kind of things like Staples, which have trading at multiples we haven't seen in 20 years. I think investors need to be less complacent, but more careful about some of the automatic moves in the handbook war when a war starts.
The whole name of the game with the markets is, does oil pass through the Straits of Hormuz? If they don't get through, then you have problems like you saw yesterday, which is inflation, which means no Fed cuts, which means risk to private credit, which means yields blowing out.
Whatever the outside catalyst is, when you have what we call an exogenous variable out there, and war is a C-state exogenous variable, meaning it's outside of anyone's control. It's not really gameable by anyone on the inside. It's a time to kind of be happy when you have cash and just, I like to step back and do homework.
Tom, final word to you. What's the safety trade right now?
Broadcom breaking out.
Domestic energy, XOP to a lesser degree, XLE. If oil is going to crash everything, then those stocks are going to do well. So that's your purest play edge. Other than that,
AVGL going.
Lower beta, it'll hold up better.
Good stuff, you all. Have a great weekend. Thank you, Tom, Brooke. And then straight ahead, my my conversation with General
DMEC.
So Jessica, is there anyone you like?
Like anyone here?
Oh my gosh, let's do home court explorer.
Yes, will help you shop, quote, and buy the right coverage for you, even if it's not with us.
What do you think of this option? These look so good together.
Don't hate me. I just told him that you're interested.
You did not.
Oh, I know. Let's prank call each other.
That's not how that works, Jamie.
VBIX.
It's the true all-in-one paint. No stripping, sanding, or priming needed. Stir, paint, and watch your vision quickly come to life beyond paint. With the ability to bond to any surface, made for everyone, from the DIYer to the seasoned professional. It's beyond just paint. It's saving time, money, and effort. So we can dream big with even bigger results. Beyond paint. An all-in-one solution to transform any space.
VBIX.
Day is almost here. Get your Family Kingdom season pass for just $99.99. Online now through March 27th. Enjoy unlimited fun, rides, and memories all season long. Your full season thrill-seeking fun starts here.
Can you cover this as well?
No, sorry.
Broadcom on the move. Broadcom.
Stay connected to the markets with Schwab Network.
Tune in 24 hours a day, 7 days a week on schwabnetwork.com
And on all your favorite streaming services. Schwab Network. Available anytime, anywhere, on any device for free.
Whether you're an experienced investor or just getting started, Charles Schwab offers a
SVEB.
webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast,
GXAR.
like trend analysis, price patterns, moving averages, also
Software.
much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
SVEB. GXAR.
Welcome back to Trading 360. I'm Marley Caden. It's time now for the disruptors. George Tillis, our senior markets correspondent, here with today's company, The Trade Desk. Now, there was a report of a partnership with OpenAI yesterday. We saw a huge move to the upside for the company. But today, Wedbush downgrading the stock. George, what's behind that call?
I think this is a good situation, or an interesting situation. I mean, first off, the Trade Desk was a darling just going back about 5 years ago. It's been down significantly over the past few years. And in fact, it's down about 75% off its peak in 2024. And this was effectively a leader in demand-side advertising technology. And one of the challenges they have been facing is really some competition, especially from companies like Amazon, from their demand-side technology platform, basically connecting publishers of ads with buyers. And that's essentially encroached on the market share from the Trade Desk. And the Trade Desk has effectively been trying to ramp up its R&D and enhance its technology software platform to keep up. But it's been facing some structural challenges, and that's why the stock's been down. Now, this company effectively is still obviously in business. It's still got a great technology. One of the things that Wedbush is talking about is that with their call and their downgraded the stock to underperform at $23 is it's more of a software native platform versus a data platform. And the deal with OpenAI, which again we talked about many times over the past few months, that OpenAI is eventually going to open up their platform to advertising and generate revenue. They have done that. So instead of building their own demand-side platform or ad technologies, they're going to integrate other companies' technologies, which makes sense. So the Trade Desk is now a partner with them. But the challenge, and this is what Wedbush talks about, is they're not an exclusive partner with the Trade Desk. And in fact, the Trade Desk's value really comes from its software versus the data on its platform, which again, Amazon has both of them. They essentially have their data on the platform, but also their software platform. So that's what they're looking at as a challenge for the Trade Desk, and ultimately their cost of R&D has been very expensive, which has encroached on the earnings profile over the past 8 or 9 months.
All right, George. So with this move to the upside, that we've seen because of the reaction to this headline, we are trading lower today, but kind of more in line with the overall markets here. How would you look to trade the Trade Desk?
Well, so there's a couple things you can do is, looking at the price action, first it's trading below its 50-day moving average. You'll notice that on the gap day just yesterday, it hit that level and it basically stopped. And so now it's pulling back off of today's midpoint range. It's still also the intermediate and longer term trend, if you want, is down with the stock trading below its 200-day moving average. So it's bearish. The challenge with shorting a stock like this outright is effectively that the valuation multiple is coming down significantly at around 12 times earnings. So point is that this will be a quarter-to-quarter situation. If they demonstrate some improvement on the quarterly earnings next, that might be a major trend reversal. But between now and then, we have to go bearish. So I'm going to go very narrow term, and I'm going to sell next week's call spread. So I'm essentially going to be selling the $30 call and then buying the $33 call above that. So it's basically a bear call spread. Altogether, because these option premiums are rarely cheap right now because everyone's buying puts versus calls, selling calls doesn't make you a lot. So you only earn in this trade about 50 cents a share or $50 a contract. So the whole premise behind the trade is to have the stock maintain levels below $30 between now and expiration next week. 38.5.
Watch Tesla.
And then, fortunately, because the option premiums are very low in these calls, that your risk on this trade is $2.50, and that'll occur if the stock hits 33 or higher. So you're only earning 50 cents. Your risk is $2.50. Typically, I like a little bit better risk to reward, but that's all I have for you today because, again, it's a tough one to short because of the nature of their business, which is still profitable. It's just demonstrating decelerating earnings growth. And right now, put premium is more expensive than call premium.
All right, and we are trading right below that $30 level right now at $29.35 for the Trade Desk. George, we appreciate you being with us to break down that call from Wedbush and also for the example trade on the Trade Desk. Coming up next, we've got our 360 round. We'll be diving into the earnings from Marvell as shares rally in reaction to the numbers. We'll break it all down on Trading 360. Stay with us.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's market.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break level for this stock.
That could certainly be a short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
Hey, Dad, I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab.
Is the population that is so outraged at their government for taking a country that has the second largest natural gas reserves in the world, the third largest crude oil reserves, an educated population, an ancient civilization, and running it into a ditch economically at home and getting isolated abroad. Now, all of these are factors, and of course, also watching who is the new Supreme Leader. Hasn't been selected yet. There are rumors that
Tesla.
Ayatollah Khamenei's son. That would not be good news
news, I would not think President Trump wants to have a say in this. That's perhaps a bit more aspirational. I'd love to see him have a say. And he's also said there must be unconditional surrender. Well, this is a regime that
I think it's probably, undoubtable that I'm.
All right, trying to break above this level. It's the third time we're coming up here. Hedge flows saying maybe we break higher. Hedge flows rising. We got this red overhead. All of this red is telling you high volatility in this zone. So we can see fast moves. That's a 25-point move in the last 20 minutes. Tesla trying to push higher. Palantir high of the day. Palantir at the high of the day. Palantir. The 50-day is right overhead. Palantir, high of the day. Going to take out yesterday's high. The 50-day is at 157.39. Palantir looking good. Palantir is just about ready to take out yesterday's high.
They've been in the last several months. So there's nothing in inflation expectations thus far that tells me that we're in concern of that inflation.
Okay, NVIDIA turning up. NVIDIA turning. NVIDIA is about to go here.
Governor Myron, especially making your case right before you have to go on blackout period ahead of the Fed meeting. Thank you. It's good to see you.
Thanks for having me.
Stephen Myron, Fed Governor. My mom is
Microsoft.
I forgot which time our show is.
NVIDIA, Microsoft going.
The new market paper validating one of the hottest trades on the street right now. We'll explain it when Money Movers continues. AI has made it so that there's lower hiring of people who are kind of new college graduates, but higher hiring for people who are like a little bit in because they're so much more productive and so much more valuable. And so firms,
I don't know, kids coming out of college, if they understand AI, could take over. S&P looking for that breakout. S&P looking for the breakout, head towards 6,800. Okay. We keep looking at that 6,800. Atreus is still talking? Jeez.
So, yeah, that's a concern because as the price goes up, obviously the price of a gallon of gas goes up very quickly. It's surprising it shouldn't because these are all futures contracts and they bought that at a much lower rate, but that's reality. And then it's a factor of production in everything that we make and do and so forth. So it is understandable that there will be concerns as prices do ease up. Affordability is a huge issue in the midterm elections that are coming up. And so this is why President Trump's trying to mitigate this. He said, we'll escort the tankers. We'll underwrite the insurance, as I mentioned.
Low tick alert -800.
Low tech getting smacked down.
Russian crude then was agreed during the tariff negotiations because we don't want to see the price spike further. You may also see a release of the strategic reserves that are held by China, the EU, and even perhaps the United States. But all of these are just reducing how much it would go up.
Okay, we got rejected.
There were some signs of possible AI displacement in the jobs number today, with information services shedding 11,000. But there may be a new indicator that can better track the labor market of AI as it happens. Drew DeBosa has more on that in today's Tech Check. Hey, Dee.
Hey, good morning, Carl. This really has to happen. So Anthropic yesterday did a new labor study using its own data. This is actual usage from millions of Claude conversations to map which jobs AI is already displacing and which ones it's not yet touching. This displacement map, we're going to call it, lines up with where investors are already putting their money. That is the halo trade, heavy assets, low obsolescence. So capital is moving out of the knowledge economy stocks and into
Back down to VWAP.
economy. Goldman's halo basket, it has outperformed capital like
Rejected again.
percentage points since the start of the year. Now, Anthropic's data shows why. For computer programmers, 75% of their tasks already covered.
Palantir making new highs. Palantir. Or we'll come back to the S&P in a while. Palantir making new highs.
Construction, agriculture, transportation, installation, and repair. Near zero penetration today. That is telling us that the physical economy is the last place that AI will reach. Take a look at this other chart from the study. The blue is what AI could theoretically do. The red is what it's actually doing today. So you've got office and admin. Huge blue area. Small red for now. Same with legal, sales, finance. That's the second wave, and it maps almost perfectly to where enterprise deals are actually landing. Salesforce, Intuit, DocuSign, Thomson Reuters are all doing deals with AI companies. Anthropic's data backs up part of what we heard from Hassett earlier on our air, and you guys just ran a soundbite, and that is that experienced workers in AI-exposed jobs, they are more productive. That is certainly showing up in the data. But here's the part he's not emphasizing. Hiring of 22 to 25-year-olds in those same jobs has dropped 14% since ChatGPT launched. So unemployment, it hasn't moved because companies aren't firing people. They're just not hiring the next ones. And that is great for GDP today, but that is a problem for the labor market tomorrow, and it won't show up in the payrolls numbers. I mean, it raises so many questions.
Palantir breaking out.
From a policy perspective, what do you do about this if we are going to see this kind of shock? Does it demand some sort of fiscal response? I mean, it's not the typical interest rates that the Fed can deal with.
You know, I wish I had even the inkling of an answer to that question, but it is just such a huge unknown, and it's a huge topic here. Washington on Main Street, you know, young people are just having a harder time finding jobs, and what this data from Anthropic shows us is essentially there's no stopping this, right? And then you look across the stock market at public companies, and they're all doing these deals. You get layoffs. Some of them are, you know, using AI as an excuse, but some of them are really real. You've got companies that are growing, that are profitable, that are laying off parts of their workforce, or as the data shows, just not hiring young people. This is going to be a massive, massive question that policymakers are going to have to be grappling with in the years ahead. And, you know, just everything that I see, everyone that I talk to, there is no answer in how to slow this. What I do hear, what young people can do, I don't want to make this all doom and gloom, use these tools, get to know them. That is what I overwhelmingly hear. Skill up so that you're valuable. Exactly.
Yeah. Even as we're talking, Schmidt of the Fed on the tape, labor market under structural, not cyclical strain. And the more it happens, the more it will drive public sentiment. Could it have implications on data center development or any of the AI CapEx build out?
Absolutely. And, there's an argument here that says, okay, we've been through this before with the internet and even the Industrial Revolution, and the workforce always skills up. I don't know if it's that simple this time around. The AI leap is so different, I guess. You could, it's as big as anything else, but there might be some gap period, right, where the labor market does really struggle before everyone can upskill. And we're seeing exactly where it's amazing that Anthropic and some of the other labs are putting out this data, because it tells us exactly, based on which sectors it's coming for now and where it's going.
But that is still up for debate. I mean, a lot of CEOs in the tech space disagree with the fact that it is just going to displace all of these jobs and not make them more productive and not make people hire more. So it's still a debate, and I don't think it's definitive what we're seeing in the data yet. Even in today's jobs report, nothing glaring on that front. Thank you, Deirdre. Got CPI next week, GDP next week, and some earnings. Be another event. We'll watch the headlines from Iran.
Rest up. Let's get to the judge.
Carl, thank you very much. Welcome to the halftime report. I'm Scott Wapner. Front and center this hour, sinking stocks, a huge jobs miss, another spike in oil, and it has caused some selling in the market yet again. We discuss and debate with the investment committee for the hour today. Shannon Sakosha, Jim Lebenthal, Stephen Weiss, and Josh Brown. We will take you to the markets. We're weak, obviously, across the board, off the worst levels, but nonetheless, you do have almost 1% or more declines for everything, clearly, but the NASDAQ, which is about 0.75%. I mentioned what's really, Steve, driving the action today. The jobs miss, the oil, gas prices are up. Qatar warning that the war could shut down production for the region, drive oil to $150 a barrel. B of A says only persistent oil spikes really matter. The VIX at 28 earlier today. What's on your mind as we wrap up what's been a pretty turbulent and down week?
Yeah. So look, this is a daily occurrence. We start out on the lows, the overnight futures really at the bottom, and then we get buyers, market hunters coming in or short covering. And I don't see that changing anytime soon, except for the fact that I have to believe the president is looking at this as he does. He pays attention to the market, pays attention to the polls, and saying, hey, we got to get out of here sooner. Now, oil and jobs are an issue, because even if when they shut in the oil, meaning production, because the silos.
Okay, we're through 155. So what's happening? Shorts are covering.
See an extended inflationary bump. So the question then becomes, does the Fed look through it? And I don't know about that, except for the fact that the job numbers were so bad, they're going to have to look through it. But again, that's 1 month. We're basically zero over the last 2 months. So what I believe is this market's a lot different. I was thinking about 1970s when you had the oil shock. Yeah. At the same time, you had low presidential approval ratings and you had inflation. So we've got 3 of those elements in place. What's different now, though, is that the market's different. The investors in the market are different, and they look at these as opportunities. And I agree.
Right. I mean, the situation's obviously a little different. We don't have an oil embargo. You don't have it to that extreme. Yeah. The president's approval ratings may be low, but you're not in the what at that period of time Jimmy Carter himself described as this malaise over the country. The economy's still in pretty good shape.
And I'm not suggesting that. I think that these are buying opportunities. The only question is which buying opportunity to take advantage of. If you did it 2 days ago, you'd say, wow, I could have bought cheaper today. If you did it yesterday, say I could have bought cheaper today. So I think at some point people sit in their hands and say, hey, you know what? Let me wait for a bottom.
I mean, to play that one even step further, it's not like we necessarily have we don't have a crisis of confidence to play again off of what the president back then was suggesting. The economy's pretty good. I mean, I know the jobs number was lousy, but there's a lot of noise within it. Let's wait a little bit. Let's wait a little bit before we determine that all of a sudden this great economic picture that we thought we were painting is all of a sudden, watercolors and it's running off the page.
And I think that the transitory nature of what we typically see from an oil shock such as this, if you think about core versus headline inflation, we know that the Fed is generally looking for pass-through to services. And we'd have to have a very sustained period of time where oil prices are up near this level for us to see that eventual transmission. The challenge is you go back over the course of the last...
Palantir is still going.
There already was some expectation that perhaps the Fed was a little bit more concerned about inflation than they were telegraphing in those press conferences. So I don't
All right, futures trying to push through this area as well.
I think it's the combination of
NVIDIA trying to take out the high. There goes Snowflake. Snowflake on the move. Snowflake on the move. Okay, coming off the low, Snowflake.
And so I think those are culminating and compounding to this movement in the long end of the curve, which is what I think we're seeing indicated in the equity markets. This concern about an unanchored 10-year, I think that's a real challenge.
The Fed was already on hold coming into this upcoming meeting, by all accounts. So it's not like these events have all of a sudden forced a 180, right? So, the market's going to sit back. It's had a rough week. It's going to than anything else.
Snowflake rising.
Just don't know what's going to develop when you're at a time of conflict. How do you see it?
Well, start with where Steve was, that this has been a market that on an almost daily basis has rallied into the close. Unfortunately, I would be surprised if that happens today for the reasons you just mentioned, Scott. We're going into the weekend. We're going into 3 days. The markets are closed and anything can happen. Now, anything can happen on the positive side as well, but in what's going on right now, the market is, I think, likely to look at the final hours of trading and say, maybe it's time to take a little risk off, or at least not time to dive in just yet. The good news is, I do think this market pivots around one particular piece of news that we're waiting for, which is tankers flowing through, running through the Straits of Hormuz. I can't tell you when that's going to happen. I can't tell you how that's going to happen.
Do you agree with, so you've got Qatar talking about 150 a barrel, okay? Yeah. That obviously gets the market's temperature up, whether that's likely or not, who knows? Yeah. And we can't judge that. It's not even worth opining on it. But when Bank of America says only persistent oil spikes really matter, can we say we agree with that?
We can definitely say we agree with that. And that's why everything we're talking about today is a temporary factor. I'm not sitting here and saying that long-term investors should start selling their stocks. There's no indication that we're going into a recession.
I mean, look at WTI now, right? Up 11% today. We are on the brink of 90. Now we're there.
Yeah, I owned crude right now. If I were an oil trader, I'd be selling a third to a half of my position today.
Yeah, I would be too.
Wake up and say, okay, we're pulling back.
And the same thing on treasuries. You should perhaps be extending duration in this environment because there is going to be a response.
So, Josh, what's on your mind as you've heard everybody on the panel here give their views, and you look at the markets in the manner in which you always do?
Yeah, I think I'm with Weiss on the oil price spike. Not really. It doesn't appear that the stock market has bought into that, not just judging by the prices of the equities themselves. They are not acting as though this is the new oil price regime.
Core weave off the low.
More green in this area of the market. You're just really not seeing it. This is the highest oil's traded since September of 2023, and it's the biggest weekly jump since 2022. But that's what it is right now. It's a weekly jump. It's not more than that. It certainly could be. But I have 20 energy stocks on my list of best stocks in the market. And the median return for these names is 26% on a year-to-date basis.
Palantir still driving higher. Palantir.
These stocks are not following through on what we're seeing happen with WTI crude at the moment. But when you think about stocks like Texas Pacific Land, which is up 83% year-to-date, a lot of traders in that name. Valero up 40%. Baker Hughes up 33%. These stocks have been going up for a long time, and today they're barely doing anything. And for me, that's a powerful signal that tells me big institutional money is not buying in on $150 crude. I would also just point out, big picture, it is a Friday, and we are, whether Congress has declared it or not, we're not, at war, have servicemen and women at risk, the assets in the region. It's very unpredictable, obviously, and it's a live fire zone. So seeing a risk-off move on a Friday, knowing that we have this gap coming up of 2 days where anything can happen, it actually seems very orderly to me. It makes a lot of sense.
Yeah, so far, for sure.
Futures pulling back a bit more.
This week progresses. There's a lot of stuff on the radar.
Palantir.
Noting the 3-day momentum.
Low tick alert minus 800.
Thursday, the fourth worst 3-day stretch in the last 2.5 years for MTUM. If you look, it's down almost 4% over the past 3 days. There's some pretty popular names within this orbit, okay? Walmart down 3%.
Palantir.
The banks like JPM and Goldman Sachs, J&J and Micron and GE Aerospace and CAT.
Lam Research leads the list to the downside, down 10.5%. Shan, what do we make of that slide in momentum? I guess it's not surprising when you have the moment of war impacting sentiment on the street.
Well, I think that's where you mentioned confidence earlier, Scott. This is where we're seeing a little bit of a decay in confidence is in these momentum names. But I think it's important, too. There's a couple of idiosyncratic or stock-specific stories that are working here in terms of bringing a couple of these stocks down on this list. But I think overarchingly, you're looking at an environment where we're now into kind of day 6. There is the potential that investors want to add a little bit more defense. And that defense is likely to come into some of the areas where you haven't seen momentum, where you potentially are seeing a bit of that value tilt, if you will.
You mean defensive names in the market?
Yeah, I think that you are seeing. You could
Because it's
see.
been a really tough week for that trade. Pull up a week of like staples. Pull up healthcare. Since I mentioned J&J being on the list, it's kind of nowhere to hide other than maybe a couple of mega cap stocks you can feel a little bit better.
So that's why I was just going to clarify. Not typical defensives, but I think some of the stocks that have been stores of value during previous periods of weakness in the stock market and momentum are seeing a bit of a bid. And I wouldn't be surprised necessarily to see some of the mega cap tech stocks, some of the stronger discretionary names actually start to get a bid as we go into next week, Scott, because I do feel like this is an opportunity to perhaps increase the quality of the portfolio. And some of these momentum names are just gotten too far ahead of themselves in this environment.
I feel like, Weiss, the most important stocks right now are the banks. Okay, I mentioned the unwind in momentum from the Goldman down 5% or JPM, which has been trouble, but I just can't imagine a scenario in which the banks keep going down and people feel better about where this market is.
Yeah, and what you're really doing damage to is to the.
All right, we're starting to see some highs here. We're at the 50-day. Palantir's at the 50-day.
So nobody's doing an IPO, right now until you get stability in the market.
Well, there's one, and we'll talk about that later. So save that for later.
There'll be one here and there, but basically, and then you've got private credit, which is also hitting the banks. So a lot of headwinds. Look, I think Goldman is, that's the one I own, pretty well positioned. I believe JP Morgan is always well positioned. The question is now how long you have to wait for the M&A trade, the IPO trade.
Well, I mean, it's beyond that. It's Jimmy. It's assessing where we think the economy's going
exactly.
to.
With that, exactly.
That probably supersedes the IPO activity.
Those are indications of
deal making.
Yeah. Well, look, I mean, we just got the Atlanta Fed GDP up 0.1%. We haven't scare in the economy for quite some time, and in the last quarter, fourth quarter, we were talking about it from the perspective of a government shutdown, which was temporary. We knew that was going to end. Now we've got some signals here that the cushions that are built into the economy, strong economic growth, good labor market, they're kind of getting a little wobbly here, and definitely that's impacting the financial sector, which is dependent and expecting a strong, robust economy going forward. I do want to make clear, I'm not giving up on the idea of a robust, strong economy. I think there's reasons to expect it. Whether it's profit growth, whether it's low weekly initial jobless claims, there's a lot of reasons to think that this economy is still going to power through. But I go back to where I was just a minute ago. You do, as temporary as the oil spike is, the longer it lasts, the more damage it will do to things like profit margins. That's where people in corporate seats get a little worried about, hey, are profits going to come down? Do we need to start laying people off? So solve the oil problem. I think anytime you invest, you say, what's my base case? And then where is it more likely to go wrong? To the downside or to the upside? So with the economy base case, everybody's saying, we said it here, economy's doing pretty well. So where's it likely to go wrong? To me, to Jimmy's point that he was alluding to, it's more likely to go wrong to the downside. So, and that's my concern. I'm not doing anything about it, but that's my concern.
The private
Microsoft.
We're talking about that.
Just banging around here at the highs.
Especially since we were just talking about the financials, they've limited redemptions at a private credit fund. So it's the worst day since April for BlackRock. You can see that's the lows of the day, down more than 6%. You own the stock.
Yeah, we should expect this type of news to continue. And I think we've alluded to that over the last couple of weeks, that there have been some good news like Blackstone allowing some of its redemptions to be above the 5% gate. But there's no question that investors are now thinking, hey, I want to take my money out now while I can. So we should expect the next few quarters that there are redemption requests in excess of the limits. Generally, they're 5% per quarter limits. Now, there is a playbook for this. It's not a pleasant playbook, but it works out all right. And that's Blackstone with its B REIT from about 3 years ago. And it took about 2-3 quarters to work its way through. B REIT is on stable footing right now, generating good returns. There's nothing, by the way, in this news that speaks to corporate credit. It just speaks to what we were talking about, that investors are likely to pull money out and the gates will be put up.
The other note I wanted to hit, Josh, I'll start with you on that, is from Bank of America's Michael Hartnett, who always is really thoughtful in how he assesses what's happened in a week inside the markets, in which he says his top observation today is the week has shown the fragility of investor.
Chop, chop, chop. We've just been moving sideways just below the highs of the day since this morning.
What Jonathan Krinsky told us just the other day on Closing Bell. You cannot lose the semis. This market has already gone through the turbulence of the software trade, which may be getting a little bit of a bounce. Who knows if it's sustainable, but you cannot lose the semis, which are on pace now for the worst week since November.
Okay, I don't think Krinsky is wrong that we want the semis to be strong, and I agree with Hartnett that a lot of things people just started buying because they were going up, and then you hit some headline risk, and all of a sudden you see, all right, the accumulation beneath the surface is not as strong as we wanted. And the third thing I would say on the bearish side, like, nobody should be celebrating a rally that's led by the utilities, but that's where we are. Okay, fine. I take all of that. But I think days like today and most of what we saw this week, the IGV is now up 8% from the Citrini disaster. Was that the bottom? I'm not so sure. I think we're seeing a rally in a lot of these software stocks, and I'm happy because I did some bottom fishing in my software names. But I think it's counter trend. And I think a lot of the sell-offs that you're seeing today are also counter trend. And the bigger trend is not what today's tape looks like. Software strong and all these other areas being weak. I think it's the reverse. So I'm willing to take the other side of that. And I'm willing to say, okay, every once in a while in a bull market for the S&P 493, you're going to see these kinds of pullbacks. But the level of participation that we've seen this year and the level of dispersion and the level of people being willing to look at stocks they haven't looked at in 5 or 10 years, I still think that that's the prevailing trend. And so if I had to bet one way or the other, I would not take that, we're in a new environment. Now you want to be long software, short semis. I really don't think so. I would just say don't get gassed by these sort of counter trend bullish bear markets that are not the real story.
Yeah, well, that's a big story right there. The chips down 4%, as we were just talking about. And the idea, according to Krinsky, that these are just too big to fail. They matter too much, especially to where we are from an AI perspective. These stocks are now among the largest in the market. I obviously don't have to tell you that NVIDIA ranks at that degree, but there's broad.
Just sitting here watching the markets chopping around. Hedge flows. Okay, just sideways to slightly higher hedge flows.
These things are, to a certain extent, insulated from what's going on in the Middle East. The reason I say to a certain extent is, yes, there will be some inflationary pressures, but as we've all said, those inflationary pressures should be temporary. So this is a major cushion to the economy right now. The capital expenditures on data centers.
Need to see a trend. For now, it's just sideways chop, not doing anything until we either get a break to the upside or a break to the downside.
Yes, I'm sorry they go through the end of the year with the new tariffs. So that's not temporary. Yeah, but I mean, you would agree it's a one-time adjustment, right? I agree. I get that.
The reason that chips, I'm sorry, would be under pressure the way they are, not like a direct result of
Expect more chop until that hedge flow line either starts bolting higher or starts turn over and continue to move lower. The background is red. That's telling you high volatility is expected. Stability is at 3%. You can see in the top right up here, stability at 3%. The lower the number, the higher probability of quick moves.
But relative to where they were, they're still up so much over the last year. But the question then is, are people going to be more, anchored in valuation for a period of time because they're overvalued?
I think part of the point here too is that the market will be just fine.
Yeah.
You can quote unquote lose the semis for a minute,
Yeah.
so to speak, if you have software show some life. To counteract that, you can't have both.
Microsoft, the New York Fangs are backing off right now. ABCD patterns, not unusual this time of day.
In that spread, right? It had looked the opposite for at least the last year. I feel like when we've been talking about it. Yeah, Josh, go ahead real quick. Yep.
They said we couldn't lose the hyperscalers. We needed the Mag 7. Those stocks topped in October. I know it feels like, it was just the fall. That's 6 months ago. Those stocks topped 6 months ago. Think about how much money has been made in all of these other areas. Think about how many large caps are up 5 or 10% year to date already. We lost those stocks. It's honestly not the way the modern market works. These rotations are powerful.
I agree. Remember the conversation before that? You can't lose Apple. Apple's the engine of the market.
Yeah, but I mean, come on, the semis are a huge group. You can't lose the semis at the same time you're losing software. I mean, I think the market, the impact of that.
That's where the money goes.
But isn't this investors who are looking at fundamentally some things that have been perhaps oversold in this environment? Wouldn't you look at software? Because again, to your point, Judge, you're making a completely accurate point. The opportunities for software, AI obsolescence is now in the background of this narrative. And so if I'm looking at companies I've wanted to own for a while and I was waiting for perhaps that point at which I feel comfortable buying into them, some of these software companies are hitting that point now and they're away from the Middle East.
Do we feel better about Microsoft? Do we feel better about software? I know it's had a nice little move. You're going to have tests next week. Oracle's next week. Adobe's next week. We've had the best week for the IGV since April of 25. So Cyber's had a big week. So
Futures starting to turn back up now.
We have already seen that earnings reports have not.
Okay, hedge flow starting to rise a bit. Here's Microsoft, S&P turning back up a little bit. Still need to get through this high.
Looking for in these reports from like an Adobe is what are they doing with their cash? In Adobe's case, I want them buying back shares. In Oracle's case, I want lucid plans on how they are raising funds to fund all of these data center build out. But these are the questions that need to be answered. And unfortunately, as much as I believe in those two names, I think it's going to take many months before the bottom is really called. What you may be seeing here this week and last week is just short covering. I mean, they got to a point where the short said, "Hey, we beat these things into the ground enough. Let's take our profits."
Yeah, I don't feel like there's a lot of conviction.
Agreed. And so I think it's what happens. People that have to be in the market, that benchmark against the market, they say, "Okay, where can I go high in an area that's been decimated already, where my downside's minimal?" You're not going to hide an FTAI, right? You're not going to hide a
go high.
Right. Yeah, exactly. So you go hide in software. So at best, it's a tradable low. But from a long-term standpoint, I haven't seen them coming back to the IA.
Let's get one more thought on a group of stocks before we take our first break. It's airlines. Not surprisingly, worst week since April of 25, okay? For a variety of reasons, not the least of which jet fuel prices are surging, okay? Yep. That doesn't reverse itself right away. Now, you have the exposure to Delta, but if you look on the week, there's the Jets ETF, which reflects the broad space, but Delta's down 6.5%, American and United down 10% each, Southwest down 11%, JetBlue down 17.5% this week.
So I think as the insurance brokers that's out there, here's my experience with Delta, emblematic of the airlines. I've been in it probably about 3 years now. And every time there is a scare, it goes down as it should. What sort of scare? I mean, they're always different, but remember Doge, and we're going to have, no federal travel, or, remember we had the yen carry-on line, and then the SOM rule, and unemployment was going to spike higher. All of these things happen. The stocks respond to the downside, and then when this clears, which I do think it's a question of when, not if, the Middle East will clear, the stocks resume their hike. And the key thing here is that the U.S. economy has to stay out of recession. Nobody's calling for a recession, and I'm not.
And why aren't you buying more Delta down 10% on the week if you're so bullish on this space?
You know what? That's a good one. That's a really good question. And the answer goes back to where I started. I have new money coming in all the time, right? As a firm, we're always getting new money in. Am I trying to be a hero today on a Friday with a shooting war in the Middle East and the Straits of Hormuz closed? Or am I going to wait until Monday and see what 3 days worth of news cycles goes through? I am emblematic of the markets in that response. I don't need to be a hero today and step into this.
Yep.
I don't know what's going to happen.
Agree with Jimmy 100%. It's a Friday. No hurry to do anything today.
Plenty of time. Not being a hero today. A trade here. I'm not in it. But most of the freight that goes around the world is carried on commercial planes. And with the commercial planes not flying through the Middle East, etc., you know who benefits? FedEx. So FedEx's volumes go up dramatically during this period of time. So I imagine next quarter their report is going to show a nice bump in earnings.
It's been a rough week for FedEx and UPS, obviously.
Stocks are just sitting here off the highs of the day.
We do have a new committee move that Steve Weiss is going to tell you about, and many other.
Nothing to do at the moment.
We'll do that. Josh Brown's best stocks in the market coming up as well.
Okay, not much going on at the moment. Just chop. It's a Friday, just as Jimmy was just saying on CNBC. Don't need to be a hero today. Just wait until Monday. 3 days of news cycles. We'll see what happens by Monday, if we get any kind of follow through, or if weakness is going to persist.
A little bit shorter duration on this one, where I'm going to buy an unbalanced for a debit, offsetting some of the costs on it. Buying one of the 215 strike puts, it's basically at the money. Selling two of the 200 strike puts, that's where you want the stock to go. And then buying one of the 195 strike puts. So in essence, you're buying a bearish $15 wide put vertical in this strategy, selling a $5 wide one. You're going to pay roughly about a 380 debit, might be a little bit lower than that, but the debit you pay on this is going to be your risk also. So it's $380 per spread. It takes your break even down to 211 or 211.80 to the or 20 211.20. Tom, there you go. 211.20 to the downside, Joe. That's only about 2% below the current share price in this one. And Joe, even if this stock falls out of bed and goes below that 195 strike, it's still going to be more than a double in profitability. You mentioned skews. This isn't very expensive for a put butterfly that's basically at the money because of the fact that the skew isn't as steep as maybe some other names.
And because you can sell two of the 200 strike, I think that's the key. And so we're going to have a little kumbaya moment here, Tom, because I like your trade too. And what I like about this trade, and maybe for some people who own Amazon, this might not be a bad hedge because it's a fairly inexpensive way for you to kind of hedge some of that downside risk. The thing I really like about the trade, though, is where does this maximize that value? It's at the 200 strike, and that 200 strike is the low that we put in mid-February when the shares kind of pulled back $50 from those highs. So it aligns with a couple things. It aligns with a little bit of a bearish bullish view, not heavily bearish, but semi-bearish, and it also kind of takes you back down to maximize at that low that we put in a couple weeks ago. So if the shares kind of reverse course and start heading back down, there's a good chance you test this low. And the good thing about this is, just like any other spread, you can kind of unwind this piece by piece. Should you get down to that 200 level, maybe a little bit faster than you initially thought. Take off some of those long puts and then keep some of the short verticals. There's a lot of ways to kind of unwind this. But like I said, what I like the most about it is it maximizes in value right at that 200 level, which is that near-term low.
And a lot of times on these, those are great points, Joe. A lot of times on these type of trades, people will go, okay, you're doing the unbalanced or broken wing put butterfly here, but why not just buy the 215, 200 strike put, right? Vertical. Well, that's going to cost you about $4.60. So your risk goes up on that. And, your reward might be better if the stock goes down to 190, 195. But at the same time, you can offset some costs by doing the unbalanced put butterfly on this type of strategy if you've got a bearish outlook on Amazon. So there you go, Diane. 2 example trades.
Market's not going anywhere.
Basis, you don't need a big move to the upside or the downside for one of these.
Let's keep an eye on hedge flows. Just a sine wave, gradual upward sloping.
Sometimes you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
I'm Sam Barnes, live from the New York Stock Exchange. When the market moves, we're on it. Getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
No politics, no spin, just the market from open to close.
Chop, chop, chop. That's all we're looking at the moment. Stocks easing off the highs of the day. ABCD patterns.
They love the ecosystem. They love the ease of use. It's really a sticky product So they've done a great job there. And the stock is off a little bit. I mean, it's up on the year. It's up from lows this year significantly, but it is off from highs. And so I think it could be an opportunity for people to maybe take advantage of this selling right now. But just looking at how they did last quarter was incredible. I mean, their revenue was up significantly. Their revenue, I think, was up
A little bit more chop, pushing a bit higher off of the low now.
suggesting that their margins are, they're doing really well. Earnings per share up 19%, so they have good cost discipline. They also have pricing power. They're able to charge a little bit more, but they're also doing really well with margins. And what's one of my favorite kind of stories about them is the AI race. And everybody is spending tons and tons of money. CapEx is through the roof. And Apple just kind of said, you know what? We're going to wait at the finish line. We're not going to run the race. We're going to wait at the finish line, see who does really well. We're going to pick that person to partner with. And so that move, I think, has saved investors so much money that I think they're going to be paying about $1 billion to Google as opposed to, dozens of billions developing their own. And they were criticized for a long time because
Just no momentum in the markets at the moment. Maybe 2 o'clock, maybe we'll get somebody to come in.
He hasn't looked at in half a decade. A stock you probably will be surprised that landed on this list. We'll do it next.
Markets are slow at the moment. It is Friday, March the 6th. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. We got a minus 70 on NYMO. We're near a reversal low. VIX at a reversal high. Hit 29 and change this morning.
So does that kind of insulate them based on your data from maybe the potential sell-off where, hey, this can still be a stalwart where, hey, they're growing. They had a super cycle with the iPhone 17, and now, hey, anything AI that comes out from here on out is going to be just bonus.
It is. It's just, and I think the fact that they can do so well with, like you said, a trash AI tells the story that their products are just that strong. And when you think about what they've done, they integrated OpenAI a couple years ago, but they just signed on with Google Gemini, and it all works behind the scenes so that the iPhone just feels like it's got good AI right now, right? As an iPhone user, most of the people are not going to think, "Wow, I'm glad they partnered with Gemini. This is really good." They think, "Wow, my iPhone got better, right? It can do things it couldn't do before."
All right, futures making new lows here. Futures.
All that kind of stuff. And the user doesn't care. They just want a phone that works really well. And Apple, again, they didn't run the race. They didn't pay the entry fee of the race. They just waited at the finish line and said, "All right, we'll take you." So very good job. Kudos to them. You can kind of see how they stack up against some of the other big companies. Everybody's sort of in the same area right now. These are not big numbers. -1 to +5% on a year-over-year basis. These are not big numbers, but it's just this slow, consistent growth from Apple. And again, they've got, like you said, 2.5 billion active devices around the planet. They are the dominant player, and no one's leaving. And the AI story is just going to make them better. It's just a bonus. And when you look at their spread of revenue,
Okay, a little bit at 67.50, 66.70 down below. Losing VWAP at the moment. MACD turning lower.
She makes mistakes. This morning I tried to get Siri to do something. It was just not well. And I was like, don't act like Alexa, because Alexa, I have to admit, Alexa sometimes doesn't have it. I digress. So, a couple things I want to ask you, but like on your chart, Landon, I was surprised actually. I know it's like single-digit percentages, but that Apple was so high up there on your sentiment chart. So that stood out to me. But at the same time, I want to ask about like the affordable phones.
6,700 down below. Round number.
But I suppose, given the sticky ecosystem, that they even need to do an affordable Mac based on what you're saying as sentiment.
the text messaging, right? And then once you're in, if you start with an affordable one, then you work your way up and you get an ecosystem.
Low tick alert minus 800.
All right, low tick alert. Stock's pulling back a bit. Okay, NVIDIA rolling over, Apple, Microsoft, Amazon, Tesla, everything rolling over at the moment. Let's see what IGV is doing. IGV, software off the high of the day. Inside day for now, it's a Friday. We got the weekend, news cycle coming in Monday, fresh start. That's what I'd be thinking about is Monday. If you got profits on, maybe reduce some of your risk. Palantir hanging out at the highs.
Hey, Landon, real quick here. Pull back like this in a name that has, the rock solid balance sheet that it does. It doesn't have the CapEx spend in this name. Would you guys, based on your data, it seems like it's pretty positive. Would you be buyers? Because they're not immune to macro moves in the overall equity market. We've seen that this week. Stock's down 3% this week, more than the S&P 500. So they're not immune to that. Would you guys be buyers on dips?
Yeah, so I think that you just got to ask yourself, what exposure am I willing to have to the overall market? And if you're okay with some exposure to those macro events, I think that Apple outperforms the market from here almost for sure. It's just to what degree. So you can track them against the S&P and just see how they've done historically. It's pretty strong. But here on this dip, I think that obviously they could go down from here. Anything can happen. You got wars and tariffs and all kinds of stuff.
Low tick alert minus 800.
Control, but what they can control is very strong. So again, if you're willing to take some macro risk or some general market risk, I think going with Apple is a pretty strong bet.
Yeah, they can control the devices. So I've been in the ecosystem. I remember, but you make a good point. Once you switch, because I remember when I switched, it's hard to go back because then you just start getting other stuff like a MacBook, and then you need the AirPods, and just everything fits together. So it's a great point. At the same time, you can't ignore the macro factors. But we'll put a pin in our conversation. Landon, thank you. That's Landon Swan, co-founder of Likefolio. Have a great weekend, Landon. All right, we've got to get into the trading perspective, all things Apple. Tom, you got the insights from Landon and the Likefolio team. I was surprised when I saw where it was, where it ranked. It was pretty high up there. But what are your final thoughts before your example trade?
Yeah, more positive data from Likefolio.
All right, we continue to roll off here below VWAP.
We saw what they did the last couple of quarters since that iPhone 17 release. We've been waiting for years for this next super cycle. It seems like we got it, even though they didn't have a lot of the AI functionality that everybody kind of wanted at this point. And as Landon mentioned, over 2.5 billion users across all their products at this point, and they're growing. The higher margin sides of their business too. The services sector of their platform and what they offer is growing just as much or more than the hardware side, which is the phones and the iPads and Macs and all those products. So I looked at a strategy. The stock's down about 11% from its all-time highs that we hit in December. It hasn't been below its 200-day moving average since prior to the release of the iPhone 17. That was back in August, right? They released it in September. So it's had a pretty good run, pretty good pullback. The 200-day simple moving average is sitting around $244.20. So I'm going to use that in this example trade.
S&P is still moving lower.
It's selling in out of the money put to the downside. It's capital intensive.
MACD's rolled over, volume picking up.
The stock were to somehow go lower and go down to zero. So keep
Hedge flows turning back down.
not an aggressive one because you're selling it out of the money put, but it's got a lot of risk on this position. So we're not to the March 27th weekly cycle. So 3 weeks to expiration. And I sold the 245 strike put, cash secured put
You're going to collect roughly, we've got 325 credit on here on the risk profile. It's trading closer to 370 right now because the stock has moved down with the overall market. So keep that in mind. You can probably collect a little bit more credit. But if you collect that 325 credit, that's what you can make on this trade. $325 per put that you sell. Now, what's the risk on this trade? The risk is below that break even of 241.75 to the downside here. But the risk is over $24,000 if the stock were to somehow go to zero. Keep that in mind. A lot of risk, a lot of buying power required for this type of trade. But you're giving yourself a cushion of nearly 6% to the downside before you start getting hurt on this one. If the stock does fall below the 245 level and you get assigned on puts that you're still short, then you're buying the shares in essence at that 241.75 level to the downside, as I mentioned, nearly 6% below the current share price in Apple. So it's neutral to bullish cash in here put here. Kind of sets up Diane with what data that Lightfolio has, and it gives you that cushion to the downside. So the stock can continue to move lower. You just want it to remain above that break even and above the 245 line, which is at or near that 200-day simple moving average, which may act as an area of support if you look at it on a technical basis. But a lot of risk on this one. You're either looking just to keep that credit that you collected on this type of trade, or you're willing to buy the shares if it continues to fall and you're still short those puts and the stock goes below 245.
All right, good stuff, Tom. We've got the breakdown coming up. We're diving into Delta Airlines today. The airline sector remains under pressure as oil prices continue to surge. We'll have more fast market after this break.
All right, a little bounce. Market's just chopping people up. I wouldn't do anything until Monday if we get any kind of follow through. For now, it looks pretty bearish. We're down here on a hammer on the daily. Microsoft pulled back. NVIDIA, Apple, Amazon, Google, Tesla, Meta. So New York Fang looked pretty good this morning. Backing off now. Just sit tight. We did have buyers at the low of the day, so we'll see if this follows through. If we end on a doji, a bullish run end of day would be nice towards the 50-day. We'll see if that happens at all. For now, just sit tight.
Stay connected to the markets with Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com and on all your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome back to Fast Market here on Schwab Network. I'm Diane King Hall live on the floor at the Big Four. Before we get to the breakdown, let me give you a check of where markets stand as we get closer to the bottom.
Going to take about a 10-minute break and make some lunch. Watch for a bounce back to VWAP, see if we get rejected there. Not expecting much, just a lot more chop. Sit tight. Going to make some lunch. I'll be back in like 10 minutes.
A barrel now. Airline stocks remain under pressure today as travel warnings hang over the sector amid the war in the Middle East. Shares of Delta Airlines down right now more than 3%, extending this week's turbulence. Fuel prices are a concern hitting the sector as oil prices spike amid the Strait of Hormuz being essentially closed. United Airlines CEO said to CNBC that the increase in fuel prices will have a, quote, meaningful impact to its quarterly results. Top brass at Delta have not spoken out yet on earnings impact, but you can certainly see the share price impact. With that, time now for the breakdown. For that, let's welcome in George Silla, senior markets correspondent, taking a look at Delta Airlines today. So certainly a lot of turbulence for the airliners this week, George, and adding to that today as oil prices spike. How do you break this one down?
Well, I mean, clearly there's the impact of higher heating oil prices, which are effectively trickled down to jet fuel, which is essentially the second largest cost component to any airline behind labor. So that's impacting, many of the transportation names. It's not just the airlines. We've seen, travel, leisure areas, hotels, cruise lines have been down. Even some of the shipping companies like Old Dominion Freight, which is a trucking company, UPS, if you look at that stock, also down. So clearly there's an exogenous impact from what's going on in the Middle East. I mean, if you look at heating oil prices, at least the futures, they're up about 47% just in the last week alone. And of course, crude oil now is up about 12 or so percent, just roughly speaking. It's changing so fast, about $90 a barrel. So this is trickling down, obviously, to transportation. Industrial names have been really hit by this. Even some of the core consumer staple companies out there have been hit. Food companies, Walmart, Costco, this last week have been also hit to the downside. So the other thing is you got to keep in mind that, and I talk about this all the time with the airlines, these companies are very seasonally impacted, not just cyclically impacted. And right now we're just seeing, of course, an exogenous impact. But if you look at the airline stocks, this is inclusive of other names like even Southwest, which is down a lot this week as well. They started to come down in the first week of February because typically, and I mentioned this before, I'll do it every single year, that's Q4 of the previous year through the first month of the next year. So essentially October through January is a seasonal push for airlines. They do very well during that season. And, there was some selling starting in February, then it's exacerbated to the downside in the last week based on what's going on in the Middle East.
So let me ask you this, George, because it feels like this begs the question that, airliners are going to be weighing whether they can pass these costs on to consumers. And then you got, for instance, that jobs report that came in weaker than expected. So it feels like it's just, kind of a difficult landscape to assess. Would you imagine that that's one of the considerations that is being taken into account now with the airliners as they grapple with these higher oil prices?
Oh, yeah. I mean, they're going to pass it on to the customer. That's, in fact, what they're going to do. There's no doubt. And I think that if you consider the competitive landscape right now with Delta, United, and American, they effectively have a cartel on international travel from our country. So they're going to easily be able to pass on the prices. But nonetheless, there is an impact to their earnings and the expectations of their earnings because of essentially higher energy prices. So they'll pass it on to the existing and of course, those who are ticketed travelers, but there may be some apprehension from some travelers who are at the margin already to pay up high ticket prices. Maybe they'll decide not to travel, coming up this year based upon this. So that can certainly change the calculus from the marginal consumer, but those business travelers or those who are willing to travel, they're going to pay a premium. There's no doubt.
Okay, yeah, I can imagine the business travelers will because the companies obviously are footing that bill, but then the impact to leisure. And, so we know that premium was strong for the airliners last year, for instance, for United and Delta in particular. But, if the consumer buckles, because they do want butts and seats regardless of where you sit. Any final thoughts on how you break this one down, George?
No, I mean, this whole industry has been very clever at essentially getting people to pay up for what they're used to paying for less previously. So they've used great business tactics and strategies to continue to, carve out more money from their customers. That's been a great business strategy. Delta hit some new highs. In fact, if you look at Delta, I went all the way back to the pandemic, hit around $75 going back to early February of this year. Right now, it seems like it's nested right around the pre-pandemic levels, going back to the early part of 2020, right before the economy shut down.
All right. Thank you so much, George. That's George Silla, senior markets correspondent with the breakdown on Delta Airlines. Let's get Tom back in here for example trade purposes. So, Tom, you've got an example trade in Delta Airlines. Any quick thoughts before you jump into it?
Yeah, just the pullback that we've seen. It's not surprising, right? You got crude oil hitting above $92 a barrel now in today's session. That's the highest level that we've seen since September of 2023. And that's going to negatively impact some of these airlines. And you're seeing the reaction in the stock. The shares hit all-time highs in mid-February, this stock, as we pulled back 22.8% from those levels in just over 3 weeks here. And now we're sitting right below the 200-day simple moving average, which it hasn't been below since about August of last year. So I looked at a strategy that maybe gets rid of some of the near-term minutia, because you think these stocks are going to be under pressure just due to the price of jet fuel that's going to continue to rise if crude oil stays at these levels. I went out to the April monthly options. You're going to avoid earnings on this one because they'll report after this. Earnings comes, or actually earnings, you're going to capture earnings, I'm sorry. Earnings are on the 8th of April. Not confirmed yet, but usually that first or second week of April is when they report potentially. So we're not to the April monthly options that expire on the 17th. So 42 days to expiration. We're going to buy an in-the-money call, the 57.5 strike call, and then against it, sell the 67.5 strike call. So a bullish $10 wide call vertical, you're going to pay roughly about a $390 debit. There's your risk. $390 per spread on this one. It takes your break even up to 61.40 to the upside. That's only 4% above the current share price. And like I said, you got a month and a half in this position. So only 4% move needed to get above that break even. Because you're buying a direction, in this example, you have some flexibility as far as trade management. You don't need to wait 42 days. If you do get a rebound, maybe oil pulls back, or maybe the stock bounces off this 200-day moving average, you have that potential or ability to close this position ahead of time, ahead of expiration if the market's open. So keep that in mind. It gives you some flexibility as far as trade management. But this is going against a grain. If you think this stock's going to rebound, this could potentially be profitable. But you do need to move above 4% to get above that break even.
All right, good stuff. Tom, I was just doing a check on crude oil. We continue to sit above $92 a barrel. Well, that's going to do it for us today on Fast Market. I'm Diane Kinghall alongside Tom Wider. Thanks again to Joe Mazzola. Download the Schwab Network app. It is available in the App Store, and tune in 24/7 on schwabnetwork.com. Stick around. We've got Next Gen Investing coming up.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists, streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Hey, Bob. Hey, Andrew. Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable. Wait, had a stroke? Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time. Jim, my financial consultant. I probably met 20 years ago. Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
Live insights, actionable data, and market-moving analysis. Schwab Network connects the headlines to the why in real time. Watch free 24/7 at schwabnetwork.com.
MOBS.
Welcome to Next Gen Investing and happy Friday. I'm Jenny Horn. Let's check in on how markets are faring now about 3.5 hours into the trading day and, of course, the last trading day of the week. We've seen collective weakness really since the open here as we're down now 1.25% in the S&P 500, pretty much on par with what we're seeing in the Dow. The NASDAQ is actually our smallest laggard of the group, down about 1%, but the Russell 2000 been down about 2 to 2.5% pretty much throughout the session. Although I will say all four of our major averages are off of session lows. The Russell 2000 is the one that's a bit closer to those lows made earlier today. But the Dow, the NASDAQ, and the S&Ps have been able to hang out at least above these levels made right out of the gate this morning. Crude oil also did trade above $92 a barrel as investors did weigh the impact of the U.S. and Iran war on the global energy supply. President Donald Trump did say in a Truth Social post that there will not be a deal to end the U.S.-Iran war without an unconditional surrender from the Middle Eastern country. Equities were also bogged down by the latest jobs data. We saw non-farm payrolls falling by 92,000 in February, a sharp contrast from the revised January gain of 126,000 and far below the growth of roughly 50,000 estimated. The unemployment rate did also rise slightly to 4.4% from 4.3%. But now, as we do go at typically on this show, of course, throughout the next hour, we'll focus on more of these individual equity stories shaping today's markets. We'll kick things off with a few of these movers to keep on your Friday radar. We'll also be looking at the technicals in two of the more fast casual restaurant type of stocks, Chipotle, and I do throw Starbucks in that same category. For FOMO today, we'll be discussing Costco's solid quarter, which is actually, at least today, hanging on to a modest gain. We'll close things out with under 30, looking at the huge move to the upside today in Smith & Wesson, with shares higher after the company disclosed better than expected financials and also a boost in overall production plans. But here now to help us kick off the show today is Sam Vadas, host of the Schwab Network. And so, Sam, we talked this morning about everything sticking out to you. We're going to run back that conversation because, I mean, a lot has happened in, just the several hours since we spoke this morning, which I think speaks to the fire hose on a daily basis, but especially this morning.
Yes, a flurry of developments this morning since you and I last spoke, Jenny, and I think you gave a really good summary there. I mean, the markets are dealing with pretty much a double whammy today. I think the chart of the day very much is what's happening with this spike in oil prices. We're above $90 a barrel right now, and that very much was already weighing on equities, and it came off the back of course, some of the developments we are hearing, particularly with Trump's Truth Social post around some of these negotiations as well. So I think that was initially what was the issue here. And then, of course, coupled with that, you had this bad jobs report, which is not helping. Now, obviously, we had a surprise drop to the downside. There were a few concerns, obviously, around the unemployment rate, which ticked up as well. But there is a little bit of a caveat with the jobs report I would put in there. And that is, of course, the fact that these months can typically be a bit volatile at the start of the year. But you also had some storms, obviously the bad weather, and then some strikes. So it's just one print. I think we do need to keep that in mind. Let's watch the overall trend, because the other data that we've been getting earlier this week has has been holding up okay. So I don't think we should be jumping to conclusions, but the market is seemingly today taking bad news as bad news. And that is because of this predicament that both of these things now put the Fed in. And that is obviously a rock in a hard place because they're dealing with obviously some of the data which shows some job deterioration, not to mention obviously some of the layoffs we've been hearing about from some of the corporates this week, on top of the new energy shocks and the potential for the inflationary pressures. So what you have is a scenario playing out now where a lot of economists are talking about the potential for a stagflation environment, and that is where you're having this rate cut or rate path confusion in the market. And I think that very much speaks to obviously the direction of these markets at the moment. The direction very much depends on the duration of this war in the Middle East, obviously with this conflict. So for now, obviously we see people jumping out of equities. There are some little bright spots. There's these counter trend type of plays there. You've got like the softwares that continue to be higher. In fact, IGB continues to perform well. But for the most part, obviously it's outside of that. We have seen traders piling into metals today. As a part of the safe haven type of play, obviously gold is back in action, and that comes obviously as we've got the dollar that's just dropped a little bit slightly over the course of the session as well. But obviously it just feels like markets are a little bit on edge just heading into the weekend because as we know, over the course of 2 days, anything can happen into Monday, Jenny.
It really can. I do feel like that has been the nature of this market. Is it does feel like even the weekends we don't really see our fire hose of news flow because every single day there seems to be updates from at least some other country or the White House or what have you. And so to completely pivot away from that, we'll talk a huge winner today. This is a good place to start some of our more stock-focused conversation here because Marvell is, a name that is pretty much nearing at least their recession highs. So it's amazing because the market has not really given back any sort of losses. I know we've pared back at least from recession lows, but as we've looked at Marvell, this name has just continued to churn higher on, data center growth. Walk us through your thoughts here on this report.
So this is a decent report. They also issued some solid guidance, and so the gains are holding post-earnings here. We did see this one higher off the back of the numbers, and then, of course, we are up 22% in trade today. So that just goes to show some of the resilience here off the back of what this company has reported. They did see record revenue in the trailing quarter, 22% growth there, lifted its full-year revenue guidance thanks to strong data spending, as you mentioned, Jenny. The company also projecting revenue growth of nearly 30% for fiscal 2027. And so I think the story and the word with this one is visibility. That was a similar scenario with Broadcom, and that was very much to do with the narrative rather than just the numbers here. So we're seeing a very, very nice reaction from the street. Let me talk you through the sell side commentary as well, because we have seen a lot of action coming from the analysts today off the back of this one. So we've got the folks over at BFA, which have upgraded Marvell to a buy now from neutral with a $110 price target. Goldman has moved to $100 from $90.
All right. Back above VWAP for now. Anticipating more range-bound action. Palantir still going. Palantir. Okay, looking for a move back up to that high, perhaps, from earlier. Okay, continue to move back up towards the highs. NVIDIA turning off the low. Apple turning back up. Palantir, Palantir still going here. Palantir breaking out. Palantir breaking higher above the 50-day. Okay, S&P on the move here, shaking people out, starting to move.
High tick alert plus 800.
High tick alert.
Extreme high tick alert.
Extreme high tick. Extreme high tech. Okay, S&P 500, nice pop there. Back up to the highs. Shorts covering.
Extreme high tip alert. Hedge flows turning back up. 6,800 is resistance. Support right here. 67.45. Is that new? 67.45 is new. 67.45 support is new. This is new. 67.45. $67.45. Okay, goes Palantir. Palantir breaking out. Going for 160, above 160. This is the fourth time we've been up here, S&P. We're going to follow through this time of day.
very strategic move. Trade Desk reportedly in talks with OpenAI to sell its ads on its platform. But as I mentioned, I mean, going into this, I mean, this name was down like 30% or so year to date. So it has had a tough time, obviously, contending with some of the competition for advertising. Also, those companies that do advertise not feeling as confident about.
Okay, looking for a breakout, looking for a break higher, or do we get rejected one more time? Frustrate everybody. Palantir is ripping here. Palantir is going. Palantir is going. Looking good.
Could argue we're pretty broadly lower, but appreciate it, Sam Badas, for helping us kick off our show today and all week long. And now coming up next, it's time for Chart Masters. We'll dive into the technicals and two of these fast casual restaurant chain stocks. Chipotle, more of that tried and true, of course, fast casual name, while Starbucks also just kind of fit the bill. We'll dive into the latest to watch as far as the charts coming up next.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
Intern, this place is incredible. It's where I get all your office supplies. Your golf balls, your fancy coffee, your giant TVs, everything in one place. It's like Schwab. Everything investors need, all in one place. Come again? Yeah, at Schwab they can do everything. Invest, trade, get full service wealth management, and anything in between. I think I'm gonna be
All right, Tesla breaking out. Nice one there, Mondo. Nick.
Invest your way with Schwab. Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange.
All right, getting rejected yet again. S&P getting rejected again.
Welcome back to Next Gen Investing. It's now time for the Chart Master. And today we are talking some analyst calls in two of our restaurant stocks, Starbucks as well as Chipotle. Now we'll start off things here with Chipotle, and joining us for some more on the technicals is
Core Weave continues to rise.
Rick. As far as looking at some of the, frankly, lackluster performance we have seen in Chipotle today, it's no exception. We're down another 4%. Another disappointing week, unfortunately.
Yeah, it seems like the pain just keeps going here. Although I will say we did not make new lows, really even coming close to our previous 52-week bottoming out point here, 29.75. We have stayed above that area for the most part here. More recently, we kind of formed some supportive areas around 35 and around 34, 33 roughly.
S&P rejected yet again. Trace coming back in. Okay, we got this resistance overhead at 68.05. Can we get there? Not without the help of our institutional friends. Netflix. Looking for a turn back up in Netflix. Palantir going straight up now. Palantir. Clearing the 50-day. Palantir clearing the 50-day.
36.50 roughly. Price is on pace to close below it.
Okay, S&P rejected again. S&P. S&P rejected 4 times now at this level. 67.70, more or less. Can we pop through this area? Looking for volume. Palantir still going here. Palantir. S&P 500 rejected yet again at this level. Palantir still pushing. Palantir. We'll come back to S&P in a few. Palantir is on the move, though. Palantir.
Area here, 39.76, representing our point of control, the heaviest trading area of all. We would need to clear that in order to take a stab at this heavy volume area here, around 42, 43.
Okay, so as far as now looking at trading this name,
Okay, 200-day is at 162.
Major, obviously, near-term catalyst, that being earnings, but also has been in a pretty substantial downtrend with lower lows and frankly, lower highs as of late.
Yeah, and the picture doesn't look super encouraging here, but we are near a low point already. We have not tested those 52.
160 call walls, resistance.
That perhaps working off that idea that we do have some kind of significant low point that's been formed. So looking at the April 17th expiration here, our yellow box, 42 days out, plus or minus $4.20. So about a 12% move to the upside or the downside. When we do overlay our other studies back on top here, we can see that the area between about 30 to 35 really stands out. That's part of our expected move boundary area. We also have quite a bit of supportive factors and our our volume node there as well. So the trading question, -1 April 17th, 35.30, put vertical at a 125 credit here. So 125, $125 would be our max profit potentially. Max loss would be $375 in this risk-defined trade that would be carried out over the next 42 days till expiration here. So risk versus reward, about 1 to 3, a common example setup that traders look for here. Our break even, 33.75, about 5% to the downside versus our expected move, about 12% here. So well within that boundary here, and perhaps maybe slightly more aggressive. You could go further down and accept less of a premium. But this is a trade that's going to be banking on the supportive area, holding on when we've already reached a fairly significant low point.
Okay, so then to cap it off with Chipotle, let's move on to here, Starbucks.
CoreWeave at the high.
Starbucks has seen its own attempted recovery, but unfortunately, it does feel like there's a macro element here. We know coffee prices have remained elevated. They're also fighting, a more challenging labor force, as we did see very clearly illustrated this morning, actually. So as far as Starbucks is concerned, they are lower today, but definitely not seeing the same type of pain as, say, Chipotle.
Yeah, more of a sideways kind of grind, I guess, pardon the pun, for coffee here. But,
I like that.
kind of just moving sideways. And even more pronounced more recently here, we have this triangular shape where we have a series of lower highs, rather steep line you could draw here. But you also could say, well, we're making higher lows as well. So kind of centered around that 97 level roughly here for marking some old significant highs and a gap level right around here is that 97 point. That's those highs. So now we also see the 100 level stands out as well as the 94 level. Those are our relative highs and lows. So if we do start to see a further push to the upside from this triangle, which is what we're the bulls are attempting to do so far today, those areas stand out as potential resistance. Our moving averages, we can see that they are more favorable as a reflection of bullish upside.
Okay, we're pulling back from the high again.
Starting to push above our shorter term 5-day in dark blue and our medium term monthly in a teal there. Both of those come together around 97, 98 roughly. RSI, similar triangular shape here, but also a bit of a matching upside breakout here. We are above the 50 midline, so more of a bullish tilt as well for this momentum indicator. Finally, volume profile shows that we have not exactly very clear nodes. It's kind of this big concentration between about 92 to 98, and then we have another larger spike down here, 82 to 87. So that reflects the amount of time we spent in this range-bound area here. But as we start to get beyond this 98 level, there's very little near-term price activity to work with here to provide any potential resistance areas. So be on the lookout for potentially fast-moving prices.
Okay, and so as we last but not least, do you think through trading Starbucks again for example purposes, modestly lower today, though I will say it's still outperforming the overall market. How do you think through an example trade in this type of story, in this type of stock?
Right. So again, looking at April 17th, 42 days out, we can see that our yellow box in this case about plus or minus $9.40. So about a 9.6% expected move. So we can overlay our other studies here now, and that gives us a potential breakout point of about here. 100 is a series of repeated highs. That's about where we have our +1 standard deviation channel. So that could be a notable area of resistance. So the trade in question we would attempt, as an example, +1 April 17th, 95, 105, 110, tall butterfly at a 375 debit. So 42 days out again, max loss would be our debit paid, $375. Max profit, if we were to expire at our short strike of 105, or our two short strikes, I should say, that would be a $625 profit. Now, we also would have this flat area here. So if we were to take an outsized move here and push above beyond that expected move and beyond that 110 area, in this case, then we would be able to just keep our credit received, a conventional butterfly. A winner can turn into a loser if the move goes beyond the range of the trade here. So this sidesteps that problem at the expense of a higher upfront cost. Break even, 98.75, less than 1% to the upside, about 0.8% here. Expected move, as I said, a little under 10%. So well within the range of possibilities, looking for a push to the upside over the next month and a half or so.
Okay, and again, also outperforming the overall market today, both names seeing some collective weakness with, again, the looming weakness in the four major averages. But appreciate you, Rick Ducat, are, of course, the technical chartist as well as our example trade master of this week. Appreciate it. But coming up next, we'll discuss a name that's seeing some decent
Thomson Reuters.
Costco, as it continues to remain relatively resilient in a world of very challenging consumer spend. We'll dive into how their membership is continuing to drive out this niche coming up next.
Okay, looking for a bounce.
For instant reactions, earnings breakdowns, and hot takes that teach you about stocks and markets, follow me on X at @NPetalides and connect with me, Nicole Petalides, on LinkedIn, Facebook, and Instagram.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Apple off the high, Microsoft off the high. Apple just, S&P just doing its thing, hanging out here. S&P getting rejected again at the highs. VWAP below. More of the same price action we've seen since this morning. MACD crossing back down. Daily, like to see us close up here. Hopefully inside of yesterday's price action would be nice. We got a hammer so far. Everybody's bearish on the markets.
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me. And my advisor, Jennifer, she was with me with the journal, helping with the estate distribution. The two grandchildren planning for their college educations. Someday it'll be their turn.
Palantir trying to take out the high of the day. Palantir.
Welcome back to Next Gen Investing. It's now time for FOMO. shocked that we've been able to hold on to this modest move. It was never like a Marvell right out of the gate this morning, but I actually appreciate that we're seeing these pockets of strength today, and that is definitely being seen right now in Costco.
Yeah, certainly trying to hold on. You know, the broader market's trading lower, but Costco is rightly so after a solid quarter, holding on to its move to the upside. A little bit more than 1%. So not a huge move, but still positive nonetheless. And they had solid earnings. So let's walk through the numbers first, Jenny. They reported a 13%
Okay.
increase in their earnings.
Up, down volume. Still negative, 3-1 down on the S&P. So I'm a bit surprised that we were able to put together this much upside. Buyers step up the low of the day, probably value seeking purchases. Okay, no follow through in the S&P yet.
Story versus their more domestic story, because to me that's sort of been like for a while their business model where they operate not very many warehouses. They have like less than, I believe, 1,000 around the world, or at least here in the US. And so as far as in their global reach, that's been a huge part of the growth story. But is that still able to progress with everything else going on in the world right now?
I think a big part of this story that is an even bigger unknown here is tariff refunds. Because Costco was one of the first big companies to really come out and say, we want repayments. I mean, they filed a slate of lawsuits looking for repayments. They are already in the lower courts trying in the Court of International Trade to ensure that they get repayment. And they were struck down. They were in that lawsuit was in ahead of the IEEPA tariffs even being struck down. So that is another potential driver for them, because they had a pretty massive hit in terms of the tariff impact when those tariffs went into place. But very interesting to know how that's all going to shake out. I was surprised it wasn't discussed more on the call than it was, but maybe just because there's uncertainty around it, we're still not sure how and when those repayments will ever be made, if at all. But they do have that pending litigation. Their renewal rates this quarter was sort of one of the points of contention that I noticed, even though
Okay, pulling back from the highs.
Costco in terms of the big box names, they've been lower in recent quarters because of online members are a lot of the new signups. People are not going into the black hole that is Costco as much. They're shopping online and getting access to the deals there. But their second quarter worldwide renewal rate was 89.7%. So that was unchanged from the prior quarter. The company has rolled out more marketing initiatives, though. They're saying that they think that those are working, but the street looking for more signs that they are working. However, several analysts still raise their price target on this report. So whether or not there are concerns, it does not appear that they are significant concerns, because we got many adjustments here. BMO Capital raised its price target up to $13.50 from $11.75. And just for some perspective, Costco right now trading at $9.98. They kept an outperform rating on shares. They said the stock should remain a core holding, noting its earnings were robust and stand out as consistently strong in the retail landscape, marked by more volatility of execution and turnaround. Their target to $11.70 from $11.55. They've also got an outperform rating. They noted the small beat. Thought it was enough to up the price target. BTIG raised theirs to $11.25 from $11.15. Also has a buy rating here. They cited margins. Margins expanded about 17 basis points, driven by what they call 19 basis points of favorable developments in other businesses, while their membership income growth was up 14%. They also cited the traffic and digital trends as being healthy as another reason for this price target adjustment. And then And JP Morgan was the last one that I saw this morning. They put their price target up to 1060 from 1050. So only a $10 adjustment, but still upside from where we are currently, keeping an overweight rating. They say, quote, the nuts and bolts of Costco's business remain strong and intact with long unit growth runway. Okay, so then
All right, markets are still hesitant. Still hesitant here.
The entire business model that has kept like a competitive motor on Costco for quite some time. I mean, their whole thing was that you go in and at least in my case, you buy 3 times as much as what you ever expected. And so the online component, while it does make it a bit more like digestible to me, it does eliminate that.
I don't know that I could ever be an entirely online Costco shopper.
No, you can go and touch everything.
Sometimes you find a great thing at Costco, and I am a person.
Who cares? Who cares what you do at Costco? I don't care.
Out and
50%.
Oracle? Are they talking Oracle?
They can get to $16 to $20 earnings power at 20 multiple, which is not a big multiple. You're going to get anywhere between low 300s to $400. In many of your shows, we've been in the software apocalypse. I'm traveling through Europe the last couple of weeks, meeting with investors, and basically 1 or 2 out of 100 of investors that I've met with in the institutional community are long software.
Wow.
And so you have a position where everyone hates our group. They think it's over. Yet Jensen, the CEO of NVIDIA, is saying it's illogical to think that there's not going to be software interacting with these data centers.
Yeah.
And, a year ago, everyone thought OpenAI was going to be the leader, and Google and the rest of the industry was done. And now it's completely inverted. Everyone thinks that Anthropic and Google have taken over, and OpenAI means nothing. And Oracle has, huge backlog exposure to OpenAI. So as long as OpenAI does well, they continue their funding, they continue their push into the enterprise, they're going to be able to pay the Oracle bill. And that's been a big overhang. Is a majority of their backlog is related to OpenAI.
It was striking this week to hear Okta saying no meaningful impact from seat reductions. To Viva, AI is not replacing software. Those stocks were up like 11 to 15% in a difficult session. Trade Desk, OpenAI partnership to sell ads. That CEO did a big insider buy. That stock was flying. So it's sort of like a lot of, maybe more people here than overseas might be sympathetic to looking around, but Oracle, it's debt, I think there's a lot of balance sheet concerns about this one. It just feels like the stakes are higher. Maybe that's how you make the money, but it feels like the stakes and the risks are a little higher here.
Yeah, Oracle's had a high debt load for a long time, and investors look past it. And we don't disagree. Like, it's a risk. It's a negative concern that margins are going from mid-40s to low 30s as they build out infrastructure, right? They're going from a high-margin software company to a data center story with lower margins. And I think that's, a short-term risk. But if they pull this off and they're building the right infrastructure for OpenAI, and then they layer their higher-margin software business on top, there's a little more excitement than I think the market's giving it credit for. So, it's not our favorite number 1 position. I think there are other stories that are potentially better positioned. But again, like, the magnitude of software hate is incredible. I think that many investors are saying software has a value of 0, and I think that's just wrong. There are not going to be 2 companies left on planet Earth in software, OpenAI and Anthropic. They're going to be multiple. Enterprises are still going to rely on them. And again, we had a huge database scare 6-7 years ago, and Oracle fought through this. So one thing I've learned covering Larry Ellison for 30 years.
Okay, this will be a 5th shot at S&P. Highs of the day if we get back up there. We are definitely contained between VWAP and the highs. Coming into the 2 o'clock hour, we'll have 2 hours left to run this if we can.
this has been widely expected for some time. So the fact that it's pulled off a little bit from the initial spike is not a huge surprise. Everybody knows that China needs more airplanes, and it's been at least 7 years since they placed an order with Boeing. So if an order is announced, and that would be expected to be announced when the president meets with Prime Minister Xi, then that is when you would see the announcement of an order from China with Boeing. And again, according to Bloomberg, the discussions center around an order that could be as much as 500 aircraft. We have call into Boeing as soon as we get any more. We will let you know. Kelly, back to you.
Boeing, yeah, it's in the Dow, right? So just to point out to the viewers, Phil, your report could have as much to do with the Siemens market turnaround as what the FT was saying about, whether we create a bigger insurance fund to get people through the Strait of Hormuz. Appreciate you bringing that to us. Phil, we might have more from the White House on the defense name shortly. Meantime, a new report from Anthropic suggests investors may want to stay the course on the Halo trade. That's next. Materials are, though, the worst performing sector today. Although fertilizer stocks are higher. CF Industries, the largest North American producer of a key ingredient called urea, the price of which has spiked to a 4-year high as a third of the world's supply of that passes through the Strait of Hormuz. And while that's good for CF, shares on pace for their best week in nearly 6 years. One fertilizer trader warns it means food inflation will go through the roof around the holiday season later this year. We'll keep following that story. We'll be right back.
Okay, just watching Boeing at the moment. There, see a lot of open interest at the 250 strike. Look, it's a lot of open interest at the 250 strike. Boeing. Boeing. Commentary about China. Boeing. Core Weave headed higher as well. Core Weave looking good. AeroVironment continues higher. Boeing, these 250 strike calls out in June look pretty good. The 250s in June look pretty good. Buy a call spread, make it cheap. It's like 2 to 3 to 1, 2 to 3 to 1, 3 to 1, profit wise. We just got a little dip in Boeing from the high from that news. So let's see if we can get a BC pivot. There's your B pivot right there. Okay. Okay. The New York Fangs aren't moving much. Okay. Not moving much there. GE is trying to change direction. GE Aerospace. S&P still fading.
Welcome back. Some possible signs of an AI impact in today's jobs report. The bad report from this morning, we lost 92,000 jobs, and information services shed 11K. There may be another indicator that better tracks the labor impact of AI as it's happening. Let's bring in Deirdre Bosa with that story for today's Tech Check. Hi, Deirdre.
Hey, Kelly. So that indicator comes from Anthropic that actually actually sees all of this data and where AI is being used, take a look at this one chart. It comes from Anthropic's new labor study. So blue is what AI could theoretically do to your job. Red is what it's actually doing today. So computer programmers, 75% is covered. Customer service, 70. Financial analysts, nearly 60%. But you got construction, agriculture, transportation, near zero penetration. So the physical economy is the last place that AI.
Yeah, construction to be, unless they have robots out there digging ditches and building retaining walls.
Also, Kelly, the Halo trade visualized heavy assets, low obsolescence. Goldman's Halo basket, it has outperformed capital light names by 25 percentage points this year. The company that's actually building the AI just backed it up with these numbers. And one more number from the study that I want to highlight that sort of was really, really interesting to me shows that hiring of 22 to 25-year-olds into AI exposed jobs has dropped 14% since ChatGPT launched. So companies are not firing people. They're just not hiring the next ones. And that doesn't show up in the jobs data as it stands.
Looks good.
It's great for productivity today, but it's certainly a problem for the labor market tomorrow if these trends continue. What Anthropic is saying and showing us is that they are expected to continue. Yeah, and I thought it was interesting.
All right.
Again this morning talking about, we were sort of
Tesla pulling back.
Immigration sort of decline. One of the a lot of the weaknesses.
All right, back to VWAP again. Just this big range it looks like today. I mean, we're in the upper half of today's range still. Okay.
To be hired, but the point is that whether you think it's sort of AI washing, companies are using AI as an excuse for layoffs or not to hire. Increasingly, I think you're going to see that AI is a valid excuse, especially with the progress that we've seen just in the last few months. That it's going to be mentioned one way or the other. Deirdre, thanks. Appreciate it. Deirdre Bosa. Let's get back to Washington now with more news from our Eamon Jabbers on a very busy afternoon there, Eamon.
It's always a very busy
Palantir, 2 times shares, PLTU. You can get in for a third of the cost. Looks pretty good coming off the low, Palantir.
Scheduled weeks ago, so not necessarily. They're cautious to point out a response to the American defense contractors to work harder, produce munitions faster and more efficiently, and that's something the president is always going to do, according to the White House.
Eamon, I don't know how much of this is confirmed, but I had read that this.
All right, so we're going to have that meeting at the White House.
To be a secularly bullish time for in demand for them. There's a lot of pressure on them as well. Look at what the president has already said about buybacks and executive compensation, and there's frustration.
Yeah, you're exactly right, Kelly. The president's expressed a lot of frustration with the defense industry. He thinks broadly that they are too big, too well paid, and too slow. He wants to see more American munitions made here in the United States at a much quicker pace than they've been made. That concern predates the Iran war. His voicing of that predates the Iran war. And maybe now that we've seen this military action in Iran, you know why the president was so concerned in recent weeks as he continued to hammer that point. He's talked about executive compensation. He's talked about the speed of production. So if you are a defense contractor, you can imagine how well the idea of underperforming contracts being announced publicly will go over. So I would imagine that this meeting, if you're a defense CEO, walking into this meeting at 1600 Pennsylvania Avenue this afternoon, you've got two things on your mind. One is, can we get more contracts? And the other one is, can we get off of the president's hit list?
Right, exactly. The names are still green, but we'll see what that brings. Amen, thanks. Amen, Jabbers. My next guest sees opportunity in the defense sector amid other spots. Victoria Green is here on set with me. She's G Squared Private Wealth CIO and a CNBC contributor. I mean, you've been with me this afternoon. It's just like boom, every time we turn around. Oil's at 92, then it's lower. This FT headline, and now boom. So let's take a step.
All right, we're drifting lower. S&P, no follow through. Back to VWAP. We're right dead center between 6,700 and 6,800.
So when you think about how much these metals have to survive heat, they have to survive stress, they have to survive pressure, high temperatures, high pressure, all of this stuff is done by a specially manufacturer. ATI is the net beneficiary. So if you go down the food chain of who's really supplying all these parts for missiles, for helicopters, for airplanes, it's ATI. Next, I do like RTX. I also like Huntington Ingalls because there's not a lot of submarine manufacturers out there, and I think they're going to be great. RTX obviously missiles and aerospace. They've got Pratt & Whitney as well. Really well diversified contractor. Is there a risk that there's more pressure from the White House, whether it's to speed up processes or any that's going to possibly pressure margins or speed up, make the businesses have to speed up a little bit and make them a little uncomfortable? I think they'd love to speed up. I don't think the problem is that the defense contractors don't want to produce more. I think it's a supply chain issue. They need the specialty engineers. They need the manufacturing. They need the parts and the pieces. I don't think they're sitting around twiddling their thumbs, not making the missiles that we need to make. I think they're saying, hey, look, this is a real problem. We've been trying for a while, ever since 2020, of the COVID supply chain crunch, and then they've been supplying missiles for Ukraine and Russia. Everybody has this need for more and more defense contracting supplies. So it's not like we've been able to stockpile anything. So we came into this maybe a little bit short on stockpiles. Now we're rapidly moving through it and burning through some of our supplies. I don't think there's any way we can speed this up short of a massive push from the government to get behind these defense contractors and help them and help alleviate some of these supply chain constraints they have. Let me move from one sort of,
Kind of just grinding lower here.
And the other one is what's going on in private.
Palantir is still moving higher.
The reason why is that, look,
Palantir is still moving higher. Palantir at the high of the day. 200-day is next. Palantir. 200-day is next.
How do we keep this from spreading? And would you invest as just a trader? Is there a trader investment to be made now that some of these, like, look at a BlackRock, right? I mean, this thing is going to mark down 20-25% on some of these concerns.
Yeah, so first off, not everything's created equal in this land, but I am extremely worried about private credit. And I think you put out a great note of saying, hey, is this all of a sudden all these tech loans, are they going to be the new subprime? I'm sitting here saying I think private credit is the new subprime. I do think potentially we can keep it a little contained because that was their whole rise, right? They said, oh, hey, these banks aren't making these risky loans anymore. We're going to make these risky loans. Then came the flood of capital in the private credit. And you're talking now it's a $1.5 trillion market and growing market. And then there's been a lot of issues with the opaqueness, with the rating. We've all of a sudden seen bonds go from 100 to 0. They're not marking them down maybe. So I see this as a big problem.
Palantir still pushing. Looks good. Palantir.
I know there's some discounts in there. I know you've got some BDCs trading at discounts in there.
You have 10 seconds. Give me a name you like.
I mean, you can see you got the Valero, man. You got a Valero on your refining here.
Really? Yeah.
Netflix, looking for an end-of-day run would be nice. Netflix. Software holding up fairly well today. Software, looking for that to follow through. Software. All right, so looking for a little bounce here, I guess. Not much going on. Slow day. Like yesterday, we went sideways most of the day after 12 o'clock.
Stream live coverage wherever you are.
started to realize that my dad, he's been with Schwab for a long time. Jim, my financial consultant, I probably met 20 years ago. Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
Good afternoon and welcome to the watch list. I'm Diane King Hall. Coming up on 2 p.m. Eastern here at the New York Stock Exchange, and the pressure remains on equities. Here's what's coming up on today's show. We'll take a look at crude oil's huge spike this week and discuss what it means for the larger market going forward. We'll also dive into a new ETF targeting the space economy. Plus, we'll examine the state of the labor market after the release of the worse than expected February jobs report earlier today. Let's get right into a check of your market action with just about 2 minutes in today's trading day. We are looking at price pressure across the major averages. The S&P 500 is down more than 1% right now. Financials are the worst performer now, followed by materials and consumer discretionary. It's been a toss-up, but the pressure is on there. Energy has been fluctuating between gains and losses, but by and large, you are seeing red across the board, across sectors within the S&P 500. NASDAQ 100 lower by about 1% right now. The Dow down triple digits, off by more than 1%. Russell 2000 is taking the biggest front, down by more than 2%. Dollar right now sitting at 99, off a little bit right now. Gold advancing as investors look for opportunities to potentially hide out. You're seeing gold higher by more than 1.5% right now. Crude oil, huge spike there. That's a big part of what is putting the pressure on equities right now, jumping more than 12% earlier. It touched above $92 a barrel for West Texas Intermediate. The pressure is on equities. Crude oil spiking amid ongoing geopolitical conflict in the Middle East. Bitcoin taking a step back right now, off by more than 4%, but still above 16,000. That's one thing that investors have been watching as a potential pressure point because it has not shown the same volatility that we've seen in equities.
IGV.
And for some of the biggest stories in the markets, Kevin Green, senior markets correspondent of Schwab Network. KG, good to see you again. Started the day with you earlier. I'm glad I get to talk to you as we get closer to the bottom of the trading day. So let's talk through your take on the market action today. We expected there to be pressure. There is. It's accelerated and pulled back a little bit, but the pressure is still on. Your thoughts?
It is, but it's Friday, so let's actually kind of take some of this gloom and doom out of your day, because at the end of the day, we're only down, about 1.4, 1.5% away from the 200-day moving average for the S&P 500. So if we have another day like this on Monday, we're going to get close to an area where some buyers probably will try to nibble a little bit in this market. I will also call out, you are seeing a little bit of a rotation here. Energy stocks are starting to catch a little bit more of a bid. If you kind of notice, the energy stocks have not really rallied as aggressively as crude oil, and that is because of the fact that they do have some perceived risk. The tanker risk is obviously something that's as well as the fact that if you're not able to ship oil out, it's going to be very hard to realize revenue. But you are seeing some of those stocks getting picked up, kind of going into the close. Consumer staples as well as utilities catching a little bit of flows here. Some buyers are starting to buy into this market. Dividend stocks are also catching a bid. So what does that really mean, Diane? Money's being deployed, a little bit more defensive in nature. That's the first start that you really
Palantir looks good. IGV. Look for that to continue. Looking for Oracle to turn the corner.
But if you're a long holder or if you are short, you've been shorting this market all week, do you want to go into the weekend with that particular risk? That's a really quick question. As well as those crude as well. You want to go over the weekend into this risk. The potential of maybe the administration trying to announce something to try to dampen down crude oil as well as gasoline. So I think overall, yes, it's not that great of a day, but you are starting to see some inter-market type of rotations taking place. We started the day off with 6% of stocks in the S&P 500 in green. We're now sitting at 22%. So once again, something's actually taking place. We have Palantir actually moving a lot higher, trading at around $160. Also catching a
Palantir higher.
a lot key market. So there's some opportunities in this market, Diane. I think there are some individuals or some institutional investors that are trying to nibble on the hopes that we do see maybe that taco trade over the weekend.
Okay. All right. Well, let's talk a little bit more about the move that we're seeing in crude oil. Crude oil hitting the highest level in a few years. I mean, earlier it was above $92 a barrel. Still seeing a big surge here. Earlier when we talked, you know, there was, I wondered if we would get to that level, how quickly. I didn't expect it to be this fast. What's your thoughts on crude oil?
Thomson Reuters.
Talk about the fact that it is still in a bullish formation. So can it go higher for the year? It can. But at some point in time, it will have a little bit less of an effect when it comes to equities. And that's just something that we've seen over time. It's the same thing during Desert Storm, same thing that happened also with the Iraq war that took place. So, yes, we are seeing a little bit more of a movement to the upside, but I still think that your biggest risk if you're bull in this market is an announcement from the White House, especially if they try to get into futures market or even releasing some of the SPR. That'll have an initial shot to the downside. The longer-term trajectory probably is still higher unless we do see any form of a resolution here. And the big story is not only just crude oil, but it's going to be diesel prices. They are now above the $4 level on a national average. Obviously, that's going to translate into CPI, a very strong correlation.
Netflix turning up. Netflix is turning. Okay, maybe we get some more follows. Palantir is gone. Ballistic. Netflix looking good. Netflix going.
Speaking of headlines, I'm just seeing a breaking headline that the Trump administration announcing a $20 billion reinsurance program for oil tankers and maritime traffic. We know that's about moving vessels through the Strait of Hormuz. Quick final thought, KP.
You know, that's actually going to be very interesting. I believe they're still going to be around $15 billion short to $20 billion short on that particular program, even though I know that we have it announced compared to the notation needed in order to protect those ships within the Strait of Hormuz. That may go to Congress in order to get that funding, along with trying to get additional munitions and resupply, and then we'll probably see another big.
Okay, still only have 118 stocks advancing. That's pitiful. 30 on the Qs. Down volume still leading. Not surprised that we're not able to take out the high of the day. But that said, I've seen worse. Market's actually holding up very well. Seeing rotation into software continue. Palantir, Microsoft, Oracle.
Some of the problems with that, though, is like, I mean, you go back to the 1990 first Gulf War, and the stock market went down 20% in anticipation of the war, and oil prices went up 160% in anticipation of the war. So when the shooting started, everything was priced in, and it turned out to be much less than expected. So oil prices came crashing down, and the stock market bounced in a big way. And we've seen similar moves, not dramatic, similar moves in other examples. This time around, the stock market didn't go down at all going into the war. Oil prices only went up a little bit, and even since the shooting has started, the moves. We're less. I'm sorry, we're barely 3% from the all-time high in the S&P 500. So this isn't even a dip to be bought. It's kind of a hiccup. And so if things do draw out, if things say get worse, or if they continue to be drawn out, this could be something where people wake up, kind of like they did with the pandemic, and we had a sudden decline in the stock.
Do you think that there's some compartmentalizing happening, you know, kind of reflecting on previous time periods where we saw things like that, even though, yes, Russia, Ukraine dragged on longer than expected, the market kind of put it into...
Okay, let Gonna need a 2-minute break. I'll be right back. Palantir.
Saying we're going to, it's the same kind of scenario where the market will drop 35% in 1 month, but it is similar in that people, the reaction is so small. The other thing is that you just have to, again, we have people starting to think that, why, I guess my biggest concern is that the war is not the only thing that's facing us right now. We're still worried about the profitability of AI and maybe what that technology will do to jobs, number one, and number two, we have these stresses re-emerging in the credit markets. So even if this thing passes us by, this thing comes down in the Middle East, we're going to have these other issues to face. So any kind of a rebound may not last all that.
That's one of the things I thought, that it feels like, speaking of back burner, it feels like the credit concerns are on the back burner right now when it comes to private credit. But let's talk about energy, for instance. That's been one of the flickers of green today. Well, the only one in terms of sectors in the S&P 500. You turned bullish on energy late last year. How do you feel about it now?
Yeah, I mean, the one thing you do have to get a little bit worried about is that, of course, it's had this big run, and it is very overbought on a near-term basis. And it's kind of funny because today the group isn't rallying as much as you might expect. Part of that has to do with when the whole market goes down, everything goes down because a lot of these energy stocks are in the S&P 500. The S&P 500, these index funds are selling all the stocks. But so I guess my point is I still like the group longer term. You also know Goldman Sachs upgraded their price target on gold. On oil 2 weeks ago, which had nothing to do with the situation in Iran. So I still think that people will be surprised how far oil drops. It will certainly drop, but not in a major way. So I still like them. Just don't chase them up at these levels. It's getting a little to those levels.
And then I'm curious to know, Matt, your thoughts on the defense sector. We've seen reports that President Trump is set to meet with executives from that industry at about 2:30 Eastern time today. Are you still bullish on defense?
Yes, I mean, it's something we actually turned bullish on in 2023 and remained that way. And now some of these stocks are getting a little expensive, and you start to get worried or overbought like we saw in the energy sector. However, I mean, look at look at all these missiles that we've shot. They need to be restocked. So their business isn't going to dry up anytime soon. Plus, we have buildups in Europe. European countries building up their military budgets. Japan doing the same thing. You can't bring up a brand new defense industry contractor overnight. They're going to have to use these U.S. companies for a lot of this. And so I think that their profits will continue to expand because I think the world isn't getting any safer, and they're still a good buy for a long-term play.
Okay, so that's a couple of sectors where you see some strength, defense, and, although you've mentioned where energy is now, so maybe you need to be mindful. Let's talk about the tech sector. When I look at a heat map, there is a little bit of green in there, and honestly, it's in the software space, which had been really beaten up. Maybe there's some Lazarus moment happening with the apocalypse. But tech sector, what do you think about the tech sector now? Does it need to lead us out of this?
Well, I'm afraid it does. I mean, everybody, and I understand why people are like, we had so much tech. I'm up to here for 3 years. It was great. Now we're moving on. We're rotating out into other areas. That sounds good, and I can see why people are focused on it. But tech is such a big weighting in the S&P, over 30%, over 60% in the NDX, NASDAQ 100, with the Max 7 being 40%. But if they start to go down as a whole, that's a big problem. They've kind of been trading sideways. Of course, software's been getting hit, but the chip stocks have been strong. If those chip stocks, which is the most important leadership group of the marketplace and has been for decades, if they start to get hit, we had some negative news on that yesterday, that's going to drag those indices down. And when the indexes go down, and people have been hearing about bubbles for 6 months or longer, they're going to start rotating into cash, not into other areas. So as much as we want to talk about these other groups, tech is still the #1 leadership group in the marketplace, so we have to keep a very close eye on them, especially those chip stocks.
Okay, speaking of the chip stocks, one of those pieces of green on the heat map is Broadcom, the +1 to the Mag 7. Thank you, Matt. That is Matt Maley from Miller, Tabak & Co. and the Daily Report. Matt, thank you so much for joining us. Okay, we've got options corner. Rick Duquette joins us to highlight unusual options activity from the day and how investors are looking to trade on recent news on Mobileye, United Airlines, and CF Industries. We'll be right back.
RCAX.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Palantir still moving higher. Palantir.
From U.S. equities to global macro matters, Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
Netflix pushing a bit higher now. Netflix.
Now for Options Corner, where we analyze unusual options trades seen throughout the day. For more on that, we want to welcome in Rick Duquette, our lead market technician, who I like to call the Duke of Data. Rick, it's good to see you this afternoon. All right, so you found some action in Mobileye.
Is enough oil and storage to cover the gap, but as storage comes down, prices go up. And as we've been talking about, this is not just about oil. 1/5 of global LNG, liquefied natural gas production, may be offline due to strikes on Qatar. Things like chemicals, fertilizers, even food and water impacted by shipping slowdowns or shutdowns in the Persian Gulf. Nobody follows these flows as well as Kipler, which owns marinetraffic.com. Their lead oil analyst, Matt Smith, joins us now. Matt's great. I really appreciate you and your team's work. It has not stopped. Any sign that the situation around the Strait of Hormuz is getting any better?
Woo.
Brian, no. And the
That one snuck up on me. All right, we got about an hour and 41 minutes to go. I'm your host, Cousin Benny, coming to you from theclosingprint.com. It is Friday, March the 6th. Just watching as Palantir defies gravity, just keeps going. Pushed right through the 50-day like it wasn't there. 200 days overhead. A lot of institutional buying. You can see volume today is pretty elevated for a Friday. Wow, Palantir is just doing it today.
going to ask you to editorialize / guess just your best estimate. I'm sure you guys are talking about this internally there as well. There's a lot of talk about this new reinsurance facility the U.S. government wants to, start. $20 billion number confirmed from the administration. Insurance is one thing, right? Like if something were to happen, we're going to cover the ship. But let's be clear, there are human beings on these ships that don't want to die. And so insuring ships is one thing, but risking lives is another. Matt, do you think that even with this new insurance mechanism, which will probably start up in a week or two, whatever it may be, that ships are going to be either willing or maybe forced, because some of these owners are probably not very nice people either, Matt, we know that, forced to go and make these dangerous runs, even if the ship's cargo is covered?
No. So it's as simple expectation. You can, with the insurance side of things, even if you have a naval convoy, a naval presence there to get these tankers through, that's little comfort if there's still a very high chance that you're going to get struck with a missile or with a drone. So it's our expectation until you get some type of resolution with Iran there, that there isn't going to be any material picked back up in this traffic going through the Strait of Hormuz. It's as simple as that.
And Matt, what about the rest of the supplies? It was based on your data that I realized that there might be potentially more of the global fertilizer supply than the oil supply traveling through this area.
No, exactly. It's just wild numbers you're talking about, right? So in terms of the crude side, it's a third of all seaborne, waterborne exports. In terms of fertilizer, 15 up to 30%, something like that. In terms of clean products as well, we're seeing about 20% going through there. In terms of talking LNG as well, so in terms of that Qatari exports, 60% of LNG exports on a global basis come out of three players. One is the US, one is Qatar, and one is Australia. And you can just see in our data that you've seen those Qatari LNG exports just being halted. And so this is having massive ramifications, right? And we are very much focused both on what is happening inside the Mideast Gulf as well as outside, because we're watching that strait. But, in a matter of days here, you're going to have refiners to get jet fuel, gasoline, diesel, whatever that commodity is, and it's just not going to be showing up there.
Yeah. So, we spoke with a trader last hour who said he was hoping to see these things flowing again by Friday to avoid kind of worst case scenarios with the oil price. From what you're describing, the vital importance of this, when do we need, from your point of view, shift back and forth so that we don't avoid oil going over 100 and other price spikes?
Yesterday, Kelly, right? And so you're seeing that kind of reality pricing into WTI. And when you look at WTI, it's over $90 a barrel now, right? Back last Thursday, we were at 65. And so that's the concern here, is that every single day that this goes on, there's dislocations, not just from the producers and that shutting in inside the Mideast Gulf, but outside as well in terms of not getting that supply. And so this is a massive concern here. We're forgetting, we're not talking about the price of gasoline here either, right? We're seeing us quickly add on 30 cents a gallon on the national average there, and we're still going to be playing catch up. So it's not beyond the realms if you continue to see oil rallying into early next week, that we end up with prices at the pump being $4 a gallon.
There's a pipeline that goes across Saudi Arabia from the Persian Gulf to the Red Sea. It's called the East-West Pipeline. It goes from their Abu Dhabi refinery to Yanbu. The Saudis have been turning this on. Basically, we've seen more ships on marine traffic by Kepler, by the way. You can see them all kind of floating around, loading. And we want peace. But, Matt, what were to happen if an Iranian drone, by the way, in 2019, the Abu Dhabi refinery was hit. So I'm not just making something up out of the blue. If something were to happen to that pipeline, what happens to the price of oil?
Oh my gosh, yeah, that's kind of a worst case scenario, because Saudi Arabia is in the best situation out of all of those Middle East producers, exporters, because they can ship, as you mentioned, on the East-West Pipeline. It has capacity of about 7 million barrels per day. And so we have...
Okay, we're hitting that 160 call wall right now, Palantir.
Makes sense. And so if that were to be cut off, then that's when you're really going to see prices supercharging higher.
All right. Matt, really appreciate you making the time. I imagine we'd like to check back in next week. Thanks so much.
Sounds good. Thank you.
And keep an eye on the defense names, as President Trump and Defense Secretary Pete Hegseth are scheduled to meet in the Oval Office with executives from these firms any moment now, starting around 12:30, to press them on accelerating their weapons production. These stocks are largely still higher this afternoon, and we'll bring you those headlines as we get them.
All right, coming up after the break here on Power Lunch, why one sleepy corner of Wall Street is suddenly waking up and is cranky. Leslie Picker will join us next.
Low tick alert minus 800.
All right, low tick. They can't give it to us all, right? They can't just like push everything up. Some things up, some things down. Palantir at the high, 160. We're above 160 right now, 160.77. All right. Palantir, nice pop there. Can we get a squeeze through 160? That'd be nice. I would anticipate we're going to get rejected. The 200 days there as well. Whoa, that could be a massive move here. Watching the dealers being caught on Palantir. Ooh, Palantir looking good.
It's officially called private credit, but it's really just non-bank loans to companies. And for years, many big firms on Wall Street got really, really rich off this market. Now, parts of it are cracking. Some of those big names are cracking with it. Leslie Picker joining us now on set. I mean, these are like names blew out. We never talked about. Now every day something's going on.
And we should be talking about it, right? Because this is a barometer for the health of what's going on in the economy, because all the consternation centers around what does this credit quality actually look like? And it's creating this skittishness among retail investors, which are piled into many of these funds. And now we're seeing, over the past few weeks, waves of redemption requests. How these firms are responding to the redemption requests is another story. That's why you're hearing about gates at 5%. That was the case with BlackRock today, where they basically had investor requests for redemptions of 9.3% of shares outstanding. They were only able to grant 5% of those, which means that if you wanted $100 out of this fund, you got $54. Other firms have taken different tactics. If they take Blackstone, for example, with its flagship private credit fund, B-Credit, earlier in the week, they basically had 7.9% redemption requests, and they were able to fulfill those, but they had to kind of change their policy in order to do so. Blue Owl also changed the structure of their funds in order to return capital to shareholders, halting redemptions completely. So this is just a byproduct of retail investors piling into these funds at the request of the firms, and now we're starting to see what happens in a market that's not as liquid as they maybe used to.
I think for me, it's all about keeping it spreading. And you know, what a lot of the frustration by these executives is they don't want their retail investors to panic, because every time they see a headline like this, retail investors and other private credit funds want to pull out as well. It's their policy. Usually, this 5% is a long-standing policy. It's kind of a feature, not a bug, really. Not to sort of throw them into the mix here, but when you look at the Jeffries, when you look at some of these other names that have had exposure to different loans that have gone bad or have you, if I were regulators, if I were these companies, if I were anybody in this, I just think let's get some sunshine on this. Let's talk about maybe how we got through the real estate period in 2022, and try to calm people down and make sure that they understand. And if that means understanding maybe how bad some of the underlying loans are, then fine. I mean, let that be part of the discovery process.
Yeah, I think you're spot on in terms of just education and understanding. And then the contagion aspect as well. You talk about the financial crisis. Something that we don't often talk about is the fact that the traditional regulated banking system is now very interconnected with the private credit world. They're making a ton of loans to the funds themselves, which a lot of people have brought up this idea of kind of leverage on leverage here, which to many people reminds them and smells a little bit like the crisis. But if there were some sort of serious cycle, that would affect everybody. That would affect private credit. That would affect public credit. And the fact that you also have these kind of, they call them NDFI loans, which are from the public banking sector to the private credit funds themselves, we just don't know how that will all be unwound if it needs to be unwound. And so I think that's the attention that a lot of
Did this all start with that First Brands and Tricolor, those car parts companies? Kind of quiet. Was that sort of the match?
The irony is that the situation with Tricolor and First Brands is those issues were largely in the syndicated market. Those were bank-sponsored loans. Those weren't really private credit. The structure of the facilities looked a little like private credit because they were negotiated on a one-to-one basis. But Jeffries is a bank, essentially. We saw news this morning from Western Alliance how they're taking an impairment charge related to something.
So they just loaning them to like bad credits, like your uncle that doesn't pay you back? Like what?
They would say those are alleged frauds. So when Jamie Dimon talked about this in the fall, and he mentioned cockroaches, he was talking about basically, when you see one fraud, there's probably another fraud. At this point, they're going through the court system to kind of figure that out. And we've seen a couple of those frauds. To many people, maybe kind of a late cycle thing that pops up. But it gets
Also, note Palantir, the Bollinger Bands are opening up. Coming out of a squeeze. Wish it was Thursday instead of Friday.
And might be worth what. So even the action this week is interesting because the software publicly traded names are coming back, but we're still seeing pressure on the space. I think it would help if these companies, for better or worse, said, again, here's exactly what's in this, here's what we think the marks are. That's where a lot of the pressure is emanating from.
And we have these business development companies, which are publicly traded private credit vehicles that do disclose this type of data. And you're right to point out the software exposure because private credit does have outsized software exposure relative to the syndicated market, the public market. That said, we've seen that the default rates are pretty modest. Mm-hmm. The question is really around the marks.
ABAB continues higher. ABAB.
News that BlackRock, it was actually older news, but it caught a lot of headlines about BlackRock.
Not Howard Marks.
They slashed the value of
Richard Marks, the singer, he's fine.
A private loan that they had made to Infinite Commerce, which was an Amazon aggregator.
Exactly.
So,
So these are kind of basically investors look at that and they say, oh, that was 100, that was basically valued at 100 cents on the dollar, and then it was zero. And wait, how did that happen? It caught everybody kind of off guard. And there was another situation with Renovo that happened back a couple of months ago, where that's a home renovation roll-up essentially. And they saw something similar where, it kind of went to zero very quickly, and everybody said, can we actually trust the way that private firms are marking these things? So that's kind of another issue, as everybody's just trying to sort things out. There is transparency. Whether you can trust the transparency is another question.
That's a good point. Leslie, thank you very much. Great stuff. Really appreciate it. Leslie Picker covering the space tonight.
All right, let's get more now on bonds. Rick Santelli's in Chicago. Rick, what are you eyeballing?
Well, I'll tell you what, before we get to anything regarding the bond market, I think I want to talk a little about options today. Interest rates, suffice it to say, down big on the week. down a little on the day in the long end, not the short end. But I have Chem Carson here today from Kai Volatility Advisors. When it comes to volatility and options, he's the man. Chem, thanks for joining us today. Let's get right into it. What are the options markets telling us since the conflict began really on Saturday?
So March OPEX is a quarterly expiration is never created nowadays.
Oh, but you're being serious.
Absolutely, and I mean that because we have so much increase in options volume and structured products that the amount of effects that this is having on the rest of the markets is dramatic. If you thought today, right, what happened today? BlackRock stopped redemptions, right?
Their funds go from 100 to 0.
You have unemployment numbers awful, right? Never mind, right, all the other things that are happening with oil in the Middle East, right? You put those all together, you would think we'd be down 2, 3, 4%, 1%, and off the lows meaningfully here. Why? Because index vol is incredibly compressed. The S&P 500 options are compressed. Structured products, sell vol, dealers, market makers, banks, they are all along that vol. And so if the market moves big, they have stock to buy.
Okay, so quick translation for some of you not too in options. The products have just exploded in all the different products there are. And having said that, it actually creates this wide landscape that absorbs risk.
That's exactly right. It's reflexive.
All right, Palantir got a little profit taking at the 200-day moving average. Not surprising. The 210 level. I'm sorry, the 160 level, 160 call wall, little resistance. Doesn't mean we can't get above it. For now, we're getting resistance, though.
Let's get into that. Because back in the days when I used to trade options, eons ago, we'd always see volatility come down in front of the weekend. I can't imagine that's happening because traders have 2 days now of uncertainty.
Yeah, actually, what we're seeing more and more, and I think it's going to be very important this year, so look for this going forward, is as you go into the weekend, vol is always compressed, right? But because that tail, even though the at-the-money vol is compressed skew, the downside options are bid, right? So these dealers are actually short those out of the money puts. So there's a tail risk. And so what happens as you go into the weekend is people can't hedge that risk as well, and nobody's going to catch a falling knife right into the weekend. So vol can actually move, the markets can move a little bit more into these Fridays and the Mondays than you would otherwise see. So I suspect with vol compressed throughout this year, with all this vol compression, you're going to get a lot of moves Fridays and Mondays.
Now we're out of time. Real quick, has it been an orderly move since last Friday?
Incredibly orderly, and I think it will continue to be until we hit about March 18th, until OPEX. Expiration is March 18th, March 20th is OPEX.
So that's
after that, things kind of unpinned.
Put an X on your calendar, folks. All right, Kelly, back to you.
Gentlemen, thank you. Appreciate it very much today. Rick Santelli with Chem Carson. Coming up, our trader says now's the time to load up on the mega caps and has the catchphrase to match make tech value again. Make tech value again. Do we want tech to be value? Should we make tech growth again? We'll get into it after the break.
Endless customization and track market trends with up-to-the-minute news and insights. Trade brilliantly.
Thomson Reuters moving higher through the 50-day moving average. I posted some commentary on Thomson Reuters in the alerts channel. Looking for more upside in Thomson Reuters. You can see the Kirby over here start to get a ceiling somewhere around 127, 128. That big histogram bar right there. So we got another 5 or 6 points to go, if not more.
Wonderful question. I just got off a client call actually, and we were talking to him about staying the course. I've been doing this for quite a long time, and these shocks to systems, the unintended
or the unanticipated, although there was some buildup to this, of course. But when the bullets start flying, when the rockets start flying, markets react to that. And history teaches actually a lesson of leaning in when wars begin. I don't mean to reduce the human element of this, but history is pure on its history is a pure teacher, which talks about leaning into these types of dislocations within markets. Now, this might take, again, it could be weeks or even months as this plays out, but patience by clients, leaning in, even leaning into some weakness is what we're advising clients at this juncture.
I appreciate the caveat that you gave, and obviously that is something that you certainly have to take into account. Using history as a guide, when you look back at conflicts like this or war, what are the mistakes you've seen investors make?
So it is the knee-jerk tends to be the biggest mistake, which is to see that risk has risen within marketplace. You go to the VIX, you can look at any fear gauges, right? With a lot of measures of risk in markets, and they run from them. And so you get all of the pain of the downdraft, of the initial downdraft, and then none of the subsequent recovery. Before going to war, we were, give or take, at all-time highs. So look at every other past war or crisis as a buying opportunity, right? We're at all-time highs, so of course they were. But you never know going forward whether or not this one will
Palantir fading off the highs.
You have to have sort of faith or hope that it will. Not that hope is a strategy, but history as a teacher is certainly a strategy or a starting point. With our investment committee within our firm, we then talk about paradigm shifts. How is this one different? What else
High tick alert plus 800.
High tick alert. Okay, here we go. Coming off the low. High tick alert.
What the war does to very important inputs to markets, and that is inflation, price of oil, right, strength of economy, consumer confidence, all of these things have to weigh in. But I try to take what happens in war.
Schlumberger coming off of the 50-day right there. Schlumberger fade of the few days. All right, there goes the S&P 500.
But certainly we've got to get through a lot of these unknowns that are right out our windshield, as I speak to you today.
That's right, and because you wonder which side of the mandate is going to matter more to the Fed, because there's inflation risk to think about.
How many times have we hit this? 5 times? Not quite 5 times.
What we have been doing since really the late second quarter, third quarter, fourth quarter of last year, we have been moving away from the Mag 7 on the margin. Okay, so we have been taking money from Mag 7, moving it into small cap domestic, international, emerging markets, diversifying the portfolio progression were. We know that over the past few years, diversification has been diversification, right? Anything away from the top sort of weighted stocks within the S&P 500 have hurt absolute returns in client portfolios. We think a shift has happened, and it is right it's already 6-9 months old, and we think that shift continues for quarters, even years ahead. We think clients should utilize this weakness that they see, particularly in small cap over the recent week or two, to continue to move into small cap, perhaps dollar cost average into small cap stocks.
All right, looking for more upside. We got to get through that high of the day first.
The NASDAQ's down about 5 from highs. Small cap value is where I want to put my money right now. If I had to buy some individual stocks, I'm going for the big value plays in the Mag 7, which are Amazon, which are Google. If I want to speculate, not for my clients, but if you hate your money, I'm all about P-Sky right now, Paramount Skydance. I think that people are undervaluing the UFC situation and bringing that to that network. But overall, I think now more than ever, I would look at broad-based indexes. And if we see a bad Monday or a bad Tuesday or just
3 days of a little bit downward volatility. I want to be in small cap value. I want to be in the S&P. And then, like I said, wait on the NASDAQ a little bit, but then you got to go deep in those forward multiples compressed because the earnings are strong. It's just the sentiment, I think, will bleed off soon. Lee, appreciate it very much. Great to check in with you. Have a great weekend. Thank you. Lee Munson.
Let's get it over to Seal Modi, the CNBC News Update.
Brian, here's what we're watching at this hour. The Justice Department has formed a working group to look at possible federal charges against Cuban government officials. That is according to a report from the Washington Post. President Trump hinting yesterday that he would turn his sights to Cuba after Iran, saying it's just a question of time. Google and Amazon say they will continue offering Anthropic's non-defense related AI products to customers after the Pentagon officially designated the company as a supply chain risk earlier this week. Microsoft was the first major partner to say it will keep working with Anthropic. Late Thursday, Anthropic said the Trump administration had left them no choice but to challenge the risk designation in court. And Texas Attorney General Ken Paxton says he will stay in the Senate primary race as it heads to a runoff no matter what. Paxton forced a runoff against incumbent Senator John Cornyn earlier this week. President Trump said he would endorse one candidate in the race soon and ask the other to drop out. Cornyn had a slight edge over Paxton in Tuesday's election results. We'll be watching it. Brian, for now, back to you.
All right, Seema Modi, thank you very much. All right, President Trump vowing on social media there is no deal with Iran unless unconditional surrender occurs. What's the likelihood of that happening? Talk to somebody that knows Iran probably better than anybody else. What's next?
All right. Hope everyone's having a good day. I'm your host, Cousin Benny, coming to you from theclosingprint.com. It is Friday, March the 6th, only the first week of the month. First week of the month. And we've had a lot of activity so far this week, losing the 50-day a couple of weeks ago, can't get back above it. So you have to be more risk averse or risk off below 6,800. That's the threshold. If we can get above 6,800, then we can start to look a little less risky. But you got junk bonds down, you got biotechs down, you got Bitcoin down. All of the standard measures of risk appetite are saying no go, risk off. Okay. That said, I mean, we have a lot of stocks that are, very valid day trades, like Palantir up into the 160 call wall. We just got rejected at 160 and it's pulling back. So looking for the pullback for an opportunity on Palantir. I would too. We'll probably get above the 200-day next week. So there's no hurry to jump into Palantir at this point. If you're already in it, maybe take a little profits. Been a pretty good day. Stocks like Thomson Reuters. You've got ETFs like the software ETF performing very well. Over here on the right, it's the daily chart. IGB coming out of a base. Okay. It's pretty obvious now. The media is reporting on it now that institutions have picked up shares. You can see the base. You can see the volume. Pretty obvious institutions were active over the last 8 to 9 trading days. IGB has a number of stocks in it that we're interested in. Okay, so here's the IGB list by weight. Microsoft 9.38%, Palantir 8.65%, Oracle 7.45%. Really interested in Oracle. I have these top 3 here. Palantir, I just took some off into strength, but these 3 actively trading. Okay, so these are the ones I'm interested in. Oracle coming off the low. ORCX is another way to trade it if you don't want to trade the ETF. I like the ETF as well as Oracle shares. ORCX, cheap way to play it at $10. You know, buy $1,000 worth and just sit on it. Let it move back up. I'm looking at 4 times, 3 to 4 times return by next year this time, maybe.
Well, at this point, what Donald Trump wants is what's more important, and that increasingly seems to be regime change. The question is whether it's going to be complete regime change or something like a Venezuela model. Increasingly, it looks like Donald Trump is leaning towards the latter.
Venezuela, the new, for now, leader of Venezuela.
Palantir, PLTU as well. You can trade PLTU at a third discount, 30% discount, 60% discount, really. You can buy it for $50. PLTU.
That would fit that same mold. They don't have to like us, but they would be willing to work with us, particularly around their nuclear program.
You know, I think it's possible that the Iranians will compromise on their nuclear program. In 1988, when Ayatollah Khomeini was forced to accept a ceasefire with Iraq, he likened
Amazon dropped off. Amazon had a good week up until yesterday. We got rejected at the call wall. Now we're regrouping. Still think Amazon will be much higher in the next couple of months. Just need time. If you're trading options, make sure you're out May, June, July, whatever.
as well as Ali Ladajani, who also comes from a Revolutionary Guard background. But this is where I think Donald Trump gets it wrong. He underestimates the ideology that these men.
I don't think he does. I don't think he does. So I'm going to change channels on you. You really think he's that stupid? Okay. CNBC. Oh, that's CNBC.
And so I think that's something to take note of. What I think we should be looking now is weekly initial claims. So far, those have been very modest. And as long as they continue to be modest, I think the market can hold on to some optimism. We're not going to continue to see an increase in unemployment. But if that changes, I think there's a lot riding on that number right now in terms of the market's optimism and willingness to pay high premium stocks relative to history and tight credit spreads.
Amy, what are employers looking for now when it comes to the skills that are in demand? Is it all about having knowledge and insight on how to operate with AI?
Okay, Palantir turning back up now. Looks like it's not going to stop.
Necessary to do the job. James, I'm curious to know your thoughts about the challenges of AI and how that contributes to headwinds in the job market. And I think about in the context of, for instance, Block recently announcing they're going to slash basically almost half of their workforce because of all the efficiencies they found with regard to AI. How do you look at AI? Is it friend or foe to the job market, or a little bit of both?
I mean, it could be both, but I think net it's probably more of a headwind. Remember, there's a lot more that we don't know about AI than we do know at this point. It's only really 3 years old when it comes to like sort of being released to the masses. So I'd be careful about making any confident predictions about what AI is going to do to the labor market. But it's something to consider that we have sort of this collision of a sort of a secular slowdown in the labor market combined with the secular potential deterioration of or displacement of workers from AI. We don't know exactly what that's going to look like. I think that's anybody's guess, but it would be hard to imagine, at least in the short term, AI is going to start creating jobs immediately. It's probably going to take away more jobs than it creates. So I think that's something to consider. How fast that will happen is anyone's guess.
Amy, I want to go back to you on what you're seeing at Adecco with regard to staffing.
Palantir. S&P is just chopping around here.
They reach the point where they need to hire someone else. What are your trends you're
selective than they had in the past and taking the time to get it right. An interesting point about AI, James just mentioned, is it really is a hindrance to productivity in some cases, because as companies are investing in AI and we're seeing them free up time, we just did a survey. On average, the American worker is saving about 2 hours a week thanks to AI, but they're not using it to produce productive work and give an ROI to their employers. They're using it to play on social media, online shopping, and things of that nature. So that's another trend to look out for in AI as well.
James, final thoughts to you. When you think about sectors, we did see a decline in healthcare, but a big part of that had to do with the strike. So that may be just a one-off there. What's your thought when you look across sectors or broadly across the job market? Final thoughts.
Yeah, I think broadly, I think the sectors, except for healthcare, with the exception of this last month, have been very weak and shedding jobs. Healthcare we've sort of been relying on healthcare as the sole engine of growth in the labor market. And that's not a great place to be. You're putting all your eggs in one basket. The healthcare industry or sector can't do it alone. I think a real healthy labor market would see broader participation and job growth among sectors, and we're just not seeing that right now.
All right, we'll leave our conversation there for today. That's James St. Alban, CIO of Ocean Park Asset Management, and Amy Glazer, Senior Vice President of Adecco. The pressure is still on to Wall Street today amid that weaker than expected jobs report and a spike in oil prices. That's going to do it for us on the watch list. Download the free Schwab Network app. It's available in the App Store. And tune in 24/7 on schwabnetwork.com. I'm Diane King Hall. Thank you for watching. You've got Market on Close with Sam Vargas and Marley.
All right, we just the S&P is just chopping around here. You can see whenever the hedge flows go sideways like this, there's no trend. You're fighting the trend. You could sell premium, but I wouldn't do anything about buying at this point. Got about an hour to go. Hour and 3 minutes to go. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Friday, March the 6th. Coming into Power Hour. You see Bollinger Bands are opening up on IGV, software ETF, IGV. Bollinger Bands opening up. Volume shows institutions. We're into the Kirby over here on the left. There's very little resistive volume on the upside until we get up here. Looking really good. Top three stocks. The top three stocks, Microsoft, Palantir, and Oracle, all of them look good. Coming off the low. Oracle, looking good. Microsoft. Palantir, probably the best today. Palantir pushing through the 50-day, but getting stopped by the 200-day. It's turning back up again. A little profit taking.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand. Schwab Network, streaming 24/7, any screen, anywhere, free. schwabnetwork.com.
Mom, when my grandparents moved here, did they know what our family would become?
I don't even know if they could envision it, to leave everything behind, literally come across the entire world. I think that we totally met what their wishes were. Schwab has been with us for almost 25 years through purchasing of houses, opening up our business, having children. They've always been there for us.
I want to invest with a company that can help me give my family a happy financial future.
Stay connected to what moves the market. Download the Schwab Network app and stream anytime wherever you are.
Okay, number of stocks advancing today, only 152. off the worst levels of the session. We were down at about 100 stocks out of the S&P 500. 100 out of 500 stocks were rising. The rest were declining or unchanged. Same thing with the Qs. Only 35 stocks out of 100 advancing. And the IWM, well, IWM doesn't look that great for now. Small caps. So hopefully it gets better next week. We're anticipating that software will continue. Palantir showing lots of volume today. Palantir, PLTR. So let's see. The ATR on Palantir is $7.76. We're up $7, $7.50.
You did just touch on one of them. I'm pretty sure you guessed it. It's oil hitting its highest level since October of 2023 today. Crude prices topping $90 a barrel. We're still up above that level at 91 right now after President Trump called for Iran's unconditional surrender, sending fear through the markets that this conflict could go on longer than anticipated and significantly disrupt global oil supplies. Qatar's energy ministers are also saying today that oil could hit $150 a barrel within weeks if the Strait of Hormuz is not reopened. And Marvell stock jumping more than 20% today following its report after the bell yesterday. The company posted a beat on both the top and the bottom lines alongside rosy guidance. Marvell said it expects revenue to grow nearly 40% and approach $15 billion in its next fiscal year. But Gap shares are trading lower today after posting fourth quarter results that missed estimates. The retailer's holiday quarter came in worse than expected as hundreds of temporary store closures from winter storms weighed on comparable store sales. Gap was heavily impacted by global tariffs and says it could see better profit margins later this year. Lots to get to there and other top stories to discuss, but let's see how the markets are faring as we head into the end of the trading week here. On the S&P, we're still down about 1% at 67.64. The Nasdaq also down about 1% right now, 24,784. On the Dow, we've shed more than 400 points right now, 47,541. That's down about 0.9%. And the Russell 2000 down at about 2% today at 2534.63. Taking a look at where the 10-year is moving to, we are slightly lower. We're at 414 right now. The dollar at 98.96. For gold, we are moving higher, up about 1.75%, 51.68 a troy ounce right now. There's that crude oil metric I just mentioned. We're above $91 a barrel now. That's up almost 13% just today alone. And Bitcoin down about 4 1/3% at 68,390, giving up most of the gains that it posted earlier this week. I do want to check back in with Sam though and see what stories or themes caught her eye today in the market. It certainly was a busy day for both of us. Sam?
It absolutely has been. It's just been a flurry of headlines hitting the tape. I mean, Marley, you mentioned the Trump and the Qatari energy minister comments. Markets also digesting this afternoon that story from the Financial Times, which says the U.S. Development Finance Corporation will create a $20 billion reinsurance facility for Gulf shipping to help flows of global cargo and oil. So no doubt we'll unpack some of that with our guests later. But not helping things today, of course, was that tough jobs report. Payrolls showing a surprise drop last month while unemployment ticked up. There is a caveat. January and February can be volatile. There are also job strikes and bad weather, but markets were already on edge about the inflation pressures. So bad news was really taken as bad news today, as a negative jobs report would have supported more rate-cutting bets, but the oil spike is keeping a lid on things. Traders are also piling into metals today, but within stocks, there are some counter trends. Some of the software names continue to rally, like ServiceNow. Cybersecurity stocks have been up as well. Some of the retail names, like Costco and Kroger, have been higher, and the Chinese ADRs are also rallying into the weekend. So traders are looking for opportunity in some of the more beaten-down corners of this market. We'll continue to track that into the Friday close. But Marley, I'll send things back over to you and Jenny with some of today's top movers.
Thanks so much, Sam. It wouldn't be top movers without you. Fortunately for this week, oil is our top mover on the day right now. Not a usual story that we talk about, but certainly with the events going on in Iran and some of the commentary that we've gotten today, we are seeing oil at the highest levels we've seen in more than 2.5 years. And I think there's
All right, S&P is starting to go.
I know you outlined some of it, but I mean, like as far as the tensions we've seen that are facing right now, crude oil prices, of course, escalating to over $90 a barrel as we are seeing the Middle East tension raising fears of supply disruptions, which could hit the Strait of Hormuz, which handles now roughly 1/5 of the global oil flows. And so comments from Qatar's energy minister also warning oil could spike towards $150.
Netflix following through. Netflix looks good. New York FANGs are all mixed. Nvidia's down. Netflix is up. Apple's up. Microsoft is flat. Let's see what Boeing is doing since they're meeting with the president. Boeing. Big bullish day on Boeing. Okay, so that's back up to the highs. So did you take the ABCD pattern? You take the ABCD pattern on Boeing?
Absolutely, and I just saw a breaking news headline come across as we near the end of the close. If we maintain the levels that we're at for oil right now, it will be a 35% surge for the week. It's the biggest gain in futures trading history. So back all the way back to 1983, which was when the futures trading on oil started, or at least they started keeping records of it there. So a tough time for oil, or depending on, I guess, how you're invested, maybe not a tough time. But Marvell, let's talk about them next. Up almost 20% still on the day. Have pretty much maintained that move, that double-digit 20% move through most of the day. On the heels of its earnings, we weren't sure how the markets were going to react. We've seen mixed reaction from good numbers, good guidance, but Marvell was very favorably received. I mean, no kidding. And it was almost like this. The market weakened off the open. This thing has only strengthened throughout today. We pulled back from session highs, I will admit, but I mean, delivering one of the strongest AI infrastructure quarters in semiconductors across the board. I mean, just based on this move today. The earnings call clearly was able to reframe the company as an AI data center pure play rather than more of the diversified chip vendor that I think was driving some of the recent weakness. So, I mean, overall, fourth quarter results did come in better than expected. Revenue rose 22% year over year. Non-GAAP earnings per share also did come in at the higher end of the previously given guidance. And the key driver was data centers. I mean, no shocker there, generating $1.65 billion in revenue. That's now representing
Boeing still pushing here, end of day.
Underscoring how central AI and now hyperscaler demand has become to this model. And so their commentary was aggressively bullish on forward demand. They did give guidance now for fiscal 2027 for revenue to grow more than 30% to nearly $11 billion. Fiscal 2028 revenue would also continue to rise, reaching, they predict, $15 billion, driven almost entirely by these AI-related connectivity and custom silicon programs. So custom ASIC revenues also scaled from essentially zero just a few years ago to now $1 billion annually. I mean, some of these major programs ramping. And so it does seem like, as far as the story from Marvell, margins also even aided this really strong story. This is how you frame an earnings report, though, is not only see, I mean, obviously part of it's the numbers. The fact that we're seeing revenue growth accelerating is huge. But I mean, the optimism on their role in data centers, I also think is hugely why we saw this upside, because we haven't seen that degree of sheer really optimism. There's a lot of more caution, not skepticism, but this optimism reflected. It's nice to see that translate, of course, into share gains today, despite the overall market weakness. Yeah, the narrative has certainly been a part of the story.
Okay, Boeing looking good.
Season, we've seen companies pivot based on the call and the narrative that management's putting out, whether or not they seem optimistic, neutral, or pessimistic, but certainly optimism from Marvell, not just from their management team, but also from most of the analysts that I spoke to today about their earnings. But double-digit move to the upside for Marvell, double-digit to the downside for Gap following its earnings. Yes, and I think Gap, unfortunately, follows some pretty similar commentary, similar but different to American Eagle Outfitters, Abercrombie & Fitch this week. Gap's quarter did reinforce still their turnaround is real, but execution does still remain to be, I think, a major risk. So we saw revenue that rose modestly
year over year. Earnings per share landed essentially in line. Comparable sales did rise 3%, which did actually mark the 8th straight quarter of positive comps, which is a major credibility milestone after years of declines. Brand level performance, though, was mixed, but fairly instructive. We did see the Gap brand itself being a standout, posting 7% comps, signaling again some renewed relevance about their pricing power. Old Navy, which is their largest contributor to their revenue, delivered 3% comps. Banana Republic saw its third quarter of consecutive comp growth, with Athleta being really a weak spot quarter after quarter now. Comps down about 10%, reflecting the ongoing assortment and brand positioning changes. And I also think Hello, something we see with On, Nike, Adidas, Lululemon. I mean, the list goes on and on. Even Decker, challenge that was one time
S&P pulling back a bit.
buying during the pandemic. It's a different world now, frankly, which I think also speaks to some of the recovery we're seeing, frankly, in like a name like Banana Republic. But capital allocation was one bright spot. They did that in the year with roughly $3 billion in cash. So again, don't let this move deter you from the fact that this is still its turnaround story underway. But I do think that with right now more modest growth, and again the apparel space being fairly challenged this week.
Netflix trying to push higher. All right, market's pulling back. So much for that. No follow through.
But a job cut story, and we've had quite a few of these of late. Oracle is now the latest.
Yeah, I mean, adding on to the headline, of course, I believe we got just a week ago from, of course, Block and Jack Dorsey, like 40% of their workforce. This is still a bit more alleged. We don't know confirmations yet, but I mean, numerous outlets reporting this, so you could say it's a coming real reality. Oracle cutting thousands of jobs, but first reported by Bloomberg, as the company does move to handle cash crunch from a massive AI data center expansion effort. This report does say this could affect divisions across their company. They could be implemented as soon as this month. But some report did say that this is really, again, a
All right, NVIDIA dropping off here. NVIDIA.
And the job reductions are going to be very much wide felt, not specific, but some will be in these categories that they do expect to need less of because of AI. But again, this is not per Oracle themselves, which was a very different tone we got from, say, Block CEO Jack Dorsey. Now, I will say that when you look at their employment on a year-over-year basis, again, reportedly we could see as much as 20 to 30,000 jobs in this major restructuring, but that's at the high end of even expectations right now. If you take their total employment at the end of 2025, 162,000, that was actually a 2% rise from the prior year. Now, this still does not reach their peak of 164,000 employed at the end of 2023, but it will show you that they've been relatively stable. This would obviously mark a dip, but does not go to show that they're seeing a massive impact already with AI, because again, on a year-over-year basis, their overall employee headcount has been relatively stable for years now.
And Oracle not seeing too much of a response from this one. Obviously, we saw a massive response to the upside when Block announced that they was doing its layoffs. We've seen similar moves from Meta and a couple other big names, but Oracle not seeing too much movement on this report. Jenny, thanks so much for breaking that down for us. That's Jenny Horn, co-host of Next Gen Investing here on Schwab Network. But I do want to check back in with Sam on the floor of the 9C for a look at what we have coming up next in the show.
Well, Molly, we're going to break down today's surprising jobs report and find out what kind of implications that could have with the Fed and potential rate cuts. Market on close will be right back.
Hey, investors, you know the market moves. Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning.
All right, Boeing at the high. S&P pulling back. Netflix trying to push back up. NVIDIA's down. Apple trying to hold on to the early morning pre-market zone. A lot of back and forth. Tesla pulling back. Future's starting to bounce now.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast right for you. Are you a long-term investor? Our investing webcast series different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Real-time access, data-driven analysis, from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live. Subscribe free at schwabnetwork.com.
All right, New York fangs are all mixed up. They don't know which way to go. It's like Chuck Berry. Still not bad, though. We came off the low of the day. New York Fang components. Okay, New York Fang components, 10 stocks. Good to pay attention to these. MACD, Stochastic, RSI are all rising. A little hook on RSI today, but overall, this is trending higher. So I would say that given the oversold conditions in these tech names, we have a good probability of follow through next week, especially on the software front, like stocks like Microsoft. That looks really good. Snowflake. Yeah, those look like they could follow through. All right, we got about 44 minutes to go. 44 minutes to go. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Friday, March the 6th. Coming into the last few minutes of the trading day. It's been a pretty volatile week. Core Weave coming back off the low here. Core Weave. They keep talking Oracle. That's good. Keep talking about Oracle. People start to pay attention. Oracle, and want this off the low. It's number 2 by weight on the IGV software. IGV is number 2. I'm sorry, number 3. Palantir is number 2.
I think it could be viewed as a positive for the heavy spenders because we've seen such a deterioration in the return on invested capital, spending down their cash and having to turn to bond markets. However, there's a big portion of this market that has benefited from this massive spend.
So you got like what, 25% in these top 3? The top 5 are really good. CRM and App 11. Got a feeling this is going to do very well. All right, Netflix is pushing higher at the moment. Watching Netflix. Palantir pulled back. That's exactly what we thought would happen once we hit the 160 call wall. Netflix turning back up. Netflix turning back up. Having a good day. Netflix.
Significantly, and I think it would be back to looking at the fundamentals of AI and private credit, and I think that's going to be offset by remarkable resilience of the economy and earnings.
What happened? You said, I'm sorry, you said it best earlier that we're up.
Netflix about to take out the high of the day. Netflix about to take out the high of the day. What if? All these hyperbole comments out of Wapner, out of CNBC. What if? There goes Netflix. Netflix is going.
That's Iran's strategy, isn't it? It's chaos. Drag it out. It's chaos. Create as much chaos, shoot at everybody in the neighborhood, and create some real problems for the financial markets, hoping that kind of pressure pressure gets everybody on the other side to say, all right, let's try to work out a ceasefire here. But the president says it's unconditional surrender, and I think we're going to show some more firepower there. That may actually look. I think that Iran lost the war. It's just they don't know that. They don't concede that. They think that they could just do it as a terrorist state, which is what they're good at. And I think the kind of
Netflix hire
forces that will continue to pound away at them will force them to relent.
Cameron, I'll give you the last word. I mean, the optimism that Ed is still trying to project and believes is still the backbone of this market. Do you think it's too much?
Micron turning back down. Micron.
Markets are weak enough that we'll see the taco trade, and that certainly was the case with tariffs. But tariffs were
I hate that expression.
The White House. Now you have a lot more players involved, which might mean that they might want it to stop. But the question is, have you set off something that could have more duration?
Well, this is different too than putting on tariffs and taking off tariffs on a whim. I go back to the Colin Powell break it unit, and this is a situation that needs to be watched dearly.
This will be resolved, Perez, and we have to remember we have the best companies in the world. We got the best market in the world. We got the most liquid market in the world, and investors will pay for that performance. Period.
All right, guys. Thanks everybody. Appreciate you. Now to Christina Partsinevelos for a look at the biggest
Netflix making new highs.
Hi, Scott. Well, let's start with shares of Marvell because they're popping on the back of strong demand visibility just over the next 2 years for not only their chips but their connectivity products too. The company's data center revenue surpassing $6 billion. That's a 46% increase from last year. These shares are up quite a lot, almost 18%. Not moving solely on fundamentals alone. But
Netflix looking good.
Potentially into the S&P 500. There's rebalancing today. Index funds would be forced to buy Marvell if it gets added. So traders are trying to front run that demand. So that's how you're seeing shares up higher. Palantir shares also going higher, up about 16% week to date, higher almost 4% today as the Iran war continues. It's pacing for its best week since April. A Rosenblatt analyst saying the conflict actually could help its government pipeline. And last but not least, Jeffrey Financial shares. Those are sinking 12% after Western Alliance filed a lawsuit against the firm related to a disputed loan tied to First Brand. Western Alliance alleged breach of contract and fraud and said it would charge off roughly $126 million loan.
All right, Christina, thank you. Christina Partsinevelos. We're just getting started here. Coming up next, retail is having a very rough week. Obviously, gas prices going up, sentiment around the retail complex going down. The XRT is down nearly 5%. Star analyst Matt Moss, he's here next. He'll tell us what you should do.
S&P dropping off. All righty. 37 minutes to go. 37 minutes.
Strategy on how to utilize this beyond 1 year. So what they ended up doing is they ended up retiring those employees. And here's the interesting thing. When they rehired those employees to do the job that
Trying to get through 100 today. Netflix. Here goes Netflix.
because the economy was so bad for those employees and they had been on the unemployment line for 6, 7 months, 8 months. So what I'm generally saying in terms of AI, I think that it's such a buzzword and companies feel like they're just scared of getting left behind, so they're incorporating it, but they don't always know what its real function is and they don't know how to really utilize it for their business.
You know, it's interesting. The head of macro research over at Charles Schwab, that is Kevin Gordon, pointed out today that perhaps some of the data we've been getting really reinforces that we are in some form still of a jobless expansion. Because, in fact, Jason, some of the data we got out earlier this week didn't look too bad. I mean, the retail sales, okay, some bad weather and maybe some seasonal factors there. I mean, it's probably up okay. Particularly when you look at the services PMI as well. We got some ISM. At what point do you think it becomes a problem? Or do you think we still keep chugging along with this jobless expansion and recession in some parts of the labor market?
Yeah, I actually think we have a problem right now because we're not creating new jobs. What I like to see is the fact that, and I'll go back to healthcare, because healthcare has been the bedrock of our economy in many ways, because it's the one industry that has continued to grow. But when you have, excluding what's going on in customer permanency, if you spend time in the healthcare arena, which I do, you You will hear nurses, you will hear medical assistants, you will hear physicians, you will hear going down the line all the way to the janitor. And they're saying, I don't know how much longer I can actually stay in this because these companies are prioritizing metrics as opposed to direct care experience. And so you're starting to see more and more people that are leaving that industry. I look at healthcare, and when I start seeing people leaving healthcare, that's when I start to think maybe we do have a big problem here.
Jason, if we have a bigger problem here, are we looking at, from your perspective, we're seeing a shift in momentum and perhaps healthcare isn't going to be our bolster here anymore? Or are we looking at a potential collapse brewing under the surface?
I'm always the eternal optimist, but I'm looking at the numbers and I'm going based on what I'm hearing in the field. We're looking at a potential collapse. Now, understand when I say a collapse, I'm not talking about a 2008 collapse, but I am saying that our economy has been incredibly robust and incredibly strong. We're starting to see a cooling of that economy. We're also seeing now attention is being applied to this because we spend so much time talking about the numbers, but we don't really go out there and hear the voices of the people. What the people are saying is, I need more because inflation is going up, my mortgage is going up, the price of eggs is going up, my kids' healthcare is going up, and I don't know how much longer I can continue to survive.
Futures continue to drop off. Really didn't think this was going to happen, but here we are. Here we are. Okay. So the futures are off, but individual stocks look okay. Palantir coming off the high of the day.
You're looking at pressure points we should be watching out for to get a sense of, when it's going to become a real problem here, when we should be sounding the alarm bells on the economy.
I think any time that layoffs are used as a business decision in terms of making our finances better, in terms of the perception, I think that's an indicator that maybe we have something wrong. Because, look, we can talk all day long, again, about the numbers, but we're also talking about public trust. We're talking about corporate trust. And when you have employees who are saying, I'm doing my job, my numbers look great, I'm hitting all these markers, but I'm still on the chopping block because our company wants to go public next week. Or our company is public and their stocks are struggling. Therefore, they say, let's go ahead and do a layoff. And I get the axe. And all of a sudden, I see their stock jump 15%. That's when I start to say that how we're looking at this is that we need to start.
Micron continues to drop off here. Micron. Netflix, I'm reducing exposure.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. all with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
Crude oil, USO.
I'm Diane King Hall on the floor of the New York Stock Exchange. When markets react, we are live with analysis that matters. Watch now, only on Schwab.
Way beyond standard deviation 3 bands.
Sometimes, you could have done better. The same goes for where you invest. Level up and invest smarter with Schwab.
Welcome back to Market on Close. I'm Marley Caden alongside Sam Vadas in New York. Some breaking news. A report from Bloomberg saying that Oracle and OpenAI are ending their plans to expand its Texas data center site. Now, you can see here, I was talking to Jenny Horn at the top of the show about Oracle. They were up about 2% at that point. We've now moved about 2% to the downside on the news about these scrap plans as they are tied to this highly...
Netflix. All right. Pretty much top tick that right there. Netflix.
It's not going to stop being built. OpenAI and Oracle will just not be expanding their data centers in Texas after negotiations dragged on over financing and OpenAI's changing needs. All of this according to Bloomberg here. These collapsed talks, though, however, have created a potential opening for Meta Platforms to step in because that project site can be leased. They could lease this expansion site in Abilene, Texas, from the developer. Now, important to also note, NVIDIA have heard of this story as well. NVIDIA helped facilitate, reportedly from Bloomberg, a discussion with Meta and the developer to get a new tenant into this space. NVIDIA highly involved here, of course, because its semiconductors are being used at the Stargate site. They also paid a $150 million deposit to Crusoe, the developer, to ensure that its products would be used in any of their data center build-outs as opposed to rival AMD. And they are now helping Crusoe reportedly court Meta as a tenant. Oracle did agree last July to develop 4.5 gigawatts of data center capacity for OpenAI. That deal reportedly remains on track, but this particular deal fell apart as negotiations stretched on and were complicated by financing, as well as OpenAI's often changing demand forecasting before they fell apart. That's from Bloomberg sources here. They're also saying that relations between Oracle and the developer became...
Okay, in the last hour, Oracle pulling back.
Breaking news situation with Oracle and OpenAI abandoning a component of its data center build-out in this Stargate project. That's according to Bloomberg. I do want to bring Sam back into the conversation, though. Bring in our next guest. Turn our attention to Costco after its latest earnings report. Joining us now.
Got 27 minutes to go. Oracle dropping off here. Micron dropping off as well. Micron looks like it's about to lose the 50-day. Micron looks like it's going to lose this level. Netflix off the high.
who tend to have higher churn rates. What Costco is doing right now is they're really trying to engage that younger demographic, engage with them a little bit more, trying to get more auto renewals is another strategy to so
low tick alert minus 800.
We'll see some more stabilization in that renewal rate. So there is a little bit of a right
All right, so market's pulling back.
Executive members, they only make up about half of Costco's total members, but they make up about 75% of Costco's total revenue. So they obviously spend a lot more in the company. So I think that's another metric that should be more closely watched is that executive penetration. And at least right now, that continues to grow.
And Arun, you went right where I was planning to go as a deeper dive in membership with these executive members. That metric really stuck out to me. They're only about 50% of the paying members, but they contribute about 3/4 of the sales. What does that shift towards that higher tier member mean in terms of long-term profitability here for Costco?
Yeah, I mean, those are their most valuable members, are those executive members. So I'm looking at my spreadsheet right now. That executive penetration, that's about 49.2%. 49.2% of their total member base are executive members. A few years ago, about 3 years ago, it was about 45%. So they've gained about 4 percentage points there. And the goal is to continue to grow that executive penetration. Now, I mean, for the members, they also get good value too because you get that 2% reward if you're an executive member. So there's really a win-win scenario if you are an executive member. And you have to remember, why membership even really matters for Costco. And it's because membership revenue, if you think about it, there's no expenses associated with membership fee income. It flows directly to the bottom line. So in fact, for Costco, about 50% of Costco's total income, operating income.
Extreme low tick alert.
Okay, continue to move lower.
Half of their income actually comes from these membership fees. And that's why their business model works. That's how they're able to give low prices to their members and customers, is because the majority of their income does come from those membership fees.
How are you thinking, Arun, about tariff refunds, the potential for that? Obviously, since they had flagged that last year, and given what we've heard from obviously then the knock-on effect for pretty strong pricing power in this market.
Yeah, so they did talk about that a little bit on the call. So I mean, the first takeaway is that these refunds are going to be held in for potentially years. So we may not even hear about refunds for a while. But
Micron lost the 50-day moving average. Micron pulling back. 60-day, 60-minute 20 EMA drop in. Micron. Got 22 minutes left in this session, Friday, March the 6th. I hope everyone's having a good day. I'm your host, Kazabini, coming to you from theclosingprint.com, giving you the play-by-play. Market's currently fading. We had a bunch of stocks run up to highs like Palantir. We got profit taking coming in at 100% ATR. Makes sense. He's not going to go straight up continuously. Netflix off the high of the day. We sold some into strength about 20 minutes ago. Netflix about 20 minutes ago. I did take some off. Okay, this is 60-minute, 20 EMA. We sold into this strength right here as we approached 100. What's the call wall? I think the call wall is probably 100, right? So the call walls have been holding fairly well today. On Netflix, the call wall is 100. Okay, 100 and 103. So JP Morgan has a 120 price target on Netflix. That said, we ran up into the 100 call wall and we're looking for a rejection. Now we're starting to bounce back up. That's good to see. Good to see. I did reduce my exposure. Okay, sold some calls that I had. Sold half, actually. Netflix looks good. Nice bounce. I'm still participating just on a lower amount.
track options flow daily, identifying who's buying, who's selling, and how it's going to impact the market. Watch live on Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time learning.
Whoa, Netflix right back up to the highs. I hope it keeps going. I mean, I do still have 5 calls left, so yeah. Looks good. Netflix looking good. Oh, we're making a new high on Netflix. Microsoft turning back up. IGV, a good place to put some money. IGV. IGV with a bounce off the highs of the session. Oracle being affected by a deal with ChatGPT that they're going to close or something. They're not going to continue with a Texas data center or whatever. All right, Netflix breaking out. Looking good, Netflix.
Is not over yet by a long shot, is all I'll say about that.
Yeah, certainly. But as we look at USO and its technical setup, I mentioned we saw some 6-year highs today. Obviously, you can see that almost vertical move to the upside here. Take us through what we're looking at.
Yeah, oil too, especially, is one of those things you can't really substitute it with anything else. If you need oil, you need oil. So again, the highs can be much more extreme and much more difficult to make sense of than the low points here. To try to carve out some important price levels, though, our highs today 109.98. The low of today was 104.53. The previous session's high there 98.83, and the gap up there 91.59. If you were to backtrack all the way down here, 81 was a notable high. That was around where we had our consolidated phase before we had our big breakout to the upside here. So these would be some potential guidelines you could use. Even when we do have these very extreme shocks to the upside, there's still pullbacks. There's still times where it'll start to go down. They can be vicious and fast and swift. So keep maybe those price levels in mind.
All right, I took a call spread on SCO. Crude oil spiking. I think it's going to get worked out before the next few days, in the next week or so. BKNG, Booking.com, that's one that Russell loves to trade. Nice. Nice, Russell.
During these moves signifies high conviction. So
that's always worth noting when you start seeing one volume spike. We've got volume spikes every day for 7 sessions in a row here that are very, very high beyond the threshold for what we consider notable activity.
So some high conviction there, but as far as the options action that we're seeing here, is there anything notable to you? Is the sizzle elevated? Are we seeing an uptick here?
Yeah, annoyingly, my chart didn't go up to 6 and 7 standard deviations here. So these would be about where you would find those levels, 106.71, 111.85. So 6 and 7 standard deviations from our linear regression line. So these are very uncommon to see these types of numbers here. Hence why I didn't include them in the study in the first place. But so these are levels that you could consider for looking for a potential pullback as well. If we do start to get too close to 112, that's kind of where this indicator comes in. One of the few ways you can try to predict price activity. Nevertheless, March 20th expiration, 14 days out, still looking for almost a 20% move here. So volatility not over by a long shot. The sizzle, as we said, though, came in at 3.12, so 3 times the 5-day moving average of options volume. Very large trades came in right before this segment. I didn't have time to dive into them because they came in at 2:20, so very shortly ago. But 20,000 lots of April 17th, 120 and 135 calls.
All right, very choppy market.
Trades here, so that netted out to about a $7 million debit almost for a long call vertical. The other ones, let's see, $38 million, $39 million debit paid. Not sure if those are opening or closing trades, though.
Yeah, a lot of people trying to profit on these moves we're seeing in oil, but thanks to Rick Ducat for breaking down USO for us, the U.S. oil fund, and some of the options action that we're seeing there. Rick, have a great weekend. You can go start it now. I'll send it back over to Sam in New York to see what she and George will be talking about today for Overlooked Stocks.
We've got our eye on Samsara today, Marley, as it rallies heading into the close. So George Sillis will break down the news about it and what you need to know coming up next for Market on Close.
All right, climbing out of the hole, S&P still off 86 handles on the day. Risk off going into Monday over the weekend, risk off. Make sure you got some hedges on. I currently have the 6,600, 6,500, 6,400 puts fly. That's up about 30%, 33%. New York FANG still looks okay. Overall, market's not too bad. Could be a lot worse.
I'm Jenny Horn. We go beyond the headlines, tracking the trends, sector moves, and fundamentals shaping the market.
Okay, the fact we're staying down here, there's another pivot over here on the left, 6720, but just feels like we're going to drop down to 200. So I got the 6,600, 500, 400 put flies.
Same goes for where you invest. Level up and invest smarter with Schwab.
Intern, this place is incredible. It's where I get all your office supplies. Your golf balls, your fancy coffee, your giant TV. It's everything in one place. It's like Schwab. Everything investors need. All in one place. Yeah, at Schwab they can do everything. Invest, trade, get full service wealth management, and anything in between. I think I'm gonna be sick. We have to buy that now.
Invest your way with Schwab.
Stay connected to the markets with Schwab Network.
Tune in 24 hours a day, 7 days a week on SchwabNetwork.com.
And on all your favorite streaming services. Schwab Network. Available anytime, anywhere, on any device for free.
Welcome back to Market on Close. I'm Sam Barnes, live from the floor of the New York Stock Exchange. It's time now for Overlooked Stocks. Shares of Samsara are rallying today after the company reported a profit in Q4 and gave upbeat guidance. So I'm joined by George Sillis, a senior markets correspondent, to help unpack this one. I was talking about this one with Jenny Horn a little earlier, and it seems like it was a really good guidance story and really a good story for softwares overall, given, of course, the carnage and the AI panic we've seen. Just talk us through the report and exactly why it's rallying so hard today, George.
Well, yeah, there's a few things going on. I mean, first off, Samsara is such an application software company, so it had been sold off quite a bit in the
Low tick alert minus 800.
And so the timing of the earnings report, especially today when there's a market that's down a lot, traders will latch onto any good news, and there was actually really good news from the company overall today in the report. I'll explain in a sec. But this is a company that basically integrates, just like the symbol states, Internet of Things devices, anything with analytics and workflow and telematics, essentially providing technical equipment visibility, site visibility.
All right.
For all types of real-time operations, whether
All things considered, not a bad day. Netflix, Palantir, and a few others offsetting some of the downside that we've seen today. Not all working. Not everything is working. Micron lower. I do have puts on Micron. Oracle, I'm looking for upside. Got some IGV, longer term stuff as well. The fact that we're closing down here could see the 200-day becoming more and more possible the longer we stay down below 6,800. That said, I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Friday, March the 6th. We got 8 minutes to go, 8 minutes, 30 seconds to go. Okay, we got under 7 minutes to go now. Under 5 minutes to go now.
Yeah, makes sense. And I saw that the IDG, somebody mentioned today, is up 8% since that Citrini report came out. So, I mean, I think that's notable in a market like this. George, really appreciate it. Thanks so much for breaking down Sansara for us today and the reaction we're seeing in the stock. George still is there. Marley, I'll send things back over to you in Chicago.
Thanks so much to Sam and George for that one. We are nearing the end of the market session and the end of the week. We'll be bringing in Kevin Green to break down the levels he's watching on the S&P 500 as well as today's action. That's next on Market Optimum.
Real-time access, data-driven analysis from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live. Subscribe free at schwabnetwork.com.
Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst call. Get your watch list ready. 8 a.m. Eastern. Morning Movers only on Schwab Network. Stay connected to what moves markets.
All right, back up a little bit higher. 67.43 futures. Not much to do here. Apple's starting to turn up. Apple's starting to go. Apple steering higher off the low. Hammer on Apple. Maybe next week we'll get a nice little bounce back towards the 50-day. I'm not willing to take that shot over the weekend.
Speaking to George Sillis earlier today on my show, and he was looking at that 6770 marker on the S&P 500. We haven't managed to hold that. We are off the session lows, though, suffice to say, but dealing with just like drinking from a fire hose with some of these headlines that have been hitting the tape. Just talk us through the levels that you're watching and which are important heading into this weekend.
Yeah, the news headlines continue to kind of rattle this market here. So if you're looking at the levels, they're really hard to contain at the moment here. You're looking at what we highlighted earlier this morning, 760-ish area. We obviously have been able to fill that on that Oracle OpenAI news here. But overall, you actually did see for the majority of the day a little bit of a rotation back into the defensive sector. Not only just defense names themselves, but also staples as well as utilities. So we're not seeing this kind of sell everything type of event. At least for now, we'll see what happens on Monday. What I'm focusing on going into the close is being able to hold the 725 level to the downside here. If we're able to do that, I think we'll be able to hold up to at least
Apple turning back up. S&P.
move at least on Monday. And I think right now we're getting very close to the key area of support, or the next key area of support for the S&P. Only about a 1.5% away from the 200-day moving average. I think a lot of traders and investors kind of eyeballing that. That could actually bring some buyers to step in here. It really kind of depends on what's going to happen with the AI news. Obviously, we're focusing on geopolitical risk, but if we do see a lot of these deals when it comes to data centers start to break down, that could also be a headwind for some of these names that have been able to move aggressively higher because of it, in particular the memory names.
Yeah, we've certainly seen that. We have this Oracle AI story we broke earlier in the show here. But KG, if you look at the chart on Oracle, I sort of watched the flip from the top of the show when I was talking to Jenny about it to that breaking news. We flipped about 2% to the up, 2% to the down, starting to level off here now. What kind of setup does that create for the broader space as we move into the trading?
Well, we will have Oracle earnings next week, but I think this is actually really decent for them because if you're looking at it from a technical standpoint, the 3-year weekly chart, the stock is trading down to the 3-year.
And that's a wrap. Okay, folks, that's the closing bell. I'm your host, Cousin Vinny, coming to you from theclosingprint.com at the closing bell for Friday, March the 6th. I hope you had a good day. I'll send out the watch list and everything on Sunday, obviously. weekend video, usually around 2 o'clock, 2:30 on Sunday. So look forward to that. If you didn't have a very good day today or this week was a little torturous, we are looking for a bounce next week. Risk off, though. That said, risk off below 6,800. So we need to see price action hold here and follow through next week. Looking for IGV, Palantir, Oracle, and Microsoft. Looking for those to move higher next week as well. Have a great weekend, everyone. Take care. We'll see you on Sunday.